Dava India is India's
Good morning, ladies and gentlemen. The Singularity Summit 2025 Day 2 will begin shortly. We request you to please start taking your seats and get ready for a fantastic day. Before we kickstart the day, a few important announcements. We request you to turn on silent mode on your phone, and we would appreciate no video captures, no video recordings of the sessions during the day. We also encourage you to use the opportunity to visit the amazing companies from Singularity portfolio, showcasing their products in the Growth Hub area. Outside the Regal Room on B1, that is this level, we have QSEV and Zota. And on B2, the Lotus Room, that is the level below, you can meet with HEG, Loham, WebEngage, and Akshaya Kalpa. Thank you.
See, Singularity started in 2016. Madhu sir, who is our chairman, sponsor, gave us the opportunity that can we do growth investing in a structured and an institutional manner.
The key in investing is recognizing that this is a long-term game. We are trying to create an institution for the next 20-30 years. And my 35 years of experience, I have seen all kinds of ups and downs. And obviously we have lost a lot of money and we made a lot of money. So that experience actually comes pretty handy.
We set out on a difficult path where we said we will approach these large investors directly, understood the gaps that they feel in their investment portfolios, and how can we bridge those gaps.
For LP's elevator pitches, operator investor led growth equity alternates platform, 2 execution strategies, private growth and pipes. For founders, as the word Singularity means, we are a continuous pool of capital.
It kind of combines the way an investor thinks in terms of how we looked at some of the profitability metrics, as well as how a operator thinks, right? Because they go into the details to understand how to get growth, how to get execution.
Also, we've had the tug of the investor brain and the tug of the operator brain, which is necessary for anything to sort of give you, to fructify into something.
Catching a large theme which has tremendous tailwind, buying it at the right price and backing the right entrepreneur and the right team. And then having the resources internally to ensure that we can track it.
We believe 2 aspects are super important to build a world-class investment firm. First is that the investment firm has to be research-oriented and not reactive deal-oriented. The second is it's super important to have a high-quality, intellectually honest team, very high-quality diligence and research process, and then most importantly, having an intellectually honest investment decision-making framework and process.
Having the benefit of one side our mentor, Mr. Madhu Kela, and on the other side having operators in the team like Mithun, Avnish, helps a lot in evaluating the business from a very, very different perspective. We've created this Singularity Plus.
Good morning and welcome to the Singularity Summit 2025 Day 2. Before we kickstart, may we please request you to turn on silent mode on your phones. We also would appreciate no video capture, no recordings during the sessions in the day. We encourage you to use the opportunity to visit the amazing companies from the Singularity portfolio showcasing their products in the Growth Hub area. Outside the Regal Room on B1, that is this level, we have QSEV and Zota. And on B2, the Lotus Room, the level below, you can meet with HEG, Loham, WebEngage, and Akshaya Kalpa. Thank you. We will begin shortly. Welcome back to Day 2 of the Singularity Summit 2025. The first day of the conference was filled with insightful yet candid conversations with our keynote speakers, as well as intellectually stimulating panel discussions. Let's continue the journey on Day 2 as we seek clarity and purpose. Our first session today is the investing landscape in India. India is the shining spot in the world in these fast-changing times. And this session brings together 4 leading investors managing different types of capital pools to share philosophies and principles in the investing journey. You can expect valuable insights on capital allocation, risk-taking, and long-term wealth creation. For this session, we invite on stage our first panelist, Mr. Gaurav Dalmia. Mr. Gaurav Dalmia, founder and chairman of the Dalmia Group Holdings, managing $2 billion plus assets. He is a seasoned investor across private equity, real estate, and public markets. He champions long-term value-oriented investing with a contrarian edge. Next, we invite Mr. Sunil Singhania, founder of Abacus AMC, which manages an AUM of 36,000 crores plus in listed equities. He was previously CIO of Reliance Mutual Fund, a seasoned and top-rated fund manager offering a wealth of experience in public equities. The next panelist is Mr. Sanjay Kukreja, who serves as partner and CIO at Chris Capital, one of India's leading private equity firms, managing $5 billion in assets. Mr. Kukreja serves on the boards of several prominent companies, such as Intas Pharmaceuticals and Hero FinCorp. Also joining us as a panelist is Mr. Lakshmi Narayanan KR, who serves as Chief Endowment Officer at Premji Foundation, who manages a $30 billion corpus with a deep philanthropic engagement. Prior to his current role, he has been associated with Wipro for 17 years across multiple roles such as Chief Strategy Officer and CFO of the IT business. He brings a unique perspective on institutional investing and impact-led capital deployment. Moderating this session is Mr. Madhu Kela, veteran investor and chairman of Singularity, known for his deep insights into India's capital markets. We also invite on stage to co-moderate Mr. Mohandas Pai.
Good morning and warm welcome to all of you. I think we had a very good day yesterday, some very insightful session. Today is also filled with a lot of very good speakers and a lot of knowledge. I hope we all make the most out of today as well. So, Mohan, I don't think anyone has got a better perspective than you about what is happening in India, the macro story, and the investing landscape. And you became from operator to an investor. So why don't we start with you?
about your opening remark from you as to what is happening in India, and then we can go to the panel.
Thank you, Madhu. I'll just lay out the macro landscape. I think it's interesting for us to know. We have $4 trillion in GDP today. Services make up, I think, about nearly 60% of GDP. Agriculture is about 15%, and the balance is what you call the industry. And services have grown the fastest. About 45% of the workforce of 560 million people are in agriculture. It went up from 42% before COVID. But interestingly, 63% of the 45% are women. Men have come down to 37%. That means men are moving away from agriculture, women are coming into agriculture, and women are participating in the milk economy, in the self-help group economy, and self-employment. And there's a very massive shift in the workforce composition. And the number of people in services remains, I think, at about 30%, and manufacturing is about 25%. That's the balance. Interestingly, the ratio of people who have income from agriculture, if you take as one, it is industry is 2.5 and services is 4. 1:2.5 is to 4. And we have to move people from agriculture into industry and services to improve the per capita income of this country. The per capita income of this country is about 235,000 in 2025 March, 235,000 rupees. And if you look at the composition of 1.4 billion people, 140 crore people, 1 billion people live on $1,000 a year. That's about 85,000 rupees, 1 billion people. They are a market which is going to come up. And if you look at data in Bihar with 13 crore population, it's got a per capita income about 70,000. UP with UP the population of 23 crores, 230 million, it's got about 1,05,000. Bengal is about 1,45,000. So this 1 billion people are not the big consuming class. 400 million people live today on something like about $7,000 a year. That's 2.8 trillion plus 1 trillion, 3.8 trillion, 4 trillion, right? Out of this 400 million, the top 100 million is $10,000 a year, growing at about 10%, 8% to 10% a year. And the balance is about maybe $6,000 or so. I mean, you've got to add up the mass. And this is the interesting composition. But in PPP, the multiple is about 4. Because the PPP GDP is $17 trillion. We're the third largest economy in PPP. PPP is the value of a basket of goods and services across countries because the currency is undervalued. And that means if you take 4, this $10,000 is equal to $40,000 is equal to the per capita income of the UK. Now, we need to understand where the composition of all these people is and focus on the 400 million market. And every year, maybe 50, 60 million come up into the 400 million from the 1 billion. And they're the ones who buy the cars. And we buy about 4.2 million cars, 5.2 million two-wheelers. And in industry, in most industries, we are either the second or the third largest. 160 million tons of steel, second largest in the world. China 1.1. 450 million tons of cement. China 2.2. 21 million two-wheelers. We are the largest. For 5.2 million vehicles, we are the third largest. China, US, India. And if you look at even other areas like construction, 1.6 billion square feet built every year, second largest after China. If you look at food, 335 million tons, second largest after China. Milk, 250 million. In all agriculture, we are very, very large. The currency is undervalued, and we have achieved a lot. So let's be very clear, let's be very proud. And I'll give another piece of data. This year, March 2025, till 16th of March, corporate tax collections gross were 12.4 lakh crores. Possibly by March end will go 12.5 lakh crores. If you assume 25% effective tax rate, actually it's 21%, I think. If you gross it up, it's 50 lakh crores pre-tax income of all corporates in the country this year. On a GDP of 331 lakh crores, that is 15%. 15% of GDP is pre-tax profit. We got the most profitable corporate sector, listed, unlisted, in the world. And if we take this 50 lakh crores and take away 12.5 lakh crores, 37.5 lakh crores, 7 lakh crores possibly for dividend, 30 lakh crores is the investable surplus. We invest $1 trillion a year. $1 trillion. Because our investment rate is about 31% of GDP, savings is 29% of GDP. We get $75 billion of FDI. This year, FDI could be negative because people are taking money out. So this is a very, very large economy, and we got to understand that. And we have grown from $275 billion GDP in 1991 to 3.9 trillion in 2025, 8.11% in dollar terms for 34 years. All of you need to be congratulated. 34 years, 8.11%. GDP has grown from 5,32,000 crores to 331 lakh crores from March 91 to March 2025, 12.1% a year in rupee terms. This is incredible. I don't see this negative thing. Now, what about the future? 2 minutes, then I will hand over to you. I don't want to take your time. You see, I personally believe by 2032, 2035, we could be a $10 trillion economy. And why is that? We've grown at 8.11% in GDP terms, in dollar terms, 12.1%. We can grow at 7% in real terms, 4% inflation, 11% in nominal terms. We could grow that. So in rupee terms, you can easily reach that. And I think in the next maybe 10 years, we'll add $5 to $6 trillion to a GDP. What we added in 75, 78 years since we got our constitution, 75 years, we're going to add in the next 10 years. The key is, do we have capacity for that? Do you have enough money to invest? We save 29% of GDP. I think financial savings are about 15% of GDP. And the interesting thing is happening in financial savings. Madhu, you'll be happy. Last month, we had 18 billion transactions for UPI, $309 billion. This year, we'll have about $4.5 trillion of transaction UPI. Currency in circulation has come down from 14.5% to 11.2% in 3 years. That means the leakage of money as currency has come down. More money is going to financial assets in this country. So we will grow in the next 10 years. And to grow in the next 10 years, we require investment. We will invest in the next 10 years, maybe $15 to $18 trillion, and maybe just about 4 to 5% from overseas. And today, our currency has been depreciating. It was 33 rupees in 1994 when I joined Infosys after we opened up. Now it's about 85 rupees. It's gone down 3 to 3.5%. Just last 2 months, our surplus on services was $20 billion. That'll be $240 billion. Our deficit in goods is $270 billion. That means the next 3 years, because services surplus is growing at 11%, it could come down to 8 to 9%. But services surplus will be more than trade deficit, so it will balance. That means export of goods, export of services, the net will be little bit of services. So we'll not be exposed to vagaries of currency movements because we need overseas capital. Any overseas capital coming will be invested in this country. And I think that's a very interesting phenomena because we've not seen this kind of phenomena in the overall exchange. We import about $200 billion of oil, export maybe 60, 70, $120 billion, and this is at about $80. And now it comes down to 65, 70, that will save $10, $15 billion, that will add to the foreign exchange. And on top of this, we're the third largest digital power in the world. Of the top 10 most profitable companies in the world, 9 are digital companies, and we need to invest there. And we are in the midst of the digital revolution, and India is the third largest power. So India and the US will lead the AI revolution, the digital revolution, and we have to make that happen. So I am more excited than ever. I've been in IT, I've been excited since 94, working at Infosys and watching India grow. And I'm more excited when I'm working harder than ever because next 5, 6 years, things are going to really be very good. But the key is all the people in this room should make it happen.
Mohan, before I come to investment question, can I ask you one lighter question?
Yeah.
Did you ask your mother when you were born, what was she eating? How can you have this kind of encyclopedia memory?
You know, Madhu, I get so upset when people beat my country down and abuse us. I worked in IT. The left called us cyber coolies, saying you're doing shitty jobs, you're cheap labor. We do some of the most sophisticated work in software. American industry runs because of us. The financial services, entire training engine runs because of us. The train system runs because of us. So I'm a proud Indian. And
Yeah,
only
absolutely.
Data can only show people what we have done. And India has done very well. And our young people should be inspired. They must have the passion. That's why yesterday, Adani, Sagar Adani, I was very impressed with the young man when he spoke so well with authority and with this. So we must give our young people the hope and the confidence they're going to do well. We got to empower them and make them world leaders. And Madhu, you must take 20, 30 young leaders, 30 to 40 on a global tour. Go to America, go to London and showcase the world that these people will transform India. We have the entrepreneurial clout We have the young energy to go ahead, and you people are going to back them with capital and dominate the world.
With your blessing, definitely, Mohan. So, first I come to my friend Sunil Singhania. Sunil is, for those of you who don't know, me and Sunil worked in Reliance, and very happy that with the outcome. And Sunil is undisputed one of my closest friend in the business, apart from being an investor. And I have seen Sunil evolve over last 25 years. Sunil, I know that you are a value investor, और आपको हमेशा रुपए का चारा ठन्नी चाहिए. So, how has your investment philosophy evolved over years? And more specifically, what has changed since you launched Abacus?
Thank you, Madhu. And, Madhu has also been a big inspiration, and we have learned a lot, particularly the passion which Madhu brings into everything. And I think that is very, very commendable. So, Madhu, we all know that things have evolved. I think all the numbers Mr. Mohandas Pai has already given. I think he really stands for 3.14, the power of infinite. So, it makes life easy because we don't have to repeat those numbers. But if you actually see, I think the last 20, 25 years, the economy itself has evolved. Corporates have evolved. The way of working has evolved. The whole concept of corporate governance, the concept of having discipline in terms of capital allocation, fear of law. Earlier corporates used to borrow and they used to celebrate because no one had to repay the loan. Now that has changed. So I think a lot has changed. As far as professionals and investors like us are concerned, I think we also keep on learning, making everyday mistakes. I think the only good thing is that we have now learned to not repeat those mistakes. So we are allowed to make new mistakes. And sometimes mistakes are not even mistakes. The external environment leads to mistakes, like what is happening now. No one can even forecast it, why it happened, what is the end result, and so on and so forth. So I think as investors, very simple, what we have learned is we should bother about what is in our hand. Obviously, we have to take into cognizance what is happening in the world. But what is in your hand, you can control. What is happening in the external world, you can't control. So the same thing which we normally do, meet companies, see where the business opportunity is huge, see the passion of the investor, see whether the balance sheet is, one, clean, and second, is capable enough to make use or to benefit out of all the huge opportunities which Mr. Pai also mentioned, that if the country is going to grow from 4 to 10 to 20, which are the industries, which are the companies which will be in a position to capitalize on it. And the good thing about this country is that there are so many entrepreneurs. कभी-कभी लोग बोलते हैं अरे अभी entrepreneurs लोग थक गए हैं, they are satisfied, बोले और नहीं करना है. But then there are hundreds more who will come that हमको करना है. So I think this country has so much opportunities. Stocks is what we also love. I think you are a master in that. And as long as we have these passionate investors, I think the world is an ocean. And India, definitely with such hardworking people and the whole, we have all talked about demographics, democracy, domestic demand, now digitization. I think we have lot, seas to cover. So very excited.
Gaurav, coming to you, it's very rare to get you in a public platform. So thank you so much for coming and gracing this occasion. Deeply means a lot to all of us here. You manage the family office, and you have done really, really well. What has been some of the pillars of your investment thought process, and what you have practiced which has worked, and more specifically, how you have evolved in what has not worked for you till now? Well, if you can take a little mic.
Madhu, thank you. We believe, because of our experience in business, that the single factor that helps an investor make money is earnings growth. Sunil might tell you...
Can you take mic?
Yeah. Sunil might tell you that there are two factors that help investors make money. One is earnings growth, and second is PE, which is the classical view. I would reduce this to 1. In our experience, I would reduce this to 1. Because if you have good earnings growth, you also have higher PE. So really, our focus is on businesses that can grow wealth quickly. For right or wrong reasons, we've discovered 3 areas where we invest. Okay? There are other areas, but they're outside our circle of competence, so to speak. So we tend to focus on 3 areas. The first area we focus is on consumer, FMCG type businesses. Of late, they've not done well. So we should not take a last 3-year view. But if you take a 20-year view, I think there is a huge amount of wealth creation possibility looking back and looking forward. And our logic for that is very simple. Assume you're making 100 rupees in salary. 80 rupees of this salary is roti, kapda or makan. 20 rupees is disposable. And let's assume you get a 10% increment, which is very normal in India. You take out inflation, so your real wage growth is 5 rupees. Now your 20 rupees disposable income went to 25 rupees. So you have millions of people crossing the threshold where their nominal wage growth may be 10%, but their disposable income growth in real terms may be 20%. And therefore, boring industries in the West, automotive or insurance or whatever you talk about, are growth businesses in India. So that's one bet, sectoral, we have made on consumer and we've done well. Second bet we like is financials. Penetration of finance, of capital availability via banks or NBFCs or whatever it is, to especially small businesses, consumer and all, has been limited. It's been increasing off late. Again, there have been bubble characteristics being built up in consumer finance and all that. So you ignore the snapshot, but look at the full movie. I think that trend has been a great wealth creator, and we've ridden that trend through private and in public. The third trend, and these are both domestically focused, the third trend that we've bet on is IT services. So for example, we invested in an IT services company, which was the lowest end of the IT, more a body shop, and till today remains a body shop. Total capital invested in that business in 1991 was $1 million. Dividend paid out by that company thus far is close to $200 million. Wow. On $1 million total investment. Current revenues are slightly under $2 billion. And total capital that business consumed was $1 million in 1991. Guy from Ranchi shows up in New York, works at Bell Labs, goes to NYU Business School, wants to be an entrepreneur. That's whole story. So IT services for us has been a good play. Now, we tend to define timelines differently than some of the others. For us, short term is 1 year, medium term is 5 years, and long term is 10 years. Very often, if you talk to people, they will say 5 years is long term. For us, 5 years is medium term because any cycle takes that long and so on. So those have been some of our features. The single thing we focus on when we look at an investment, or I'll give you the order, is the team. Is the single biggest determining factor, especially at early stages, but even at later stages. Market structure. How established is the market structure? How able are you to become a niche leader in that business? You have to make some bet in the beginning. And Warren Buffett says, you know, when the reputation of an industry conflicts with the reputation of a manager, the reputation of the industry wins. Because there are certain industries where there is more, it's easier to make money.
Absolutely.
Then we look at financials and metrics and moats and operating margins and so on. But I think we look at it in pretty much that order. So that's
I come back to you again. Sanjay bhai, you have pivoted. I was just reading about your success. It's been a phenomenal success in the fund management industry. And more importantly, the respect you command with investee companies. And you have pivoted, if I'm not correct, from being a value investor who was looking for cheap companies before 2012 to investing in businesses by paying fair prices. I think this is the biggest challenge for investors. I will be honest with you, I have not been able to pivot. I am trying, but you know, वो सस्ता कंपनी लेने का जो आदत है, वो अभी तक जाता नहीं है. So, How did you make that change? And what was the fundamental reason for you to make the change? And the second question, if you can answer, obviously when you're buying, really great companies or great businesses, you're paying full dollar of valuation, right? So how do you decide कि कहाँ पे रुकना चाहिए, कि इससे ज़्यादा नहीं देना है?
No, it's a great question, and first of all, thank you for having me here and a great panel and amazing quality of speakers.
It's very difficult to get people like you to speak up in public, but deeply appreciate you coming here and accepting our invitation.
No, thank you, and a great question. Okay, I think for us, and just for the benefit of the audience, I guess. We made over 100 investments in the country, right? It's very slow over 25 years. So we only make 3 or 4 investments a year. It's very selective. We've sold 80 of those. We exited 80 of them. And over 25 years, maybe delivered a 30% plus dollar, return. And it's been over $8 billion that we've returned back to investors globally. So very proud, I'm very proud of the track record we've been able to create, and it's allowed for
unbelievable and very silently.
No, thank you for that. And in that, we were also looking at something, what we call as loss ratio, right? As to how many companies actually you didn't make money in, right? Because you take risk, you'll always get something right, you'll get something wrong. Sometimes you will make mistakes. We've actually had about 7 situations where we've actually not been able to return capital back, right? Roughly less than 5% of the capital at play. So I think the key has been for us is to limit that loss ratio. Many other firms will probably run at 25, 30% of capital or maybe even higher, which they've actually ended up being underperforming significantly. And, I think Gaurav covered some of the principles, I kind of agree with that quite deeply. Right, return on capital employed. I think even Mohan kind of referred to the fact that India is the most profitable. I mean, outside of the US does a 17% ROE. India does 16% ROE. We have about 1,700 listed companies, in India, which above a certain size, which are investable. And you add the private companies. There's a universe of about 2,500 to 3,000 companies that are investable from our perspective, right? I will still say we will find 200 or 250 companies that will make double the cost of capital. You will not find more than 20, 25 in most other economies in the world.
That's right.
So we have a bigger universe. We're fortunate. We swim in that ocean. I think that the issues where people have lost a lot of money is where there's some outside that ocean. Infrastructure. See, we follow two basic principles. Follow talent, right? Follow talent.
Yeah.
Where is the talent in India? And follow good return on capital, right?
Sure.
So if you swim in there, you're generally going to be okay. Right? The first one to go was obvious, Infi and IT services. That's where the talent was, right? People had come back from the US, etc., trained here, local entrepreneurs. The quality of people that we were getting and we were at one point investors in Infosys as well and HCL Tech and all of that. So we've seen that journey and it was phenomenal, right? We also next went into financial services. That's where, people like, HDFC and all came from Citibank, etc. There were a lot, and then people from IIMs and all of that were you created a whole network of people. Good entrepreneurial talent came into there, right? Third one was obviously consumer again. Levers, Nestle, all of them will be creating phenomenal talent. And good quality governance structure. So we stuck to those sectors. When we went into infrastructure, when we went into real estate, that's when we started. And that's where our tryst with buying cheap came in. We made decent money in 2003 to 2007 cycle.
Yes.
But interestingly, our worst vintage is 2009 and 10, post the global financial crisis, not before. We lost the most money there because what we did was we tried to go cheap. When markets had fallen 50% from 2008, right?
Yes.
And you are a good, efficient capital allocator, you're saying, okay, where do I invest now, right? Infosys hadn't fallen by 50%. You had, Hero Honda had fallen by 15%, right? The best sort of highest return capital business hadn't fallen. And so you were sitting and saying, what do we do, right? And you get excited and you say, okay, the market has fallen by 50%. There's some sectors that have even fallen by 70%. That's where we got it wrong, right? The 7 situations, almost all of them, 6 out of those 7 actually happened in that 2008, 9, 10 period, right? I lived through that to have backed the likes of Gammon and Nagarjuna Construction and, some of the listed companies even, right? Where we were thinking we were buying low margin at low price and very low multiple, right? Quarter two, it felt like these will be 10x's. And all that happened was, in the next 5 years, just debt build up in these companies because government was not releasing payments, right? So return on capital. See, you can be contrarian. You can be contrarian where it worked for us was in IT services. HCL Tech worked for us in contrarian because so what? If the business growth was, you got the call on business growth wrong, you still had very strong cash accretion in the business. And so you could last at some point it reverses itself. In bad businesses, you don't get to live past that. You die in 3 or 4 years. And that's what happened with the likes of Spanco, with the likes of Nagarjuna, those several mistakes that we ended up making in that period. That's when we pivoted. That's when we said, listen, we won't just go in that ocean. I understand I might have to pay 15 times or 20 times or even higher to go into companies in pharma and Mankind Pharma and Intas Pharma, so that's those types of companies that got created. $20 million we put it into Mankind Pharma as the only external capital, this is 2006 now. I'm not going back to 91. We started investing 99 onwards. But we did this deal with Mankind Pharma in 2006. We put $20 million for 20% of the company. It's 100 million val. That was the only external capital the company's ever raised. Frankly, didn't end up using most of it. Stayed in the bank. They did very little with it. It's over $10 billion market cap today, right? It's just phenomenal growth that sort of caught. And Mankind is not even the largest company. Intas would even be larger today, right? So I would say that's my key.
I get the point. I am very tempted to ask you one question before I go to Lan, because Lan is the one who gives money to everyone. So he's an important person. So I'm just tempted to ask you one thing, how do you avoid the temptation? Like if you'll see post-COVID, the maximum amount of money being made, at least in listed market, in these kind of businesses like infrastructure. And I think I took a large bet and it has worked out very well for us. And like commodities. So how do you avoid the temptation of not getting into these businesses even on a tactical basis?
Look, I think investing boils down to there's no one way of making money.
Absolutely.
There are many different, but you have to be damn good at what you do.
Sure.
Right? We just figured that, this is not for us, right? And there are other ways to do it, right? But for us, this is not. So the temptation here is you have to live through those periods, painful periods of loss.
Which is a very tough thing,
which
right?
will never go out of your memory, right? And then you stay there and you say, listen, this is what I see. I tell investors that we are looking to make 3 to 4 times your money, 3 times your money, right, over a 5-year period, at the least risky way. If I make up 5 times or 6 times, I'm doing something wrong. Because I'm then deviating from because if I try to make 5, 6 times, I'll also make 1 time, 1.5 times when in bad cycles. So we have to fix and, focus on, obsess over picking the right types of businesses which will have very low loss ratios. I'll give you an example. We are investors in Lenskart, right? We said no to Lenskart.
Investors in it?
Lenskart, which will go public now, right? We've said no to Lenskart 3 times, right? Each time when they were much lower valuation than we could have come in, right? But each time it wasn't a profitable business, right? Like today when I see, for example, what's happening in quick commerce, right? Somebody's going to make money, I just don't know who, right?
Sure.
So my view is that let's wait to the other end. 3 years later, we'll know who's going to make money. And then in the journey from $4 to $10 trillion, there's a lot of growth capital they're going to need.
Sure.
Our job is to provide that growth capital and provide decent
So you don't
growth.
mind being late, you don't mind buying a little more expensive, but you want to buy in certainty.
We want to buy certainty. We want to buy successful businesses and providing them growth capital because India has the potential for these companies to scale for the longest time. Risk nahi chahiye.
I will come back to you after in the second round. Lan, I think Wipro family has actually proven what the true possibilities of building a family business is. And you have done it so silently and in such a phenomenal manner without actually committing any big mistakes or disasters, right? And you have been at the helm of it. And you have seen it all and you have done it all. And there are lots of my friends and families who are sitting, who are trying to set up, family businesses. So if there are people who are looking to build family offices from a 10, 20-year perspective, what can you share out of your experience as to what has worked and what should be avoided?
Yeah, that's a heavy one. And thanks for the invite.
I
and
can
more,
take the liberty of asking heavy questions. Right?
no, thanks for the invite, and more importantly, for all the kind words you've talked about us. I'll just say three things which I think might be something that we have learned. First is to have clarity on why you're doing a family office. Because today there are enough asset managers who can manage your assets. And I'll give you a concrete example. For example, if the objective of creating a family office is to do an intergenerational transfer of wealth in an inflation-adjusted manner, you will have a particular strategy. Contrast it with something like we have done, where the entire corpus is meant for a philanthropic purpose, and the foundation needs cash literally on a daily basis. Then you have a strategy that is significantly different. For example, for us, cash flow is very important. In an intergenerational, illiquidity is something you may take for much longer. As one example, there are more. So having that objective very clear is important. Second, you will also have to decide that what is the cost at which it's break even to create your own office which does everything versus leveraging expertise that's available in the market. Globally, there are many endowments, and I think I don't know the size now, but 7-8 years ago, it used to be 1.8 billion. An endowment up to 1.8 billion, it makes no sense to build your own team. It's best to outsource it because the cost of doing it in-house versus doing it entirely externally. One has to make an adjustment about it. Third is, beyond the major objective, second is, are you doing this as strategic? Many families also do it as an adjunct to their family businesses, where they try to bring in innovation that can happen outside the ecosystem. Having that clarity is important. I would say these are three things. If you have clarity on these things, I think people will build a sustainable, relevant, and a good family office.
And also just one follow-up question on that. Obviously you invest in all kinds of asset classes. You invest in venture capital, private equity, public fund managers, private fund managers, directly investing into the market. So on a more strategic basis, is there a tactical shift you guys keep making from one asset class to another asset class, or it is like pre-decided that this much capital will go into this particular asset class and that is kind of fixed?
No, we have a range. We have an asset class. So the asset class decision is a function of 3 or 4 parameters. Its availability, its ability to generate return, its cycle, what formats, its correlation with other classes, its ability to generate cash, stuff like that. Decide whether you will be in an asset class or not there. Some asset classes can get easily disrupted, either by technology or by regulation. You might choose not to be in those. So that's kind of stuff chooses it. Once you have a set of available asset class that you want to invest in, broadly you have a range. One of the things that we have learned is that if you're investing for an extremely long term, 10, 20 years, the way you said it, it's never a good idea to be zero and completely exit something, or to be 100% in something. So you need to have a presence. Where you are on that range, on that continuum, is a function of where you are, your view on the cycle and your view on correlation. So if you think that 2 asset classes are correlated, you might tend to keep them in one end of the spectrum. But if you think that something is and sometimes you think longer investors tend, and I would say should tend to be counter-cyclical, because you're looking at the next thing, not what's happening right now. So if you think that it's a very, very bad time for equity, like Warren Buffett said, right? When everyone's afraid, you must be exuberant, and when you're exuberant, you must be afraid, equivalent. So you've got to be counter-cyclical on that. So where you are on that continuum. So to your question, Madhu, you will have a range, and within that range, where you are is a function of where you are on the cycle and where you are on the correlation.
Mohan, you want to ask a question to any of the panelists?
No, I want to ask Lan because, he's very transparent. He's in the public markets. He's in private equity. He manages 30 billion. or whatever it is. What is your asset allocation? The 30 billion, where is it allocated?
No, 30 billion.
No, including Wipro stock.
Including Wipro. So if I say it's roughly about half of it is let's say Wipro.
Half of it is Wipro. 15 billion is Wipro. Balance 15 billion?
Balance 15 billion, I would say that roughly it's about 55-ish to 60% in...
fixed income?
No, in equities.
55% in equity?
Equities. We would have maybe roughly about 30-odd%.
Directly or through managers?
Roughly about 60% of that would be direct.
Direct.
And the balance would be through
large
managers.
positions?
Historically. So both, that includes both public and private, by the way.
Okay.
So this is both public and equity includes both public and private. And again, the rough split is 60-40 between, it's more in favor of private. Again, long-term nature, capture illiquidity premium, fight it for inflation. Those are rational for putting it in equity and in more in private. But we have a large position both through managers and through direct anything. And roughly about 30-35% would be in fixed income and its equivalents, including MES, including infra, I'm using real estate as, let me say non-equities. And they have different assets and different cycles in that. And there the focus is on generating regular cash flows, fund foundation on its cash flows needs, etc. And the balance, 5-7% would be the treasury cash.
Treasury cash. And what is the IRR you earned on that non-Wipro investments?
Over a period of time, I don't have a weighted average number on top of the moment, but it would be high double digits. High teens.
High teens. For the last 10 years?
Over the last 17 years.
For the last 17 years, high teens.
High teens.
And equity investments versus fixed income, what are the IRR that you earn? Is equity much more?
It's a point in time. You have the terminalitis problem, but at this point in time, equity is more. But there has been a position, I would say 6 years ago, they were almost equal. So it's a cycle. But in general, equity has been better performing than
And how much has the AUM grown? I mean, how much does the AUM grow year after year?
The AUM growth has...
Non-Wipro.
Even non-Wipro. Again, I don't have a number on top
just
of
a
mind.
rough number.
Let me just say that it has significantly and consistently beaten inflation after funding foundation.
After funding foundation?
Yes.
How much is the funding of the foundation?
The foundation, roughly, in the last, if I take the average over the last 3-4 years, it would be in the range of about 1,800 crores per annum.
1,800 crores, that's quite
2,000 crores.
And tell me, my last question maybe. I mean, look, he's the biggest in the country. Many of you, hopefully, are going to build this kind of size. And it's interesting to know what he has done. How much has Wipro grown in the last 16 years from the time that the stock was given to you? Less than the other part?
Less than the other part.
Huh?
Yeah.
Less than the other part.
Less than the other.
So holding Wipro has been not as lucrative for you as your investment acumen. That means the business of Wipro has not given you greater returns than your application of mind for the money that you control.
Let me rephrase it. 2. The stock of Wipro has not done that thing. I don't want to comment on the business.
That's okay.
Of Wipro.
That's market. We know that's whatever it is.
And second thing is that we look at Wipro as a strategic asset in the group. So it's not a financial asset that you kind of look at and sort of take a look at it purely on a rational basis.
Thank you so much. You are very candid. You gave all the data. Sunil, just coming to you, among many things you did and I admire a lot, one thing which I admire the most is your ability to read through the balance sheets. And there is a lot of younger people and a lot of sophisticated investors who are sitting here. And I must candidly admit, in 35 years of my career, I have not seen anyone who comes even close to reading balance sheet as Sunil does it. He can just pick up the balance sheet and smell it, what lies inside it. So just enlighten us as to what do you look in a balance sheet, how you are able to foresee. I remember when we are holding tons of Jaiprakash Associate stock in our Reliance Mutual Fund days. One day Sunil came and told me, Madhubhai, pura बेच देते हैं, ये 1 रुपया हो जाएगा. And at that time the price was 150 rupees. So what gives you that extraordinary ability to see through the balance sheet and see through how things can fall apart?
And I think thanks a lot for your kind words. You have interacted more, that's why you are saying that I am the best. There are a lot of young guys, I am very sure, who have more exposure. But see, I think when we started the investment career, fortunately or unfortunately, no one even used to look at balance sheets while investing. So there was that sort of a autobahn where we had, and having an accounting background and a CFA background, I used to always read balance sheets. So I think that habit developed. I always tell my young team also that, when a company comes to present, they come with the presentations. So presentations are made. Balance sheets are derived. You can't make a balance sheet. Balance sheet is an actual outcome of what the company has done, and presentations, you have my...
The intention of selling.
My son can make very glossy presentation because he's a tech guy. But, you can make presentations, you can't make balance sheet. So that is there. The other thing is, ultimately, what has been taught in class 11, that is the most relevant, debit all expenses, credit all income, debit what comes in, credit what goes out, and debit the giver and credit the borrower. And I think assets and liabilities have to match. I think if you have that general understanding, I think you'll not mess up. So you can report profits, but that profit reporting gets converted into cash or gets converted into assets of good kind is fine. Acquisitions where you don't know what is happening, debtors, inventory. I think there are some very, very basic things. And ultimately, when you keep on doing the same stuff regularly, you keep on getting good at it. So, there is this thing of Michael Jordan that to keep on doing well, you have to hit or try to do it 10,000 times, or even Bruce Lee, he said to get one kick right, you have to make 10,000 attempts to it. I think the same thing is there with anything you do. So I think over the time, you keep on doing it. So now you know the history. So the moment you pick up a balance sheet, you know what to see. So maybe for a new guy,
वही तो पूछ रहा हूँ भाई क्या देखना है?
हाँ वही मैं आ रहा था उस पे. So I think that is the thing. So predominantly, I think few things which are number focused. I think cash flows, very important. Though, as you mentioned, I come also from the same background because we work together. We are not averse to investing even in a metal company, for example. Because if everyone says we are not going to do capex, then Mr. Mohandas' dream of $20-30 trillion is not going to happen if we just sell soaps and detergents and paints. Someone has to manufacture also. So as long as the good capex is done, I think cash flows are very important. Payment of taxes. A lot of companies used to show net profit with no payment of taxes. I think that is very important because, no one is going to pay tax out of their own pocket unless you have income. And then there are softer issues, like some softer issues. India is still an emotional country and there are very lovely ladies here. You will not make your wife or daughter a director in a company if you're a cheat. So there are softer issues also. But I think predominantly it is cash flow and discipline of capital employed, ROC, ROE, all the things which go into it. And at some point of time, we used to also look at the ability of the company to generate a profit in the near term based on all these ratios equivalent to the current market cap. I think that is a clear recipe of converting balance sheet into your investment acumen.
आपको जयप्रकाश का कैसे लगा 150 का 1 रुपया हो जाएगा?
So vaguely what I remember is, when we used to do the maths, I think the company was paying an interest of 8,000 crores. Now a lot of time interest is not debited to P&L. So they were paying interest, but capitalized this, that. But 8,000 crores, if you just convert, it is 1 crore an hour. So the gentleman, the promoter was also in our office, whom I'm talking to, and I told him, you have spent 2 hours in our office, 2 crore to gaya aapka. तो उसको भी समझ में नहीं आया. But how can you survive paying 8,000 crores of interest? Because even if you're making 8-9% net profit margin in an infra company, you can't do more than that. You will need 1 lakh crore of work only to pay the interest. And in India, even...
I know the conversation we had.
So I think in different companies, different things work. I can say one thing, that reading balance sheets will ensure you make less mistakes. And that is what Sanjay also mentioned.
I have more questions to ask you, but before that, if I can go to Sanjay bhai. Sanjay bhai, ये जो आपने बोला pivot करना है and buying quality companies, high ROEs, very good businesses, that's a really best position to be in. पर ये सब महंगे बहुत है ना संजय भाई. तो how do you decide at what point of time, what value to play, and when do you decide कि इसके ऊपर मुझे नहीं देना है? Let's say you said Lenskart came to you 3 times and you refused. Why did you decide to invest in the 4th time? What I'm going to ask, what I am telling you, after 35 years, candidly, I am also struggling today. मैं भी अच्छी कंपनियां देखता हूँ, I get convinced, but finally, I'm not able to reconcile in my mind. How do I pay for it?
So, I think this is still, I feel like, a less difficult question than the question, because it's related, I'm bringing it up, is when to exit, right? And some of us have very different time horizons here, because that can help answer the question. If you're investing for 1 year, your value of the multiple that you're paying is very, very important, because it can be very volatile. And thoda zyada rate, if you've paid, let's say, 10% above or 15% above what you think is comfortable, in 1 year, if it corrects 20%, you could be down 50. So it's a big impact. But if you're invested for 5 years or 7 years, right, and you think you have very strong potential to triple, and if your multiple comes down by 10% or 15%, you'll still make 2.5 times your money. It's okay, right? It's not the end of the world, right? If you instead of 3, you ended up at 2 or 2.5. So that's one way to think of it, right? Do you have the space to grow and the team to be able to execute on that, and the business that doesn't falter? So if you can grow that, and then you have to see, okay, to be honest to yourselves, the way I look at it is, I would look at a 10 to 15 year average multiple of that business, whether it's that company or the sector, right? Relatively, if I'm coming in, right, at some multiple to that, let's say a little bit 10-15% up, I should be worried, right? I'm coming at a higher multiple than what is traded. Abhi upar ho sakta hai, right? But at an average level, am I coming somewhat at a discount to that or not? So you look at a relative valuation here, but also globally. I think having a global lens is very useful. I think Gaurav talked about the fact that in India, it's a growth business. I mean, I've covered financials for 20 years, before taking this role. I've done Shriram Transport and all of that. I used to talk to Bajaj Finance, I used to talk to investors globally, and they would all classify financials as cyclical industry. India, it was secular, and it was treated like that. And I'm like, how do you make sense of both these things? Because if you stay in the same sort of, in our own way of looking at it, you can convince yourself that it's all going to be growth. But, 2008 will happen. And then a 10-year cycle will play out. Like now in retail, financial services going through a cycle. So it is cyclical. The fundamental nature of financial services doesn't change. It was just underpenetrated for a period of time. So for instance, if you think about consumer durables, for instance, let me give you another sort of just a way I think about it, right? So today, ACs are underpenetrated, right? So when it's a growth, when Indian families are going to buy ACs for 5, 10, 15 years, they're going to make compound and do very well. But 15 years later, the fundamental nature of ACs is not going to go away. In China, when penetration went from 55% to 50% in households, that's where all the money in ACs and white goods were made. When they went to 50, 60, 70%, the entire industry got destroyed after that because multiples crapped. So there is and similarly, if you look at telecom, all the money in telecom was made when penetration in India was 15, 20% on the phones. When people reached 80, 90% penetration, very hard to make money thereafter. So there are periods of time where you can compound, where it's justifiable. I remember sitting in a room looking at Airtel and VSNL and BSNL. BSNL used to be 8, 9 times, 4, 5 times earnings.
Sure.
And Airtel used to be, abhi to profit abhi aaya to used to be there. How can you justify it? I've sat there and looked at that and asked myself those same questions, right? But the future, right? A good entrepreneur in a large industry with a TAM to look at where BSNL and VSNL, ended up and what happened to Airtel. But the same thing can't be said at VSNL, ASNL, or Airtel at 70% penetration.
I think then no matter how good you are, Jio is going to disrupt you or something is going to disrupt you.
You are willing to pay higher price if you see a big growth in a
big growth
in a
opportunity in a
industry.
good business. Not to tie, just if you tie it up to growth alone, you're not going to make up for it. It has to be sustainable growth, which means your ROC, ROE has to be good. If you find both characteristics, you're willing to take up and you stick up.
Gaurav, you spoke about investing in consumer businesses. Last 5 years has been very difficult for consumer companies to grow and also make money. Hardly any consumer company which I know has made serious amount of money for investors. So in this period of time when your actually industry is not doing so well, how do you, and I know that you spoke about your long term as 10 years, but even in a 10-year time frame, in 5-year time, if the industry or a company doesn't make money, how do you gather strength to continue to remain invested? Or what do you do in a period of time when you know that your investment has not yielded return as you would have expected? And I'm sure when you invested, you would have not had a thesis that you're not going to make money for 5 years, right?
There are good calls and there are bad calls. So the fact that the consumer industry has not grown in that sense for the last 5 years, and the bets we made, let's say 5 years ago, in some ways have been okay to bad calls. They've not been great calls. But if you look at private situations, you may find that niche brands are growing much faster. So it may not mimic what a Hindustan Unilever is doing, right? So there are niche brands that are growing fast in spite of the so-called slowdown. The higher-end brands actually doing better than lower-end brands. So you have to segment the market itself and understand where you are. Okay? So this experience may not be all over the place. Plus, if penetrations are low, as Sanjay pointed out, growth will come up. And you may have a spurt of growth to make up for growth that didn't happen earlier. So, I mean,
but Gaurav bhai, investor के लिए 5 साल पैसा नहीं कमाना इतने बड़े bull market में, it's a tough thing, ना? I am asking psychologically, how do you deal with it? Emotionally, how do you deal with it?
Psychologically, we deal with it by telling ourselves, it'll all be good in the long term. Okay? You're kidding yourself to some extent, but if the company is strong, if it's gaining market share, okay, we would continue to bet on it.
You will stick to it.
Okay.
And what point you decide that no, it is not working out and I need to switch?
When we start looking at the trend as a secular trend as not as a cyclical trend.
तो आपको मैं बोलता हूँ, देखो इतना बड़ा तेजी हो गया last 5 साल में कोविड के बाद में, and people who are investors in Hindustan Lever are yet hoping कि bull run will come, right? Hindustan Lever is a phenomenal company, but has not made money even at a 5% CAGR in such a big bull run. And if you are an investor in Hindustan Lever, it ticks all the boxes. It's a great company, great management, phenomenal consumer, etc., etc. But you need a lot of emotional strength to be invested in a situation like this when the world is making money and you are not making money, and you are so seasoned and so experienced. I am trying to ask, because all of us at some point time are struggling for this only, कि मैं अटक गया हूँ, बहुत अच्छा डिसीजन था, पर पैसा नहीं बन रहा है.
In small private businesses, the Unilever experience may not have been there, first of all. Secondly, if you look at the product portfolio of a Nestle, okay, I'm not tracking Nestle right now, but Nestle has done better than Unilever in the same 5-year period.
Marginally better.
Marginally better because this product portfolio is slightly higher end than Unilever. Unilever is mimicking GDP growth. It's not doing anything better than that. But niche...
Stock price is not even mimicking GDP
I'm talking
growth.
the numbers of the business, revenue growth and so on, and stock price, of course, is lagging. But if you look at the niche brands, okay, you'll see there has been more growth. But if there hasn't been, let's assume I was a Unilever shareholder. I have no idea what I would have done after 5 years of seeing marginal growth in the business. I would not focus so much on the stock price, first of all. I would focus on revenue growth, what Unilever has delivered. And it's not delivered great revenue growth. So we would be in some kind of rethinking mode.
Okay.
Anyway, I want to make one more point about what Sunil Bhai said. We have a very clear view, and this is not about consumer or anything, but about investments in general. When the stock markets and the bond markets disagree, right? the bond markets are normally right. So when we invest in a company, especially a later stage company or a public company, we first look at it and saying, would you lend money to this company? So taking some of those infra examples, the bond market analysis would have showed you bada danger hai boss. The stock market, given whatever the price or whatever was going on, might tell you this is great. And that might have been misleading, which is effectively what you're saying, what you were saying as well.
Len, you allocate a lot of money to third-party managers, right? Without giving specific names, I would like you to just spell out, let's say, you gave money to some X person and you started with X and it became 5 or 10X of what you originally gave, right? And we are not talking with specific names. So what characteristic did you see to give that X, and what characteristic did you see to scale up to 5 or 10X? And how did you continue to have more faith and more conviction in that manager? What right he did to gain your confidence and conviction?
So it's actually very simple. It's just three things. First is you understand.
Sorry, it looks simple to you. Whole world is struggling for that.
No. I think world gets it right. The problem is, like someone said, even Sagar said, I think, बहुत noise होता है. I mean, first is you've got to see whether the thesis of the manager resonates with your worldview. And it need not be that you have to agree with it. You might have a different worldview, but if you think that there's a conviction, there's something that the manager... So you got to first understand the thesis as to how they think about the world. And that is the first thing. And if that continues to sometimes even intrigue you, saying they have a very different, you will continue to think. But I'll tell you that's one part, not the biggest. The second is you look at performance. And I'm saying the performance is not the return performance alone. Of course, that's important. The second, less important, but overlooked, is how much of that performance is back in cash. Because IRR, TVPI, DPI में बहुत फर्क होता है, especially in the private markets. But the third is how much of that return has come from the thesis versus doing everything outside. We have had instances of managers who delivered great outcomes, but it's not come from the thesis that they originally said they would be doing. Yeah, and of course, I mean, one is obviously the PE बढ़ता है, but of course people will, अंग्रेजी इतना अच्छा भाषा है, सब भाषाएं बहुत अच्छे हैं. They'll say, because we pivoted, we were agile. But at the end of the day, if this is what you're good at, you gave money to a manager because you thought she or he is good at one thing, and then that's what you give them. If they do something else, then that's not a step of confidence. So how much of the returns comes from the thesis versus coming from other places? And the fourth, there's a third, is the talk-do ratio.
What is that?
The talk-do ratio.
Okay.
जो बोलते हैं वही करते हैं क्या, और उसके अलावा कुछ और करते हैं, और they don't do what they talk.
आपने मैथमेटिकल मॉडल बनाया है talk to do ratio का?
मैथमेटिकल मॉडल नहीं है, बट हमारी टीम में बहुत डिस्कस होता है. And now it's easy with AI. You can track all conversations. If you put all your minutes of the meeting in the past, and then you go back and pull it out and say, अच्छा ये बोला था, and what happened, be it on a particular investment or be it in the whole strategy.
तो Len, आपके portfolio में last 10 years में ऐसे एक दो managers हैं who have grown from X to 10X in terms of the money which they are managing for you?
10X नहीं हुआ है, but substantial increase, continued participations हुआ है. We've also had cases where we have felt that the manager is better off without us.
So guys, whoever is managing third-party money, that's a lot of insight for you guys. There's a lot of hope as well. So Sunil, just coming back to you. अभी दिल से बोलोगे ना? तो बाजार क्या लगता है?
$1 million question, and particularly
अभी आपके दिल में जो बोल रहे हैं
बॉटम हो गया है.
हाँ एकदम
बॉटम हो गया है, लेकिन बड़ा पैसा बनने में टाइम है. Bottom हो गया. I think the worst in terms of Trump is that is there in the price, but to make really big money, we need all of us are little traditional. Earnings growth is going to take some time. what is happening is challenging, but in challenging times, India always finds opportunity, Indians always find opportunity, but that opportunity will come gradually, because next 90 days is again going to be uncertainty. Earnings growth are still not great, but looking at everything, I don't think markets falling below what we have already seen twice, once in February and once 3-4 days back. So constructive, but bada paisa very near term mein nahi banega.
I'll just come back to you again. Mohan, you spoke about a lot of data, right? And you spoke a lot of bullishness. But see, finally we have to have some takeaway for the crowd. So ये data लेके तो क्या जाएंगे ये? So if you have to invest into one industry, or better even one company, it can be part of your portfolio and we can have full disclosure. If it's a private company, you don't even care about any disclosure. Can you share any one industry which you are most bullish on from a 3 to 5 year perspective? Or give example of 2-3 companies which you have invested, which you can think have potential to become 10 or 20x of where they are.
Madhu, 85% of what we own is in venture.
Doesn't matter, Mohan. Doesn't matter. There are people who find how to invest in that.
And it's been very painful because we've been investing for 12 years. It takes about 13, 14 years for companies to do something. And now we are in the harvest phase for some companies. I'll give you a company called Darwinbox.
What is that?
Darwinbox. Okay. Darwinbox is a HR SaaS cloud company in the Gartner, golden, whatever it is. They are higher than both Oracle and SAP. They got about 1,000 companies who have taken the SaaS product. They have a revenue ARR about 80 billion. They're $1 billion, they're a unicorn. And now they're going to the US. They already got about 10 clients. And we think they have the possibility of being $5 billion and maybe going on to get about $300 to $400 million revenues in about 4 to 5 years. And the key for SaaS companies from India is you must multiply the revenue they get from India by a factor of 4. Primarily because you can get $100,000 in India, in the US, same thing, you sell for $400,000. The prices are discounted here. They've taken over 250 companies from SAP and Oracle in the last 5 years. Now that is a truly extraordinary company. The other company called ToneTag. ToneTag did nothing for about 8 years because they make payment by sound. There's a guy whom I know, and just now he raised money about 70 million, both primary and secondary, the pre-money of 180 million. He's got about 55 crores revenues per month and about 45% PAT, because it is pure product company where most of the incremental revenue comes to the bottom line. So now we are seeing this kind of growth happening in these companies, and I think that's what keeps us excited. But venture is very painful. Sure. It takes a long time.
But Mohan, you will still feel that there are a lot of opportunities to make 10, 20, 100x return?
Yes, because the disruption happening, for example, we got a company called Licious. They still got to make money. I gave the first check of 50 lakhs about maybe 8 years ago.
We know the Licious story.
It's gone up 1,000 times. Yeah. But we got to sell it. The problem is we need an exit. Yeah. The problem, what we are really is raising, the MOIC is very important, but IRR is more important.
Absolutely.
And for IRR, you have to sell when you get very good value, return back the capital.
In the investing world, what you transfer to your bank is the real thing.
Yes.
NAV is not real.
So I think I'm excited about venture because I understand public market reasonably well, and they're great managers, but venture is where we are excited because in the age group where we are, not me, the boys where they are, for them at 30, 35, you got a longer way ahead. You invest in venture, you understand that 10, 12 years later, it pays off very well. And now we're in the growth of the digital revolution where technology is changing the context. You look at the Fabulous 7, whatever you call it, right? Magnificent 7, as against MAGA, right? Magnificent 7 is 30-40% of S&P 500. Now, is there going to be some Magnificent 7 in India? We need to discover that.
Yes, it's showing 4 minutes. We have 10 minutes at least? Yeah, very good. Sanjay bhai, just coming to you. I know that you're very fond of investing in IT services, financials, and pharma, healthcare. if you have to pick up one sector from a next 3-year perspective, and better, maybe if you can talk about one company with full disclosure, where you have made investment, where you see maximum possibilities. This is more from a educational perspective and not to invest in that company, as to what gave you the conviction to invest such large amount of money in any particular company. What did you see, and how you monitor these companies, and when would you decide to exit this particular investment which you may have made?
So I think 3-4 questions. There are 3-4 parts to it.
There are two parts of the question. One is the maximum opportunity you see in any particular sector out of the sectors which you are investing, and maybe example of one company.
So I would say right now I feel like financials is relatively undervalued. I think we've gone through a painful sort of long corporate cycle. The retail loan cycle is playing out. And so we are, at least if I look at value, you're beginning to see value in financials, right? So you could pick a few, situations. I'll give you an example. We had, we were investors in AUSFB, right?
AU Bank.
AU Bank. Yeah, so it was an NBFC, then we converted it into a small finance bank,
Sure, yeah.
right? Now eventually will become a universal bank. This is a bank, that we actually made about 10 times our money on the situation, right? We took it public, etc. But when we exited 5 years ago, right? About 500 rupees. It's 540 rupees today, right? 5 years have gone, and it is like zero sort of, value accretion. Now, in a good company that has, I'll give you another example like that we did with Eris. Eris we took public in 2017, right? 2023 we re-entered at the same price, okay? 5 years later. So a little bit, a different view than Gaurav here, because we ask ourselves incremental IRR, right? And if we are not seeing incremental IRR of, say, at least 10-15% dollar, right? 17-18%, we would exit out. So we don't necessarily stay invested. I'm saying that. So I'm giving an example like, AU, for example, could be an interesting situation right now, right? To look at, say, listen, or financials in general, right? When you have gone through a period of 5 years without having accreted, and if you're fundamentally a better business, right? The next 5 years could look interesting. Now, if you, so when you think about exiting, right? We were investors, for example, for 18 years in Mankind. We are not yet sold off Intas. We've been 20 years in Intas. We have been in 10 years in NSE, right? NSE, we came in at roughly in today's, about 80 rupees a share. Now it's roughly 16, 17, 18, whatever it is, right?
Your position in NSE alone is more than $1.5 billion, right?
Yeah, somewhere between $1.8 to $2 billion is the current position in NSE, and we've not sold a share, right? So somewhere when to sell and when not to sell is the biggest call, right? Because now you're making more in dividend, so if you, and I'll give you examples of when we sold well, right? We sold very well in Suzlon. We sold very well in Yes Bank. Now these were situations, I'll give you an example, some numbers I'll read off for you for Suzlon, right? 100 crores of profit, 350 crores of profit, 900 crores of profit, 1100 crores of profit. This was the trajectory of the company. We sold after 900 crores. Why? Because they went into Goldwind, they went to China, they went into France, they went into US, all at the same time.
Which company?
Suzlon. So the point is, when somebody takes incremental risk, I feel like the thesis is broken, right? So in the risk, it's same with Yes Bank. I think incremental risk was just going crazy. So after 200, 220 rupees a share, we came in at 5 rupees or 10 rupees a share. I think 10 rupees a share. After 220, we were like, it doesn't make, it doesn't make sense. We sold at any price thereafter. It went to, Suzlon also went from 1200 rupees went to 2500, doubled after we sold. Ultimately went to zero, right? Or close to, back to 50 rupees or something. So sometimes where the thesis is broken, selling is very, very important. Not taking the sell call is, so there are 3 types of things that happen. Either the company doesn't have the ability to keep on compounding. That's one. There's another case where the company is good, but was so overvalued, which was the case with Eris or AU, right? That you go through a massive time correction. Could be 5 years, could be 7 years, could be 3 years. And there's no point being in there for that period of time. You can come back, right? There's another period of time, there's another situation where, the company is such a good company that continues to damn compound. NSE, Mankind, Intas, where you can just continue to hold for 20 years. Those calls, if you get right, is better than anything that you do on when to buy, when to price. I feel like the entire discussion in investing world is all about what's the right price and when to buy. I think where investors can benefit a lot is to wear an operator hat and really say, is this a good business that can grow for 15, 20 years? There's nothing like that. And you won't find too many businesses like that. I will say there'll be probably 10 to 15 businesses that you can find in India that you want to own for 20 years. So,
beautiful, beautiful. Do you think there is an opportunity in the NBFC space? Because that is one space which has not done well for last 4 or 5 years. There's been regulatory pressure on the space. And now, at least there are some companies which could emerge winner from here.
See, the challenge with the NBFC space is as follows. Everybody focuses on the asset size. The issue is not on the asset side.
Yeah,
The issue is on the liabilities.
Absolutely.
On the liability side, there was a point in time where banks are the biggest funders of NBFCs. Bank, overall NBFC funding was less than 2-3% of the banking balance sheet. So you could grow. Banks were willing to lend it. Therefore, NBFCs were growing 30, 40, 50% a year. Now, NBFCs are about 14% of the banking system. With RBI really not focused on helping them grow more than that, NBFC total credit cannot grow more than 14, 15%, which is the credit growth of the banking system. So what is happening is, within the thousands of NBFCs, money shifting from the smaller to the larger. If Bajaj is going to grow at 20%, it's going to come at the cost of all these smaller NBFCs. So don't go, it is not a good place to bottom fish. This reminds me of construction or EPC. Not a good place to bottom fish, right? But some of the better businesses will win share within the NBFC bucket. 14% of the banking system is a lot of liabilities, right? If you have a cost of advantage on your liabilities, you're not going to go wrong. So I think that's what I would say.
In the interest of time, the same question to you. And before that, what is going on with all the Trump era? Are you really worried about global economy per se?
Well, yeah, I am obviously worried about the global economy, but I have a slightly differential view. The world is saying that there'll be X amount of inflation because of tariffs. And my own view is that inflation number is overstated. Overstated. That number is overstated, inflation will be less. An example we were discussing earlier today was, let's assume I sell a t-shirt for 100 rupees. It retails for 700 rupees.
Sure.
If there is a tariff on my t-shirt of 25 rupees, right, the end selling price will be 725 or less, because some of the trade will capture some of the losses, so that the price may end up at 710. So inflation may not be as much as what the world is betting. And there was a November paper by I don't know who, which is what the Trump administration is following, which shows that even in the first Trump era, inflation was less than what was projected. So my view is slightly more optimistic, not optimistic in an absolute sense, but slightly more optimistic than what the world is betting at this stage. In terms of investments,
what are you most bullish on today?
I am personally bullish on NBFCs and banks for the same reason that they are today relative value plays compared to what's happening. The challenges are on the liability side. Some of our best investments, so we've been conditioned by our own experience, and even though the world has changed, as Sanjay was just saying, some of our best experiences and returns have been in financials. So for example, our first big hit was an investment we made in 1999, happened to be Indiabulls. We made 50x by 2006.
Yeah, sure.
Okay, today, Indiabulls is not the same company that it was at that point in time. So let's not look at what is going on today. We have a whole portfolio of private businesses in NBFCs. So we are, for example, we were seed in Incred. We continue to hold that. Mark to market, we are up 8 or 10x, depending on what you're looking at. And obviously, we worry about the liability side with companies like Incred, because if the shift happens on the liability side to a Bajaj Finance, it'll happen at the cost of the smaller companies, but great systems, great entrepreneur. So those are the positives. So if we had to make new bets today, we would focus a little bit more on financials and consumer, which are our standard bets.
Got it.
We've been, for example, in insurance, which has done very well for us. So we continue to do the same, really.
One line, maybe one last word from you. What is the asset class you are most bullish on from the next 12 to 24 month perspective?
12, 24 months is too short when you have a thing. But I think I would say in general it'll be equities, and you might within equities you might, depending on the liquidity premium, have a swing between public and private, but it's equities.
Yeah, sure. Sunil, last question to you. One sector, if you have to pick up, which will make really a lot of money in the next 5 to 10 years in India.
I think it was earlier different, but I would say given what is happening, I think pharma, because, one is the impact on tariffs on pharma, even if it is 10%, 20%, 30% is going to be the least. You just take the example of Revlimid. From $16 billion, the value has fallen to $500 million. That $15.5 billion saving is to the US insurance companies and US consumers. So even if you put a tariff, it is $15.4 billion. And now when you are seeing at the US dependence on China for simple things like antibiotics and vitamin C, I was reading somewhere, or even basic drugs like penicillin and all, I think they are going to diverse big time. And with 40% of FDA-approved plants in the world being in India, I think all kinds of pharma, particularly export-oriented pharma, will do very, very well. And in this whole tariff, no tariff, the stocks have reacted also quite significantly. So I think high ROC businesses, good opportunity. Banking and financials, we are positive, but now it's becoming very consensus. So I'm getting a little worried looking at the past history of being on the consensus side, but pharma would be one.
Sure. Sunil, you made my day. Mohan sitting here, at least one time I can narrate more numbers than Mohan. So here are the statistics on pharma industry. I was just doing some numbers. Mohan, we started in 2005. The total industry size was 28,000 crores. And total profit was 2,600 crores. 20 years forward, size of the business is 6 lakh crores. And the profit is 80,000 crores. We have the highest amount of FDA facilities in the world, including that is there in America. So we have no more number of FDA-approved facilities in India than they are there in America. The total size of the CDMO business, which I'm most bullish on, is more than $200 billion. Out of that, only $8 billion is coming from India today, while we have the all inherent advantages of leading this CDMO race, because we have the most skilled manpower here, right? We have the maximum amount of companies who are present here. And I said FDA-approved facilities which are here. And now the companies are making serious money to reinvest. Because 10 years back, this opportunity was there, but the size of the profit was not there for the companies to reinvest. And this is a long gestation, long-term business, right? So this business is going to become maybe $300 billion by 2028, and India could lead the CDMO race from here. And some of the companies like Divi's have established global presence, and they're actually doing well. For once, I'm very happy I could give you some numbers. So thank you very much. I think we could have carried on for a much longer period. It's impossible to get wisdom out of all of these 5 veterans in a matter of 1 year. I tried my best. Thank you very much for being here. And we have a very eventful day planned. Hopefully, make the most out of it. Thank you.
Thank you to all the panelists for the insights. May we please request Mr. Mohandas Pai, along with Mr. Madhu Kela, to hand over a token of appreciation to the panelists. next session is on strategic autonomy. Sorry. Sorry, the next session is on the Singularity Funds. We now invite on stage Mr. Mithun Sacheti. We would also like to have on stage Mr. Yash Kela, Mr. Sandeep Bapat, and Mr. Ramanand to give us a brief overview about Singularity, what the team has been able to build thus far, and what it intends to do going forward. The session is about to begin. May we please request everybody to return to their seats. May we please request you to return to your seats? The session is about to start. Thank you. Ladies and gentlemen, we are running behind schedule. May we please request you to return to your seats so we may begin with the session. Thank you.
Good morning. After all the wisdom comes the time for us to actually give you some thoughts about how we've been operating and what we've been doing at Singularity. I want to walk you through the last 1 year as we've done. There are, the way we look at the business and the way we look at, I come from a consumer background, and so everything for us becomes a funnel in some sense. When we think about our business's operations, one of the things that we really wanted to do was not make any mistakes, because mistakes in this business can really be fatal. Good to tell all our LPs that I don't think we made any mistakes that are at least visible to us at this point. I'm going to break our learnings over the year into 3 parts. There is we improved at the top half of the funnel. Earlier, our deal flow, a lot of it was thanks to MK coming through and a lot of visibility. You can see the power pack day that we've had yesterday and today, and obviously everybody reaches out to him for everything, and that is a phenomenal deal flow to get. We've been able to supplement that a lot more now, and the number of deals that we get to see is possibly 2 to 3x of where we were a year back. That in itself, I feel, for any investing business is a big win, because if you really get to see all the deals which are out there in the market and you get to see them early, then you sort of, in many ways, one step ahead of your competition or what you need to do as well. The second stage comes to mid-funnel. At that stage, I think Sandeep and Yash, and now Avnish as well, have done a phenomenal job of building the repertoire of people required with experience across various verticals, and they've really expanded the team to sort of go and deliver that. At the lower end of the funnel, I think there's a long way for any fund, and we are relatively new. It's only the second fund, and you can see that we are moving further and further to becoming more disciplined towards how we close out deals, to the time that we take to do it, to the call for money and putting everything in. The reason this is actually very important is because this becomes the reputation for how people come through to you in the future. And as all of you know, this business is a lot about the way you build your reputation over a long period of time. We have possibly moved 30–40% ahead of where we were at the same time last year, and this is a continuous journey and possibly going to take a lot longer than that. I don't want to bore you with the specifics of all of this, but I'd love to invite Yash and Sandeep right now, and Ramanan sir, in whatever sequence Yash seems fit, so that they can talk you through specific transactions and deals that they've done over the course of the year. Thank you. Welcome, Yash.
Hi, good morning to everyone. We are very, very overwhelmed and very grateful for the participation and the support that all of you have shown. An investor is largely a virtue of his ecosystem, his or her ecosystem. And you, all of you, and particularly in the manner that you participated, hopefully in due course of time defines, and we would be able to do justice to this participation that we have seen. At Singularity, we are having a lot of fun at this point of time. Some people were asking me, was it very overwhelming to host a summit like this where it was, there's so many senior people that are coming. It is difficult to accommodate the timing, calendars, requests. And my general answer is that people have been so flexible, so participative, and we are very, very grateful for that. Quickly, I think because we are running a bit behind, to give you an overview on what we are doing at Singularity. First of all of us, we are a team of closer to 38, 39 people, including our investments and non-investment team. We are having a fantastic time learning from the investor operator playbook and the guardrails that we have set in Singularity. So both from Madhu sir, Mithun, all of us are having a great time learning and aligning in terms of how to keep on evolving this playbook. Madhu sir, as you know, who is our chairman, his unwavering belief and support, and the platform that was provided to build Singularity, we hope that we will be able to convert it into an institution which outlasts people, as you would have heard him saying. Mithun's thought process, the way he has built a category-defining business in everyday jewelry in CaratLane, the way to motivate people, get them to be pace-setting, is fundamental to this operator-investor playbook. Largely, I think Singularity is built with the support of all of you around 3 pillars. That is what we came to all of you saying that this would be the guardrails that we would operate behind. So the most important is our team. Our team, which is a combination of people not only at the leadership, but throughout the team, a team which comes with a combination of people who have operated at significant scale. Our senior advisors, our partners, these are people who have built policy platforms at fairly large scales, as well as the investing team, which is a representation of people who come with both private equity and now capital markets experience as well. Our second most important pillar is we did not want it to be retail. Like a community or a close-knit community which is built over a period of time, which has intelligence, information, our intent was to go to the best people and the best institutions across the sectors that we are investing in. So we went to, over the 4 years, we have about 60 families and 4 institutions that are backing us. A lot of you are over here, and thank you so much for your support. And lastly is, and of course, the skin in the game, so the high sponsor commitment that the sponsors have put. So across closer to some 4,500 crores of capital that Singularity manages, there's 850 crores of capital commitment from the sponsors. The most relevant next thing is a research-led operator investor playbook. We have segmented ourselves into 5 segments. You will quickly see the portfolio, our founders, our partners who gave us an opportunity of participating with them. And this growth equity strategy that we have is largely segmented into 2 ways of executing, so private growth and pipes, right? So at this point of time, we have largely 2 execution strategies. Around these 2 execution strategies, we have done 2 funds. Fund 1, which was a relatively smaller pool of capital, about 560 crores, and Sandeep will cover a lot more in detail, but we were able to deploy closer to 640 crores of capital, so we were able to maintain efficiency of capital. Fund 2 that we are investing out of from right now, where we have made closer to 7 investments across 5 categories. And what you have been hearing yesterday and today, so the entire work on energy transition and the big problem statement of how do we ensure that for 140 crore Indians, we create value-added jobs as compared to just gig work jobs. So over here, we are creating this dedicated pool of capital which will be focused on this energy transition as well as the strategic autonomy sectors. As you go out, you would have seen a book that the team has published, which is closer to 12 sectors, and it's a 100-page report on how we see these sectors, how they have evolved, and how they are evolving. And largely so that we can continue to support these companies, like Sanjay was saying, like Chris has done with Dollar Capital largely. If we keep on finding alpha in these companies, can we be continuous supporter of these companies even as they are listed? Ramnan sir has done it with his background in Premji, and that is the way I think we hope to evolve over here as well. So I think Sandeep and Ramnan sir, both who the team learns from, they are ensuring we get into that institutional process and rigor. And Avnish, who started in January, who we had the fortune of interacting before with, I think his rigor of creating a platform of Carrot Lane at great scale, and Suyash and the team with the entire work on energy transition. So this is our team who has put all of this together. We are very, very grateful for our senior advisors, Ajayji, Sharad, who are over here. The guidance and the work that you have done and your guidance to do growth equity means a lot to us. Arunji and Manish that you heard yesterday, they have created platforms both domestically and internationally of great rigor and repute. And Shashi and Sanjayji, Shashi around business and fundraise, and Sanjayji ensuring operations and finance runs well. So now this is a team of closer to 40 people. We took the opportunity of over-investing in the team because this was a non-conventional team that we created. Not all of the people come from a traditional investing background. Of course, most do. The point was, can we get this team working together, set processes, so that as we start building scale, our foundations are strong. Lastly, we are extremely grateful to our LPs who gave us a larger mandate to build this out. We wanted to ensure our core is strong. So these LPs across the last 4 years gave us this opportunity, as we said that we will come and do this. And our intent was to get the top people across domains so that that enables more deal flow, that increases our intelligence, that gives a lot of background, because if someone is from Calcutta, someone is from Delhi, someone is from Jodhpur, someone is from Kochi, and they have existed for 50, 60 years, there's a lot of diligence check on the entrepreneur that you're able to do from this. And by this, we hope that we will create a DNA and a differentiation with all of these baskets put together that will enable us to create an institutional rigor as well as deliver ultimately performance and a return on capital. We are grateful for the operators and partners who gave us an opportunity of participating with them. Most of them are there in this room. As you see, our portfolio is largely across 5 segments. Some of them are clubbed as we are in the process of building this out. It is largely in growth equity and some build-out companies with the operational muscle that the team has. And with this, I will request and invite Sandeep and then Ramnanji to run us through here onwards.
Good morning, everyone, and thanks for coming to the annual summit. I'll give a quick update on the private growth funds of Singularity. So this is the first fund that we had invested in. The first close of this fund was in September 2021, and then the final close was in March 2023. So we are in April 2025, so 2 years from the final close. This was a 560 crore fund. We are fully invested in this fund. We invested, as Yash said, close to 642 crore of capital. And the way that happens is because we can recycle capital, so whatever positions we have sold with gains, we have reinvested back. If you look at the slide, there are 3 sort of sections in which it's split. The first section, which is roughly now 29% of the capital that we invested, is already liquid. Most of these are now public companies, except NSE, which is a private company, but as you guys know, it's fairly liquid to sell it in the private market. In this bucket, NSE is one of the larger positions, and the position has worked out well for us. In a less than 2-year period, we have made close to 3 times our money, and we are almost entirely exited the position. So this we have recycled back, and that's how some of the invested capital is more than the commitment capital. And then the second bucket are the companies which will list in most cases over the next 12 to 18 months. We are super excited about companies like Loham and Aimtrex. Yesterday, Loham founder was there and he had presented his company. We believe we can make fairly substantial capital gains in that company. One of the pillars of Singularity and one of the philosophies is to give return back to investors in a time-bound fashion, because in private equity, one risk is the duration of hold. So if you hold investments for too long, the IRR really suffers. So the way we have designed the portfolio is that we will keep that DPI or return of capital in a timely fashion in mind. And that's how we have constructed the portfolio. So if you look at the first bucket, which is 29% of capital, that's already liquid. We are now selling those positions and returning capital to investors. The second bucket, which is close to 40% of the portfolio, also will become liquid over the next 12 to 18 months. So we will have mostly liquid portfolio over the next 12 to 18 months and then return capital. So the average duration of the fund will not be too long, and that's how the IRR should be healthy as we go forward. This is a portfolio snapshot of the second fund, which we are now investing out of. This is a 2,000 crore fund, so substantially larger than the first fund. So in this fund, it's very sector focused. So as Yash mentioned, we have 5 focus sectors: energy transition, industrial businesses, consumer businesses, healthcare, pharma businesses, and financial services. We have made certain investments in each of these verticals so far. Yesterday, there were a lot of sessions on energy transition, so whoever attended would know that this is a big focus sector for us. We believe this is a very large theme and very long-term theme. So over the next 10, 15 years, we believe a lot of large businesses will get created. Within energy transition, we are not doing too much of infrastructure assets, so we will not invest in power plants and those type of businesses because those tend to be lower sort of IRR businesses, more steady maybe, but lower IRR businesses. And we will tend to avoid businesses which have too much exposure to government because those come with certain risks. So the 2 larger investments that we have done so far in this vertical, both of them were present yesterday, are HEG Greentech and Loham. HEG Greentech is part of the HEG group. One of the larger businesses that they're building is a anode manufacturing business, which goes into electric vehicles. And Loham is building the cathode part of the business. So we believe this is the best way to play the electrification of vehicles. Instead of trying to sort of invest in OEMs, we believe it's better to invest in battery materials companies. So we have now 2 large investments in HEG and Loham to play that theme. And then you will see maybe 1 or 2 other investments over the next 12 to 18 months. QCEV is one of the other investments in the vertical. As of now, it's a smaller investment, but over time, we will build this position. The other vertical, which is a big focus for us, is what we call next-gen industrial businesses. Industrial is a fairly broad category. So within that, I think the areas that we are focusing on are the data center ecosystem, aerospace components, defense, and then semiconductor electronic ecosystem. And we will have some panels in the second half of the day focused on them. So far, we have made 1 investment in the data center EPC business of Sterling & Wilson Group. This company was created as a separate company in which we have come along with other investors. As you know, the data center build-out in the country is happening at a rapid pace, and this is among the top 2 or 3 EPC providers for that segment. Apart from this, we have been spending a lot of time on a few aerospace component businesses and a few defense businesses. So you will see maybe 1 or 2 investments in those categories over the next 12 months. In the consumer vertical, which is another big focus with Mithun and Avnish helping us sort of create deals, we are in the process of investing a decent-sized check in a consumer business, which will get announced in the next 1 month. And you will see more investments in this sector as we go forward, given that this is one of the key sectors for us. Apart from the deal that will get closed in the next 1 month, we have made smaller investments in Classic Legends and Akshay Kalpa. Those are not full-size positions. Over time, maybe we'll increase our position in those companies. Healthcare pharma is the other 4th sector that we focus on. So far, only 1 investment. This is the IVF business in Kerala. This is by far the most well-known IVF chain in the state. We are super excited to sort of partner with the doctor entrepreneur as he builds out the business regionally throughout Kerala and expand into neighboring countries. So that's the only sort of healthcare investment so far. But given our sort of expertise in this sector, even with Madhuji's expertise in pharma and healthcare, we will invest in other businesses going forward. Financial services, as you know, in the first session, I think it was discussed that this is one of those rare sectors in the public markets which are trading at a significant discount to historical multiples. So in the fund, we have the flexibility to invest some capital in the listed stocks. So this is one of those sectors in which we have taken some positions in a couple of listed financial services companies, and so far no investments in the private side. Before I come to the risk framework, in terms of deal sourcing, as I think Mithun described, broadly there are 2 funnels that we have. One is proprietary funnel, where we are not going through bankers or like deals which are being run through bankers. And the idea is to do as many deals through the proprietary network that Mithun has, Madhuji has, I have, Yash have, or the team has built over time. So either it's through the senior people's network, or given the amount of time we are spending in some of these sectors like energy transition, aerospace components, as you do more work, you kind of build your network and sort of see more proprietary deals instead of deals which are there in the market. So the idea is to do as many deals as possible through that proprietary network. And most of the deals on this slide are actually proprietary deals. So HEG, Loham, Sterling & Wilson data center business. These were not deals that were run sort of through a banker. So that's the endeavor even going forward. Now just to wrap up sort of my presentation. So as you know, in private equity or any investing business, managing risks is one of the key sort of jobs of the fund manager. It becomes even more important in private equity because the positions are not liquid in many cases. Unlike listed sort of companies, if you make a mistake, you can sort of exit with certain loss. In private companies, it's almost like a marriage. So you have to live with the company for as long as sort of the company doesn't become liquid. So keeping those risks in mind, I think these are the 5 guardrails that we have put together. They are obvious, but in investing, a lot of times people miss the obvious things. So we always keep these things at the top of the checklist when we are looking at companies. The first is just be disciplined on the entry valuation that you're paying in a business. So even if we have very positive view on energy transition, auto, aerospace components, beyond a certain valuation multiple, we will not lose discipline. So even if you like the business, even if you like the prospects, we believe that you have to sort of, at certain point of time, just have a valuation cap that you can pay in a business, because in certain cases, those similar sectors may be trading at a higher multiple in public markets, so companies ask for those kind of valuations. So that's number one. The second is just be diversified across those 5 sectors that we have identified, and not a single sector should not be above a certain level of commitment, even if you have a very positive view on the sector, because things are never 100% certain. Things can always have some uncertainty over time. Then the third, I think, which also happens many times in private investing, is you have to make sure that you do your diligence, both financial, legal, business diligence properly, just to make sure that all the hygiene, all the corporate governance, all the numbers that they're telling are accurate, and you are sort of getting into the company knowing all the details and all the reality. And the other benefit of doing diligence is when you spend like 2 months with the company going through all the numbers, you actually see whether the systems and processes are there or not, because no company can fake it for 2 months when you're working with them. So that also sort of helps a lot in terms of assessing whether to invest or not. And then the fourth is having operating capabilities, just in case there are issues, we can help them. So Avnish, Mithun, and rest of the team are sort of building operating capabilities in-house, and also network of experts to essentially make sure that we can help our companies if there are any issues that they're facing. And then the last one is, that's an obvious one like the others, but I think it's important to keep in mind, is businesses which are not making money, either cash flow negative or EBITDA negative, are inherently more risky businesses. So we will sort of keep those investments at a minimum level in the fund. So these are the 5 sort of risk frameworks that we have put together for the private equity business of Singularity. And then we went through the Fund 1 and Fund 2 sort of portfolio. So thanks a lot. And I'll ask Ramnanji to present the PIPE fund strategy and the portfolio.
The next slide. So thank you, Sandeep. So essentially, our PIPE strategy builds on the team's strength and expertise in investing in scalable, high-growth companies or businesses in the sunrise sectors. Okay. So we will probably, in the side, we will ride this growth curve over a longer period of time post-listing. I mean, that's the whole idea. I think recent examples that we have seen are companies like Vari or Swiggy, Zomato. They all got listed. They are in the high-growth segments of that. And over the next couple of years, we'll see a lot more such companies listing in this space, which will provide us a lot of investment opportunities or revenues in that. And yesterday, we heard from the Vari promoter, the type of growth prospects that he's seeing, post-listing also. He's seeing such a huge opportunity and planning such aggressive expansion plans in his businesses. The second bucket that we are looking at is primarily structurally strong growth stories, okay, in segments like defense, segments like power transmission or healthcare, and also a range of renewables. All these segments are going to see significant structural growth happening over the next few years. And that is one area that we would see phenomenal opportunities. And lastly, of course, we'll have about 10 to 15% in which we'll play the cycles. Maybe commodities or whatever, where there are near-term opportunities to make returns in that. And across all these 3 buckets that we talk about, we will have about 30% of our investments will be in large-cap companies, okay? And where the companies are growing at a slightly faster pace than what the normal ones. And this will provide a certain amount of stability to the portfolio as well as liquidity. So I think that's broadly our strategy as far as the PIPE investing is concerned. Yeah. Thanks. Want to keep it short.
The next session is titled Strategic Autonomy, a topic so important that strategic autonomy isn't just a choice, it's a necessity. To know more, we present a short video to understand why.
Let's take a journey through time. Here's South Korea in the 1950s. Its per capita income is just $108.7. And here's Thailand, with a per capita income of $140.9. Back then, they weren't too far apart. But now, let's fast forward 6 decades. Watch how this gap unfolds. South Korea surges ahead, reaching a per capita income of nearly $33,121, while Thailand lags at around $7,182. What changed? The answer lies in what they built. South Korea chose the path of a product-driven economy, whereas Thailand took the path of services economy. To understand this, answer one simple question. How many brands from Thailand can you recall? And how many South Korean companies can you name? And that's why this distinction matters. Now let's shift our focus to India. Where do we stand today? India is already the 5th largest economy with a GDP of $4.27 trillion. But that's just the beginning. We are poised to become the 3rd largest economy in the world and will be close to $10 trillion soon. But getting there and staying there is the real challenge. We have 2 paths ahead of us. We can either continue to align with larger economies, being a trade colony of China or a tech provider to the US. This means relying on their systems and playing by their rules. Or we can take the bolder path, becoming our own power, a product nation that drives its own destiny. And hence, strategic autonomy is the need of the hour and the only way. Before you ask, is it really that important? During COVID, the US restricted vaccine raw material exports, leaving India scrambling. This wasn't the first time global dependencies created vulnerabilities, and it won't be the last.
I'm here to tell you that area that's going to happen is to do with strategic autonomy. The reason why this is happening is to do with geopolitics. If we don't do this, we won't have a place in the world in the future. And this is now deeply understood in India and for many years. Now the question is, will we be able to succeed in this area? And I think we will be able to do this because I think there is a very good understanding on how to do it. We know that we can't do it the BARC, ISRO, DRDO way. Although this did create strategic autonomy for us in nuclear, in space, in missiles, as you know. But this is not really a viable method for doing it in the future. The viable method in the future is to do with ecosystem building. And in ecosystem building, we have had this situation where we got a lot of learning in building India Stack, what is called as DPI right now. Then we applied that learning to a few other sectors. One of those is telecom. And that has worked very well for us. In fact, later you will get to talk to one of the winners in that telecom equipment sector. And that company is Tejas Networks. And how do you know they're a winner? They're a winner when they're in a circle of 5. But this is a remarkable feat, not only because the company did well, but because the ecosystem building that supported this company and many others, not all of them succeeded, but many others, it actually was also done in a completely new way. And now that is going to be applied to 8 to 10 more sectors. We are focused on 9 right now.
For India to gain strategic autonomy, it is very crucial that all the critical elements of technology that are needed in our economy, whether it is a communication infrastructure, whether it is an ability to produce electronics or ability to produce our own defense equipment or ability to have cyber security on which we have control, I think those critical elements of technology have to be within India. And when I say within India, which is the know-how, know-why, the design, and the future readiness or future development capability should exist within the country. So there are 2 ways we can achieve this. Of course, one thing which is absolutely critical is we have to invest a lot more in R&D because nobody in the world would give the IPR on which they have spent billions of dollars for free for you. So I think we have to develop that IPR. But as a jumpstart or as a starting point, we can potentially license the background IPR or stuff which has been done so that we... Secondly, I think it is today very, very clear that we will be a part of a global value chain. Something will happen in India, something will happen in China, something will happen in the US, and everything will come together. But to be a part of global value chain, you have to have enough bargaining chips. The 2 bargaining chips that India has today, which we can use for strategic autonomy. Number 1 is a large home market. I think everybody in the world wants access to this market. And we need to make sure that we don't give this access on a free platter, but we basically make sure that we get a fair deal to secure our strategic autonomy as we go forward. The second area where we have a big advantage is manpower. So around 40 to 50% of the technology of the world, at least the Western world, is developed out of India with Indian engineers as a part of global capability centers, outsourcing, etc., etc.
strategic autonomy is essential for a country like India, which is hoping to become the third largest economy in next few years. And this is best explained in terms of the defense market. We have had manufacturing of large number of equipment for decades, but all of this was based on transfer of technology, TOT agreements. And all these TOT agreements are notoriously one-sided. The know-why is never transferred and only know-how is shared. And this know-how invariably excludes key components or subsystems, particularly those involving critical technologies. Therefore, strategic autonomy is the only way to be out of this dependence. We can look at it in two ways. Globally, what's going to grow very fast in defense? In my opinion, I think space, underwater, and drones will see fastest growth. Also, critical minerals, because of stranglehold of one country, we will see critical minerals in other parts of the world also growing very fast. If you look at the Indian context, however, we will actually see an all-round growth in defense industry because we are at a very nascent stage and tremendous growth is possible across. But specifically in India, we will see emerging tech areas where we as a country, where we have large talent pool, we will have relative advantage and we will see big growth. For example, unmanned platforms, artificial intelligence, space, all these we will be particularly strong.
India's investment in R&D is 0.7% compared to like China's 2.5, US is 3.5 of the GDP. And you can imagine their GDPs are 5 times and 10 times higher than us. The total investment in R&D is very high. And that is very critical to become a product nation.
Strategic autonomy isn't just a choice, it's a necessity. These 9 high-impact sectors have been identified as being key to India's path to strategic autonomy. But where do we focus? Strategic autonomy isn't about self-reliance in everything. It's about dominating high-impact sectors. Recognizing this need, the government is close to finalizing an ambitious 1 lakh crore rupees fund to stimulate private sector investment in core research and development. At Singularity, we believe in leading the charge rather than following. We are already making progress with our investments in renewable energy, med devices, data center EPC, and defense.
The Singularity team really believes in leading as compared to just following. In addition to the energy transition theme, which we have been at it for executing over the last 6 years, strategic autonomy is our next decadal investment framework and agenda. We are already making good progress through our initial investments across telecom equipments, medical devices, aerospace, defense, semiconductor, and electronics. We hope that in addition to this, around quantum, nuclear energy, and space technologies, we make relevant investments.
Strategic autonomy isn't just policy. It's the power to define our future. A future where India doesn't just follow trends, it sets them. It's time to build a nation the world will turn to for solutions. The world will depend on us. The time is now. The question isn't whether we can do it, it's how soon we will.
But that was strategic autonomy. You will have the opportunity to listen to Mr. Sharad Sharma in the subsequent sessions during the day. May I request Mr. Sharad Sharma, the architect himself, to share his deep insights and knowledge on the know-hows of strategic autonomy. Sharad doesn't need an introduction. He is one of the core members behind Project Vishwamitra and the founder of iSpirit, the think tank for Indian software products industry.
I'll just take 10 minutes. I won't take very long. How many of you invested in HDFC Bank IPO 30 years ago? Did anybody do that? I see some hands going up. Anybody on that side? I see many hands going up. You know, what's remarkable is that in these 30 years, HDFC has gone from a zero to almost $10 billion profit. And they are not the only ones. We heard Adani's $10 billion. Reliance, of course, has been doing that. Tata Group is doing that. SBI is there. You know, we are beginning to see in this 30 years, wonderful 30 years that we've had, that many companies, you know, 5, 6, 7 companies have now started reaching this major milestone of making $10 billion profit a year. But in the same 30-year period, there have been several companies, almost a dozen companies, that were born in the US who have gone from zero to 100 billion profit a year. $100 billion. Google makes 10 billion profit a month. They were born in 1997, after HDFC Bank was born. So the question that we have to ask ourselves is, in the next 30 years, will we produce companies that have the potential to actually create a $100 billion profit in this period? The answer to that is yes. But the DNA will be very, very different from the DNA of the companies that we have today. And as investors have wonderful allocators of capital, and they understand process innovation. Indigo Airlines, great process innovation. HDFC Bank, great process innovation. Generic companies, you know, that were referenced earlier, terrific process innovation. IT services, again, process innovation. Will we see more process innovation happen in the future? Likely. You know, tourism may see players come up because process innovation in tourism can deliver a lot of value as we go forward. But these new age companies that grow 10x faster are not about process innovation. They're not about product innovation. That requires a different DNA. Will our companies adopt that DNA? I think they will. You know, one of the areas where I think they'll adopt it is drug discovery. Why? Because in drug discovery, we have an inflection. What used to take 10 years can now be done in 2-3 years because of AI. And now we know how to do drug discovery because although we may be in generics, we do a lot of contract research work. And we have lots of GCCs here who know how to do drug discovery sitting in India. But the profit pool of all that work goes to somebody else outside. Now, with the work that we all can do collectively, we can start building companies where that profit pool will belong about. So it requires a different DNA, just the way we changed our DNA. Many of these companies who are $10 billion companies, you heard, yesterday, Sagar Adani, they changed their trading DNA into an industrial kind of a DNA. Similarly, we'll have many players who will either start with the new DNA or change their process innovation DNA to a product innovation DNA. So you have to educate yourself on that transition that will happen. One way to see that change is to see if they're investing in R&D. Our Bombay companies, Mohan yesterday bashed Bombay, and rightfully so, because Bombay companies are notoriously poor in R&D. Our average is less than 0.7% of revenues. And if you have such low revenues, investment in R&D, no product innovation is going to happen. Product innovation needs not only companies to invest more in R&D, but they also require that they have to lean on somebody else for R&D. Apple cannot do its R&D all by itself. It relies on Stanford University for that. Microsoft, whose R&D budget is more than the R&D budget of all of India, relies on OpenAI for its R&D, right? And so on and so forth. So R&D centers are going to be very, very important in the future. So if you want to assess which company may have a breakthrough, you will have to learn how to interact with these R&D centers as they come up and as they do their own work. You have to go inside those centers and see what's happening, which are the companies that are likely to commercialize that R&D in the future. It will require a new type of conversation with a new type of people. Those new type of people look and smell very different from MBAs. How many of you are MBAs here? You'll all have to do a lot of relearning. So those are all people like Sheldons. My daughter calls me a Sheldon, right? So the opposite of Sheldons are MBAs, right? They're open, they know how, they are very extroverted, they know how to tell a good story. Usually R&D guys are not like that. So you'll have to learn to deal with a different set of people as you go forward.
My introduction to Cholamandalam Finance was in 2008, where I'd gone to help them to collect overdue installments from small borrowers and truck finance people. Mr. Vellayan took charge of the company in 2011. At that point of time, Chola was nearly 3 decades in business, yet it remained a niche player in commercial vehicle finance. 14 years forward, stupendous change. This is a company that is diversified, serving business and personal needs of entrepreneurs and small business, moved from being a regional player to a national player. Since 2011, when Mr. Vellayan took charge, the revenue in CG Power has grown at a CAGR of 43%. The market cap of Chola has grown 75x from 1,600 crores today to 1.25 lakh crores. I've listened to some of Mr. Vellayan's lectures where he talks about growing 100x in 20 years. Put that in context, by 2031, Chola should be 100x of what it was in 2011. Besides the market cap and financials, it is also one of the best-in-class company in this financial space. Has a highly charged workforce and a good credo, empowering aspiration and enabling ambition. So let me start with the first question, which is to hear from Mr. Vellayan the transformation journey and the key learnings thereon. Thank you.
Thank you so much, Mr. Jayakumar, and good afternoon, everybody. I'm sorry I couldn't be there in person. But, Mr. Jayakumar, to your question, I just think that, Chola, like you said, this has been how you basically set up compounding growth over time for the company. And one of the things that we identified early on was that...
Can you just hold for a second? There seems to be some audio issue.
Sorry, am I audible at that end?
Maybe you want to speak a little louder, or maybe there is some echo.
Sorry, you want me to speak a little bit louder? Are you able to hear me? Or?
Yeah, just a 1 minute. I'm just trying to set something right over here. Otherwise, the voice was so feeble, it's difficult to follow. We tried testing this, but we couldn't do that. Is it because of me? Okay, fine. Where is this? We can start now.
Okay. So is it clear? That end? Still a bit feeble, or is it clear?
Why don't we start again? Sorry for the interruption.
So now, Mr. Jayakumar, I can't hear you, but I'm not sure if you all can hear me at that end.
We can hear you clearly.
Okay. All right. So maybe I'll start, and you'll have to kind of either, somebody can kind of send me anything on the chat if it's not clear. I'm on the chat on Zoom, so kind of anybody can send me a chat if it's not clear. But basically, if I were to think about how to look at the story of compounding, I fundamentally broken down the story over time into into two fundamental concepts, right? One is I basically look at, how an organization needs to treat its people, and a lot of that has to do with the energy that you create in an organization, right? And so the fundamental thing when we think of energy is that I think that organizations itself can have a lot of energy in them. And I always link it to Einstein, right? Basically, Einstein said E equals mc squared. So we think of what each of our M's are, then definitely we have a lot of energy. And so a lot of it is how we basically kind of channel that energy and kind of make it go in a particular direction. So the first thing I'd like to focus on is how to increase the overall energy level of the organization. And I use a simple kind of analogy there, which is, how many of you have observed that when you kind of enter a room, certain people enter a room, like if you're in a meeting, certain people enter a room, have a lot of you observed that the energy level in the room goes up? I don't know how many of you have made that observation, right? So there are certain people, just by entering a room, they can send the entire energy level in the room up, right? People can also do the converse, right? They can enter a room, certain people enter a room, certain types of people enter a room, and the entire energy level in the room drops, right? So actually what we have to think of is what kind of energy we bring to the table, right? Each one of us brings a particular amount of energy, and we have the capability to enhance the energy of the entire organization. So I think good leaders basically fundamentally have the ability to increase the energy level of the entire organization. So a lot of what we focus on, Chola, was how we engage and increase the energy level of the entire organization. So to give you a sense, when we started, I would say there were only 5 people in the organization that actually looked at the profit and loss of the company. And I felt like there was too much power basically being kept at the center. And one of the discussions we had was that basically, profit and loss and kind of all of what we did as a company was done at the branches. That's where we originated loans. That's where we collected. And so one of the things we started doing early on was basically we went out and educated every branch manager on what their P&L looked like, what their balance sheet looked like, and then made them responsible for it. And what we found in that process was that in effect, they were taking control of their own destiny and beginning to grow the organization in a much faster way. And this also is linked to, so one of the things that I like to do early on is just get a sense from different people in the company what they think the potential in the company is. So I remember going out in Chola early and, talking to, the first level in the organization and asking them, how much can we grow a year? And most of them said, oh, so we can grow at 10%, maybe 12%, maybe some of them said 15%. Then you go one level further down in the organization and say, oh, what do you think we can grow a year? You go to the, the zonal managers. And most of them would say, oh, sir, 20% to kar sakte hain. Kind of, it should be fairly easy. And then you go another level down and the number goes up even more. So they say, oh, you go to an area manager, they say, 30% to ho jayega. And then you go out to an associate that's basically originating a loan or somebody, underwriting, and you ask one of them, how much can you grow at? And they basically say, oh, 50% to kar sakte. So actually then you begin to think of what is the role of the organization if people at the front line feel that they can grow at 40-50% a year. Then what is the role of the organization? Our role becomes, the role of leadership becomes, how to enable that growth, right? And I use a story often, Mr. Jaikumar, when I went to my father for advice. When I started Chola, it was my first job as a CEO. So when I went to my father for advice, I said, Appa, what advice do you have to give me? I'm going to go off and, run this company. It's the first time I'm running a company in my life. So I went with a notebook and pen ready to kind of, to take a couple of hours worth of notes. And he goes, the bottleneck of the bottle is always at the top. And that's it. Right? That is his only advice for me. He says, bottleneck of the bottle is always at the top. And it really made me think, right, kind of what is our role as leadership, right? are we going to be a bottleneck towards things, or are we going to let the energy of the organization flow? And so a lot of my direction after that, Mr. Jayakumar, has been just like, how do we let the energy of the organization flow? So one huge element is energy in my mind. The second is, where is that energy focused? So if you begin to think of energy as a vector, I think that the energy needs to be focused on very, very specific objectives that the company needs to have, right? So in Chola, we talked about just how we were going to deliver AUM growth and how we were going to expand our ROA, our pre-tax ROA. And the whole organization was just then focused around those two metrics, right? On delivering one of those two metrics. And everybody in the organization clearly understood that this is the single focus of the organization. So I think once those kinds of norms get established, then developing the rest, developing the culture, developing all of that begins to happen more automatically. So I would say kind of really how to bring that energy and focus in is really the job of senior management and leadership. Yeah, so Mr. Jayakumar, sorry, I can't hear your audio. Sorry, sir, I still can't hear any audio at that end.
This will work? Thank you. Are you able to hear me now? Because last time there was a problem with the mic.
Yes, sir.
Okay, terrific.
Yes, sir.
I mean, you have spoken many times that in business, it's about increasing the addressable market, and more specifically, measuring a division of the company and using the profits from it are entirely different. Just as you think about your route in Chola to 100x in 2030, is it going to come from some new big ideas, or is it about continuing to scale and compounding what you're currently doing, compounding being another favorite word of yours?
Yeah, so when I think of it in Chola, definitely, we started off and we were predominantly in the vehicle finance business. Now, if you just stay in that business and then say that you have to kind of grow at that rate, obviously you're going to reach a point where the market share will be, fairly difficult to maintain to achieve that result, which means you have to expand the market, which we've done in Chola over time by basically continuing to enter new verticals. So, especially as an NBFC, I've always said that you have to think of this as basically, in any business you get into, yields are going to come down, kind of margins are going to come down. So if you have to think of how you're going to achieve a particular result to end customers, I think the only way that can be achieved or attained over time is by thinking of a portfolio view to things, right? Very similar to how, a lot of you like investors kind of take a portfolio view. I feel like that portfolio view is fairly essential in business as well. So when, if we have to maintain a PBT ROA of a particular amount, I know that it's not sustainable in just vehicles over time. So we have to diversify, and we've continuously diversified. I'd say that, so therefore we keep looking at it as different kind of yield curves. And I would say that now internally we have at least like 35 to 40 yield curves that we look at to see what businesses that will help us continue to scale and achieve that PBT ROA over the next 10 years.
Thank you. One specific, topic-focused question.
So again, you've got to bring back the mic.
I somehow don't like using mic, so maybe I should just stand there. It's much easier. Now, I was just talking about, the role in the scope in renewable financing. And generally, it's been a little slack. Just coming down to commercial vehicle, there are a lot of concerns. No clear resale value. How will battery on a rechange would be priced, etc. And therefore, it reflects in lower LTV and higher pricing. And for you, this mobility is a very important part of your overall stream of thoughts, a personal passion of yours. How do you see some kind of a breakthrough happening? It's kind of getting into product in finance, may not be, it's something more specific, but I just thought if you had any ideas around that.
Yeah, I think that if you look at it, some of these curves have always been slow in terms of adoption. And the kinds of businesses that you're going to see in the renewable space that will adopt earlier are going to be where customers basically see, better TCO and better real value. I mean, I fundamentally think that though we talk about, renewable and green and all of these things, the Indian customer is always very discerning. They want returns, otherwise they don't get into something, right? So I don't think, in any situation, just the allure of green or renewable is going to get customers in. But what is good and what is attractive is that we are seeing situations where there is real economic benefit from going to electric. And I think that that's going to drive the change. I see that change beginning to happen already. It's beginning to happen in certain segments. And I really feel like once this change happens, it will be like a Jeffrey Moore crossing the chasm moment where India will not turn back. And that's already beginning to happen in some segments.
Thank you. We now move to CG Power, the other great story. So it's not long time back, November 2020, you had acquired the company. The company had all the elements that would frighten any investor. Extremely unreliable finance, negative growth, large cash losses, troubled relationship with bank, morale issues, unquantified tax liability, and regulatory investigation for fraud. That would dissuade the bravest of people. What was so unique about CG Power that lured you, and the thesis behind investing in CG Power and taking this big jump of faith, if I may say so?
Yeah. No, thank you, Mr. Jaykumar. So actually, I would say that, that there is nothing unique in what I knew. I knew what everybody else did, right? And ironically, the way we even got interested in CG Power is because they would keep showing up. In Shanti Gears, which is a subsidiary of TI, we always had our monthly reviews. This company would keep showing up on receivables because, we weren't getting paid by them. So I used to keep asking our guys, what's going on with this company? Why are they not paying us? And a lot of our team said, no, sir, they're a good company, but there seems to be some issues inside. And I remember in August, August 2019 is when this VESH report came out in public, and it kind of talked about, how a lot of money had been taken out of the company. And that got me interested, right? So I don't think I had any information that anybody else did not have. But the interest was driven from the fact that it was a very strong brand. It had, a great reputation in the country before these events. So I would say kind of as a brand, it had a great reputation in the country. And the products were well known and won well-established markets. So I would say that I would say kind of, so what allowed us to do it is actually something different, right? So first is, some assessment of how do you contain the risk, right? How do you ensure that, you're not going to basically lose massive amounts of money? And the second is kind of, I think it comes back to fundamentals in decision-making itself, right? I think in, I'll jump to a yoga analogy because, I feel like it's fairly apt in this situation. I think that in yoga, everybody has, in the yogic system, everybody has what's known as the Ida and the Pingala, which is representative of the human feminine, the Ida, and the human masculine. And the human masculine is represented by, data, rationality, analytics, kind of making choices in a particular kind of way. And the Ida is much more about intuition and instinct. And actually the intuition, I would say, is a far higher form of intelligence than just rationality and analytics, because it's fundamentally more restrictive in the way it thinks. But one of the objectives in yoga is kind of for energy to travel up the central channel of the Sushumna, which was achieved by a perfect marriage of the Ida and the Pingala. So you basically take. So what you want to do, and even if you think of Ardhanari or any representation in Hindu mythology, it's about a perfect marriage between this masculine side and the feminine side, which all exists in both of us. And I think that the most, good leaders have that ability to marry the analytic side and the rational side with this intuition, right? And intuitively, when I spoke to customers, when I spoke to some of the employees, it just felt like this was a good company to go after because it had all the makings of a really strong company. So though, like you said, a lot of the data didn't support it, intuitively, I think that part was very, very obvious, right? That is one huge element that gave us the comfort. Another element that I would say that's an important characteristic to think of, and we can talk about it more when we go into the personal side, is that I would say that what stops us from doing these things sometimes is fear, right? Fear of the unknown, fear of kind of, and that's where I would say definitely for me personally, kind of the yoga and the yogic practices have definitely helped reduce that element to a substantial extent, right? I mean, how I would feel about making decisions in the past versus now, I feel a lot more comfortable because there's a lot less fear in the system. And I think overall, that's a good thing because I don't see fear as a very positive emotion at all.
You actually make it look much more simpler than what it was. I think, in my view, there was a very high quality of governance, a methodical pursuit and resolution of all issues, and just liberating the organization to growth. But it was a lot of eye for detail, a lot of hard work every day. So I think it's a remarkable story, and something you should write a book on at some point of time.
Yeah. So, Mr. Jaikumar, just to your point, I think the point you're talking about is how the turnaround was done. I think the first question was more on the decision itself, right? What made us take the decision? So my answer was more, my response was more on what made us take the decision.
So let me come to the
on the
second
turnaround
question.
itself.
Yeah. So
Sorry?
I said, let's get to the second question, how the turnaround itself was completed. Yeah, the how of it.
No, and from that perspective, you're right. Actually, one of the, Mr. N. Srinivasan, who came in, who we brought in as CEO to turn it around, who had been group CFO with us, I would say he was very pivotal in basically helping and in pretty much driving the whole turnaround. And like you said, what he brought to the table was a very high level of governance, right? We basically started working on basically how to get, a lot of it was just kind of getting, a lot of the effort he did in terms of getting the employees kind of get much more engaged with the company, getting the assurances back to customers. A lot of what I would say is kind of the basic blocking and tackling and fixing a lot of the issues of the company. Like you rightly said, there were so many legal issues that had to get fixed, so many financial issues. So a lot of diligence and focus and I would say hard work on that helped drive the turnaround. And then again, bringing back that same energy and focus that we talked about. We used 4 financial metrics to keep people focused on what we were trying to achieve, generated a lot of the energy in the organization. And so between those themes, that's really what helped drive the turnaround after that.
I think another contributing area on which you could, probably an authority you could speak on, is being passionate about Kaizen, AI, digitization, broadly described as manufacturing 4.0. Your thoughts on this and its application not only in CG but across the Murugappa Group companies to the extent you can share.
So, so one of the companies that I have a lot of respect for is a company that I've actually tracked since 1995. It's a company called Danaher, which I think a lot of the investors in the room will likely know. They're basically a US-based company that was started by the Rails brothers. And they've been actually phenomenal in terms of the results that they've basically produced for investors over time. And I think their market cap is well north of like 250 billion now. But, it's an interesting story in terms of how the Rails brothers got started. They had actually engaged, so they were actually bankers and they had engaged a consultant, a Japanese consultant, to go and look at one of the manufacturing companies that they were looking at buying. And so they sent the consultant to the plant. The consultant comes back And so the Rails brothers asked him, what did you think? What did you think of the company? And he actually said, so the consultant said, there was no company there, right? And so the Rails brothers were quite confused. They said, no, of course, we sent you to the company. He said, no, what we saw there was just a warehouse. There's only inventory there. There's no company. And, the Japanese have always been fundamental in terms of how they've looked at lean and lean transformations and lean manufacturing. And like a lot of that thought kind of originated from Toyota. So what we've done across companies, across TI, CG, and Chola, and as a matter of fact, it's been quite interesting to kind of see how they work at Chola, is work with the same lean consultant that Danaher did and continues to do, as a matter of fact. And we work with them to really understand what the opportunities are in each of our companies. I would say for the most part, they actually are much more kind of focused on not as much on what I would call Industry 4.0, but on just lean techniques. And a lot of the lean techniques are just very focused on making you understand how much waste you have in your system and eliminating that waste. And it's interesting because, Mr. Jayakumar, some of the thinking also spills over into capital allocation, into several other areas, right? I mean, so a lot of what they look at is saying, why do you need a plant that's so big? Right? So when people say, I need a double capacity, they naturally feel like you need to build another plant. And the first thing they do is saying, why can't you operate your plant in half the space? And that way they basically get a second plant to fit in the same physical plant that you have. So a lot of the concepts have been very, very interesting to work with. I would say we are now about 3 to 4 years within that journey, but we're still in kindergarten, right? The opportunity to learn with them and how much we can learn with them, I'd say is truly phenomenal.
The other thing is more structural, as we see in the country. In the segments you operate, significant growth. Large order book, probably the next 3 years is sold out. In circumstances, how do you sort of expand and scale the business so that the order book can be served earlier? And that would mean a general improvement across margin, and even for the customers getting their work done. And yet we have a lot of constraints, just getting land, getting permissions, getting a lot of these things are very challenging. Just your thoughts on that, and what would you advise?
Yeah, I would say, I would say that way, we still, India, I feel still as a country has to learn a lot, right? The rate at which we can get new facilities up, I would say we're probably operating at 1/3 the speed of countries like China. They've really mastered the speed at which new facilities can be brought up, new capacity can be added, and the scale at which new capacity can be added. And I think that fundamentally there, India still has a lot of room to grow. Are we looking at adding capacity on transformers, on switchgears? Yes, we are. But like you said, just the systems and some of the things that are required to kind of get businesses up or get new plants up in India definitely kind of slow down the system. So, and the rate at which we can even get, construction in India, I would say, is still only at about half the speed at which China does it today. So there's definitely a lot for us to learn on that front.
So in the earlier section, there was a discussion around strategic autonomy, and I thought we could use that to move into the expansion of CG Power. The investment in semiconductor business, 7,000 crores of capital allocated to construct in Gujarat Sanand a new OSAT facility, and an acquisition with $36 million of radio frequency component of Renesas Electronic, getting you into the design space. So in the semiconductor sector, you're working on OSAT as well as a design, leaving aside fab, right? And then, of course, the products and so on. So the question is really about what makes you focus on these two areas of semiconductor, and broadly, in the context of the discussion just before, where is the competitive play for India and where is the opportunity for India in semiconductor space?
So first off, I would definitely say, Mr. Jaikumar, the biggest opportunity for India lies in the design space, right? India has 20% of the world's semiconductor design engineers, right? Pretty much any large fabless house or IDM. So the way the semiconductor industry is structured is that you have people who are pure design companies, and they're called the fabless design houses. And then you have IDMs who are fully integrated. So that means that they do design, they will do fabs, and they will do packaging after that as well. But if you take any large fab or IDM, the general names that come to mind are always like Broadcom, Qualcomm on the fabless side, Texas Instruments, Analog Devices, Intel, NXP, Infineon. Any one of these companies basically has over, I would say, at least 3,000 people, 3,000 of their design engineers sitting in India, right? In this construct that we call, like the GCCs, right? The biggest challenge I feel is that in those situations, all the IP is owned by those parent companies outside India, right? And so what happens is the GCCs, India, what benefit does India get from them? We get maybe a 10% or 15% markup on our people and the salaries of those people. But then what happens is the IP resides outside India, and these products can have a gross margin of anywhere between 60 and 70%. And then we need to buy the chips from those same people, and then in effect kind of pay a very high margin for it, right? I mean, we basically end up paying very high cost for it. So what we need to think of really is how is India going to break out of this structure, right? When we have so many design engineers here, and what's interesting is China has 28% of the world's design engineers, but almost all of them design for Chinese companies, right? To a point where China is getting more IP in the world of semiconductors and generating new IP in the world of semiconductors than any other country in the world. I think that's a model that India has to learn from. Unless we start generating our own IP, and I think the previous speaker was alluding to some of this, and generating ourselves, I don't think we'll be able to break out of this loop, right? And I genuinely think that that's why for us, the design side becomes extremely important. It's not going to be easy to fight with any of these players. Ironically, with our acquisition, we're theoretically the largest design company in India today, but we're peanuts in terms of revenues. And what we have to start thinking of as a country is how we will develop our own design capabilities so that really we can use the talent that exists in India. And all this talent exists in India today. We have to use that talent to generate products and services that the world will demand from us. And that has to be a journey that India goes on. When you talk about the OSAT and the fab, obviously we can't do this as purely fabless and depending on other countries, for everything else. So some investment is necessary for these design houses. We choose to take the OSAT and the packaging route, and Tata has kind of taken both, fab and packaging. So setting up that basic capacity is going to be required in India today, both to serve India's needs, but then hopefully over time to begin to serve some of the other countries in the world as well.
That's what was discussed in the last session, that what really matters is around building the ecosystem for the semiconductor or any other industry, and in which case the growth factor tends to. But just getting into a little bit more specific, how much do you think semiconductor and this space would contribute to the broader CG growth story? Would you see it bypassing the existing set of businesses you have over the next 5 to 10 years? How do you see this whole thing playing out?
So it's interesting, Mr. Jaikumar, because I actually feel like we alone cannot address it, right? Every time I've been in any forum, also when we talk to the government, the one thing I keep saying is that it can't just be us, right? Like you said, the whole ecosystem has to develop. The whole ecosystem only develops if many players get into this space, right? I think the broad recognition, and if you generally see what's been going out, even in media over the last month and a half, is that there's a lot of thinking about how India needs to kind of get more into products. India needs to develop IP for itself. And I'm really glad that change is beginning to happen in the country. But honestly, how large CG becomes in this space depends on how large the entire ecosystem becomes, right? Because if it's only us going at it, I would say it would not be a significant part of CG's revenues. So strangely, I would say the only way it can become a really significant part of CG's revenues is if multiple players join into this business. So actually, it's almost like inviting competition. Anytime I get an opportunity, it's saying, you know, we need 10 other people to come into the design space. We need 10 other people to enter kind of, you know, whether it's fabs or OSATs. But especially in the design space, I would say that we need at least, you know, like 40 or 50 other companies to enter this space. If more companies enter this space, then I actually believe that it will be the largest part of CG's revenues going forward, right? If nobody enters this space, I think that's going to be a problem for the country. And why we need to think of it as a problem for the country is because semiconductors are also the core of the entire electronics ecosystem, right? So when now, you know, we've been talking about how many iPhones are assembled in India, but right now they're just assembled, right? The entire components ecosystem is still not developed in the country. And for the component ecosystem to develop, the core of that are chips and semiconductors, right? So EMS and assembly without the components, I don't think is going to help India, right? So I actually feel like it's very core to India's development in a lot of ways. But to your question, I think it can be the largest part of our revenue, provided we get another 30, 40 people who jump into the space as well.
Let's hope that happens. The last question, on continuing with CG Power, is around recent acquisition you did, just the structure of it. A 55% stake in a company called GC Tronics, building embedded safety system for rail transportation. The remaining 45% being with the entrepreneur who started the company. Now, both the expectation in terms of the segment, as well as is it going to be a good and a continuing operating model for you in terms of meeting entrepreneurs who are small in size, good promise, as you say, engineering talent. I saw GC Tronics has over 80 people working in R&D, for example. And then use that as a mechanism to kind of move forward, but give the strength of the organization, which becomes a strong tailwind for growth of that company. Just wanted you to talk about that in both the context of the opportunity as well as the approach you're taking. And is this something that you're going to template going forward?
Absolutely, Mr. Jayakumar. I think it's a great model. You know, the one thing I see is that in a lot of structures where if you take too large a share of the company, then the entrepreneur gets disenfranchised and they're just looking for a quick exit and looking for kind of, you know, the fastest way out of the door. And actually what we need to do is help, you know, because what I also see is there are a lot of SME entrepreneurs who are also capital starved, right? Kind of the biggest thing, if you take, you know, GG Tronics, for example, what GG Tronics is one of the 4 companies that are qualified to make Kavach. Kavach is the train collision avoidance system, which I think is going to be fundamental. As you know, India, unfortunately, over the last couple of years has had like an unfair amount of train collisions that have cost lives, right? And the train collision avoidance system that India has developed is actually almost 1/10 the cost of the European standard, right? Europe has a standard for train collision avoidance. Had we implemented that standard, it would cost us 10x what it's going to cost us if we implement in India. So I would say what's really amazing is that we have a system that's been developed in India that is as effective as any global system at 1/10 the price point, right? It's been developed like that because it's been developed by basically engineers, like the one, like we are back, like Mr. Manjunath, we'll be back at GG Tronics. And I genuinely believe that somebody like that requires kind of capital to let their entrepreneurial capability flow. And what the railways needs is basically a partner that is well kind of backed from a capital perspective, because four companies have to implement this across the entire Indian rail system. So if you take a combination of those two things, I definitely think that this structure is a good one. And it's something that I'm very keen kind of to do where kind of the opportunity presents itself. So definitely we think that that's a good model to go with.
The other area of, of allocating capital, not necessarily from CG Power, but the group as a whole, has been the mobility business, the EV space in particular. How do you see that developing, particularly with commercial vehicles? Is this something that is going to rapidly move up? And how are you thinking in terms of more investment? And also, are there going to be different delivery models that are going to come, service model that's probably going to give you more tailwind in terms of growth?
Yeah. So that's a classic business where I think it's very difficult to predict, when we will shift in a big way. But if I were to look at a country, and take a long-term horizon for it, it is going to shift, right? So basically, the rate of shift is already, I would say, beginning to happen in some segments faster than others. And I would say that the shift is going to happen in other segments. But if we think of it long term, India is going to move predominantly electric. We have to, because it's the largest item on our import bill. I see, automotive, both commercial and passenger, are basically the largest consuming elements of oil in the country. So it's a definite shift that's going to happen. So our approach to it is we're taking kind of a longer term approach where we see the opportunity. We've gotten into a set of segments and we see those segments so it's very difficult to predict exactly when the segments would change, but we think that over the long term we see that happening. So it's definitely something that we see a lot of opportunity in, which is why we're taking that view.
So one last question in terms of the product, and then some summing up, because we are another 23 minutes to go, some 10 minutes for Q&A. Investment in medical device business that you've done recently, and your own views on whether this is another area that India can build an ecosystem to reduce the dependence on import across a range of medical equipments that are there, and could we also become an export hub, and how are you thinking about it, both from your company's perspective and the industry perspective?
So definitely, Mr. Jayakumar. So healthcare has to be a space that India has to invest significantly in, right? If we look at the US, for example, healthcare is 17 to 18% of GDP. Even places like China have already gone to 8%. India is somewhere at like 2.5%, right? And as affluence in the country in general develops, right, healthcare is going to be a segment that is going to consume a lot of it. Now, our strengths are more on the manufacturing side, so we don't see ourselves becoming getting into hospitals or kind of providing that kind of healthcare service delivery. But when you think of healthcare equipment, it's actually really unfortunate that 75 years after independence, we're still almost fully dependent on players from outside. We pretty much import everything. And again, kind of the parallel is China, where they've basically developed a lot of equipment indigenously, so they've really got off that dependence on foreign players. I think this is something that's really critical for India to do, because we cannot afford both medical equipment and medical consumables at the price points of the West. Even if you take something as basic as sutures, the largest provider in India is still Johnson & Johnson. Yeah. So we have to think of ways in which we can get an Indian supply chain for this. And I really feel like this is something that's critical. So that is a sector that we see as a significant opportunity if we take a 25, 30-year horizon, which is what we do for most of the investments. Most of the segments that we look at, because we want to ensure that they're basically there over that time frame and continue to grow. So we definitely see this as a huge opportunity. I would say across medical equipment and medical devices and medical consumables, this is a segment that we want to focus on because we see a significant opportunity in it.
One question some of the people in the audience would be interested to know is that you're partnered with private equity investment, not private equity companies, notwithstanding the fact you're a listed entity with an access to the public market. What would be the rationale, and how do you think about it going forward? Because After all, your current stock is a currency. And yet you work closely with many private equity firm, multiples, Premji, and so on.
Yeah, absolutely. I think that, honestly, these are great partnerships in India, right? Because we have a lot of, private equity players who both kind of, domestic and international, that are really focused on the growth of, businesses in India, right? And I think that I've taken, private equity at least, I would say 9 or 10 times already. And to me, they've brought much more than just financing to the table, right? I would say that the good thing is that they bring an independent lens and they're a thought partner, right? Kind of I would say from all the people I've raised money from, they've really helped me being a thought partner in the business, helping guide and steer the business with me. And I would say that that really is true in the kinds of people who are in the PE space in India. So I really value that. So I would say kind of one is getting the financial investment, but more than that, having this level of thought partnership, I think helps me significantly in forming my own views, right? Because otherwise you tend to get, either you tend to make kind of mistakes if you're kind of too individualistic in your thinking, or in some cases, you just honestly need a thought partner. I mean, it's quite, I keep saying it's quite lonely actually to be a CEO, right? Because, you don't know who to go to at times to kind of talk to people about things. And I think that they're very useful, bouncing boards from that perspective as well.
One area that you and Madhu are very interested, involved is Isha Foundation. And you have described it as the best university. Just some thoughts on how it has impacted you, as well as how you are evangelizing the process of inner engineering, as you call it, amongst the group of your colleagues and the levels down. Some thoughts on that.
Yeah, so no, to me, I would actually say that yoga in itself is probably an incredible technology. It is a truly phenomenal technology, and I view it as nothing short of just incredibly advanced levels of science and technology, right? Basically, what yogis figured out sitting in caves, 10,000 years ago, is that it's possible for the human to basically fully re-engineer themselves or redesign themselves using yogic techniques, right? And this is a combination of asana, pranayam, meditation, all which form a part of yoga. So I got on this journey, so by the way, I tried yoga. I did yoga when I was a kid, when I was asthmatic, and it helped me kind of cure my asthma. And I went to the US and I practiced yoga there. US yoga is very different. It's fully focused on asana and the physical aspects of it. And then I now come back and, now I see, yoga the way Patanjali described it, which is, it's a full science, right? It's a full way, and yoga by itself just means union, right? Getting into union with, the universal consciousness, or however you want to define it. But to me, what I've seen, Mr. Jaikumar, is that it's just a technology. It's a technology that's available to all of us, right? And once you start using it, you start seeing a level of change in yourself, what I would call evolution, right? It's basically you start seeing yourself evolve into, and it's very Darwinian in a way, right? Basically, what Darwin established is that the fundamental reason we're on the planet is to evolve, right? And that's why we're here. And so we look at it from that perspective. I don't think there's any better technology on how to evolve than yoga. So to me, it's really been something that I've seen has helped me immensely. And I would actually say that it's helped me immensely at work, right? The kind of person I am, and what I've seen myself, the change that I've observed in myself, I would say basically brings about a level of change that I genuinely don't think it's possible any other way, right? And so when you see that capability kind of come up in yourself, it's something that, you really want to kind of enhance. So I always kind of refer to it as a drug I can't get off of because it helps me immensely. And so it's something that I'm very conscious of in terms of both the practices I keep and ensuring that I get enough time off the year where I go off, and dedicate to just the practice in terms of silence and kind of being in the ashram and kind of focusing on my own development from that perspective. So, Mr. Jaikumar, the way I've always referred to it is that the only way that we can get companies to compound is if we compound ourselves, right? And so we've got to fundamentally think if we want the companies to compound at 26% a year, then you have to think of what you're doing to compound yourself at 26% a year, right? And so that's the only way I look at it and say that, so it's something that I totally feel I need to do if I have to kind of keep the organizations growing, that I need to basically be able to improve myself and improve the person I am. And I would still say that I'm still in kindergarten from that perspective, so I know I have a lot to improve on.
And how are your colleagues taken to this adoption? You see that same trend happening? It's a little bit more lukewarm, more enthusiastic. Did you hear me? Or should I repeat? I was asking how are your colleagues taken in terms of adopting the same thing? Because you do evangelize the process, and is it something that is getting acceptability to the point it's beginning to make an impact for you from an organizational perspective?
Absolutely. I think that there are two aspects to this, right? One is that, I don't think that these are kinds of things that you can mandate in companies, right? Basically, people have to see that it is a thing that is benefiting. And so that's something that we've done across basically both, especially in Chola and kind of, a lot of the in TI and CG as well, where I do see a lot of other people getting involved with it. But it's not something that we mandate in the organization, right? So basically, I think people have to see that other people are benefiting from it, and it's something that has to spread from a word of mouth perspective. But I would say that the one thing that is quite important is that I see this becoming more acceptable in India in general now, right? Previously, we would always separate, and I think kind of isolating spirituality, isolating yoga, I don't think we should. I think it's, as a culture, it's something we should be proud of. I think we should embrace, and I'm happy to embrace it personally. So it's something that I'm quite excited about.
So one last question before we go to Q&A. We heard a lot of your, before that, let me share with the audience, when I attend the board meetings, between the end of the meeting and the lunch, there's probably a 45-minute space. And Mr. Vellayan is not available, and I understand he's meditating, which is why I seem absolutely unflappable under all circumstances, some level of calmness and, clarity in thinking. So I think it's working. And I told him I've heard from you 22 years later, because he started with Isha 22 years before, and I wish I had done that. Anyway, the last question to you. We heard a lot about your success, right? It's there everywhere. Any failure, any learnings from that? And then we have about 8-9 minutes for Q&A.
Yeah, so definitely, Mr. Jaikumar, I would say that there's no shortage of failures. I think that, I keep saying that, if you take across from Chola, I remember, Chola, I had an idea, right? And I wanted to implement it, right? Pretty much, I'd say, within 3 months of me getting there. And everybody called it the MD project because I just become the MD. And I always say that, an MD project by definition is going to be a disaster or a failure, right? Because as senior people, our job is actually to listen to the people who interact with customers. I say I never originated alone, I never collected, I never underwrote alone. So who the heck am I to come up with, what should be a successful project for the company, right? And so that MD project was a total disaster, as of a lot of other projects kind of that I've come up with since in the past, since then. But I feel like, our basic role really becomes how we listen to ideas, collect ideas that come from the organization, from people who are closer to customers, from people who are much closer to the ground, to the front line, and enabling those ideas to happen. Just being a support channel that enables those ideas to happen. So I would say that's basically what I've learned, not to come up with a lot of ideas on my own, because most of those will end up being disasters.
You're being very humble. So we just come to the end of the discussion in terms of Q&A, but there is 10 minutes set aside for questions from the audience. So may I request the mic be passed around, and we can take a few questions.
Vellayan, good afternoon, and thank you so much for joining. This means a lot to us. You sparing time. I know that you are in important meetings, and you made time for us in between your meetings. Thank you so much. And you very lightly touched upon your evolution in terms of who you are. And I think I personally have seen you over years. Your corporate success and financial success is a derivative of who you are as a person. Can you elaborate a little more on, what the process was like, how you started, how much time did you devote, what was the inflection point, what all do you do today? So a lot of people who are here can possibly get inspiration. It is never too late to start in life.
Yeah, absolutely. No, thanks, Madhu, and thanks for having me, Madhu. So I would say that when we returned from the United States, actually, is when I just come back to India, and so what got me into this was actually my wife wanted to go to the program. So the Isha starts with the first program called Inner Engineering, and my wife wanted to go to it, and that it happened that year Sadhguru was kind of teaching it. It was called Inner Way. So she wanted to go to it. So I tried my level best to dissuade her from doing it. I said, this is a horrible idea. Don't go to kind of any of these yoga places and these ashrams. You don't know what you get into there. So it's probably something that you might want to stay away from. But most of us, our spouses tend to be stronger than us. So so she just said, forget it. I'm going to this program. And she called from there, 2 days into the program, and said, this is really interesting. It's different from anything that that you would have your perception of it, and just come. So I just figured, she's kind of really feeling so strongly about it. It was 4 days. How bad of an investment can it be? So ROI can't be kind of too low. So I said, okay, I'll sign up. It was like a Thursday, Friday, Saturday, Sunday. And I went to it. So the first step is really basically you start with this program called Inner Engineering, which teaches you a simple kind of practice, right, a yogic practice that you do. And I would say, Madhu, coming back, the first thing they say is just kind of do that practice, for 6 months, right, and then see if you actually benefit from it at all, and then it's your call whether you want to, to follow it or not. And I would say that it became fairly clear to me, even before the 6 months that that the benefits of something like this are just quite fantastic, right? Just in terms of, like Mr. Jayakumar said, just like you're just on all the time, right? First off, you'll see just your energy levels, your ability to focus goes up tremendously, right? One of the things I look at is this thing I call signal to noise ratio, right? Which is in our decision making, we often tend to collect a lot of facts which are just noise, right? Only less than, I would say it's almost like a 10-90 rule. It's not even an 80-20 rule. It's like a 90-10 rule. Just 10% of the data that you collect is necessary to make an effective decision. But yet we kind of usually tend to collect just much more data than is needed. And that's all because, of the way the mind works, right? And what you begin to see is if you can just kind of quieten it down, right? It will really be able to tell you what is the 10% that is necessary. Right. And, when I talked earlier about kind of intuition and kind of rationality, the system just starts quietening down to a point where it is able to tell you that. Right. And then you basically say, OK, now I'm comfortable. OK. And so, and by the way, I mean, again, we don't have that much time, Madhu, but it's broken down into, what's called the physical
we have
body,
enough time, don't worry.
the mental body.
Vellayan, we have enough time for you, don't worry. Please go on.
I know. Yeah. But Madhu, I also have a constraint on my end, so, but, so you have the physical body, the mental body, the emotional body. I know. The physical body, the mental body, the emotional body, the energy body. And what you have to realize is that you have to get all bodies down to a level where they're performing at an optimal state, right? The energy body has to do with your prana and the way it flows through you. The emotional body is how balanced your emotions are. So if you see people who are very good, but their emotions are unbalanced, right? I mean, if you think of evolution, that was what, Parsurama was, right? He was a person who was very evolved, but emotions were not as kind of firmly rooted, right? But you have to evolve beyond that structure because you can't kind of be an effective leader without that. So how to advance each of these 4 bodies is something that I think is so well studied in yoga. And it's just a pure science. I mean, that's why I keep kind of saying it's the best university. Because like you learn science in IIT, I would say that this is just a very much more advanced and evolved science that you can just get to through practice. And that's something that I've just personally observed. So since then, obviously, I've done all of the programs that they teach Grihas at Isha. I would say that, still today, I mean, I would do like 3 hours of sadhana every day, wherever I am. Kind of that's something that I've committed to. And twice a year, I take 10 days off and I go into silence in the ashram. And then that is like 14 hours of sadhana, 12 to 14 hours of sadhana every day. But, over the last, I would say at least 8 years, that's been a discipline for me that I cannot kind of stop or get off. Because honestly, like I said, I can still see that I'm in kindergarten and I'm still kind of improving from that perspective.
Jayakumar, if I can ask one more question.
Please, we have 3 minutes time. Something that can be concluded
We have one
in
more.
3 minutes.
We have time for one more question, Vellayan?
Yeah, sure. The last question, if it's okay.
You have, I think knowing you for so many years has been actually a matter of pride for me personally. Can you just enlighten each one of us that, you figured out in life what not to do, then what to do became very easy. So if you can run us a list of what you figured out, right, what not to do.
Yeah. No, Madhu, I would actually say again, right, first off, I can't enlighten you. I mean, I'm not even half as enlightened as half of you in the room, so I'm the wrong one to do that. But again, I would say that the central thing for me, again, in this process is if you just follow the practice, what I've learned from yoga is if you just follow the practice, other things follow naturally, right? When I talked about energy and focus, it's a very simple thing, right? If you have a finite amount of energy and you focus it on 30 different things, right? Then in effect, the amount of energy that's dedicated to each thing is limited. But if you take that same finite amount of energy and focus it on 3 things, obviously it's going to be much higher, right? And it's not a finite amount of energy. So the first thing you notice is that the amount of energy itself will keep going up. You can keep increasing the voltage, you can keep increasing the wattage. So the way yoga works is you can keep increasing your own wattage over time. How much power you have, how much energy you have, you can keep increasing over time. But the second thing that happens is that most things that are noise just keep falling away. So your interest in those things itself will go away because you will know that they are noise, right? So, and your interest will just keep going away. So you just keep getting more focused on only the things that basically matter for your own evolution, for your own this thing, right? So that's just a pattern that I've really noticed over time, right? So a lot of things that kind of would interest other people, will just go away because you will see that it's not an energy generating process. You see that certain processes are energy generating and your affinity will get drawn more towards those things, right? And so just simple things like that, right, will just keep dropping off. And you just see that happening as a natural process itself.
Thank you. We have come to the end. Any question? No. So I think it is a good session. We could cover Mr. Vellayan's existing business, his thoughts around where he wants to go in terms of new emerging businesses. And last but not the least, the personal aspect, the individual growth, which is so useful for all of us. And that's a kind of a precondition of our growth. But for some of you in the private equity business, there's two key takeaways. One, he's interested in engineering companies, so if you have some of them at the right stage, right place to go to sell, right? And you would continue to leave the entrepreneurs with a reasonable stake, so you have a continued involvement on the thing. That's on a lighter note. Thank you very much.
Thank you. Thank you so much. Namaskaram. Namaste.
But that was inspiring beyond words, and I'm sure you would all agree with me on that. We wish to thank Mr. Velayan Subbiah for being part of the session despite his international travel. And also a big thank you to Mr. Jayakumar for moderating such an interesting fireside. We request you to accept a token of our gratitude on behalf of Singularity. May we have Mr. Yash Kela to do the honors, please. We will now break for lunch and we will resume the session by 2 p.m. sharp. We understand that most delegates and guests have flights to catch, and we would appreciate if you could be back in time. 2 p.m. for the post-lunch session. Our first session after lunch will be with Mr. Sunil Vachani on the Dixon story. Thank you. Ladies and gentlemen, the post-lunch session will be resuming in 2 minutes. We request you to please take your seats and be ready for an amazing session. Thank you. Welcome back to Singularity Summit 2025, the post-lunch session. We request you to settle down in your seats as the presentation is about to begin. We have some presentations by some of the Singularity portfolio companies. Up first, we have a portfolio showcase of Zota Health, with Mr. Himanshu Zota, promoter of Zota Healthcare Limited, with over 30 years of experience in the pharmaceutical industry. He was instrumental in making Zota Healthcare Limited one of the fastest growing companies in the pharmacy retail sector, and has played a vital role in implementation of the group's first of its kind 100% private label generics only pharmacy retail chain, Dava India. We also invite Dr. Sujit Paul, CEO of Zota's generic pharmacy retail chain Dava India. He carries over 20 plus years of experience across multinational large firms such as Reliance Retail, Columbia Asia Hospitals, and Apollo Pharmacy.
Namaste to all of you, and thank you for having us here. For any country to grow, there are only two things that actually matters, out of which one is education and the other is healthcare. These are the only two things across the world indexes, if you see and study. Only education and healthcare can actually make a nation grow, and I hope all of you agree. But today I would speak more on healthcare for all of us to understand, sensitize, and take a takeaway as to where we actually lie in India. Whilst I speak, and we work very extensively in the villages of country, we find today that there is an increased rise of actual diabetic and cardiac patients across the country. And when this kind of increased rise of diabetes, cardiac, obs, gynae, peds, nephro happens, the truth is that the actual Indian patients or consumers cannot afford expensive branded medicines. And that's the story that we would be unfolding to all of you to understand what India truly needs today. What are those businesses and those entrepreneurship models that should actually unfold for all of us to have a better India? As we work in the extreme depth of rural and urban, we find that mothers cannot afford medicines even when their children cry. And that's the true and reality. Maybe in this air-conditioned room, we may not be understanding that. But since we work in depth, we know that if any business that is actually required for the growth of India today, that is the fundamentals bridge of healthcare that is needed for the country. When a patient is actually prescribed medicines, we find that the patient breaks the pills and does not take a morning, afternoon, evening, night, and he or she takes morning, night, just because he cannot afford those medicines. And that's true India where we stand at this point of time. Ladies and gentlemen, I think it's time for all of us to awaken and make each one of us understand that what is it that each one of us are doing to contribute that India that would make India truly proud. Or are we really only thinking about a large-scale top-line business? A large-scale value-based top-line business can only happen if we can build that India that can actually promote a good healthcare for all of us, and that's what Dava India comes into action. We at Dava India, we work relentlessly in the rural villages, in the urban, with the Gram Panchayats, so on and so forth, to ensure that with the deep penetration network that we build across the country and the channels that we build an India where India can actually afford great affordable medicines and of a very, very high quality. That's what we do. It's a very, very tall task. When you really work in the extreme interiors of the villages with those people who really cannot afford, and when a Dava India strip actually is handed over to them, then they understand that if someone is really diabetic and they cannot afford 6,000 to 7,000 rupees a month, there is where you can actually work towards optimizing the costs of less than 70% and giving the similar high-quality medicines to them. That's what India needs. And when that translates into a high-end business vertical, then a complete revolution happens for India. I would not speak much, but with that, I would like to showcase to you a small video so that you understand we as an organization, what we are driving, delivering, and working towards building a better India for all of us. Jai Hind.
Dava India is India's fastest growing generic pharmacy retail chain, revolutionizing the healthcare industry with affordable, accessible, and quality healthcare solutions. Dava India offers 2,000 plus SKUs with exclusive focus on medicinal OTC, Ayurvedic, cosmetic, and nutraceutical products. We are India's only pharmacy chain which offers 100% private label products. Dava India is a brand of Zota Healthcare Limited, which has established its significant footprints in the Indian healthcare sector since its inception in 2000. It is promoted and managed by promoters with 35 plus years of pharma experience and is professionally driven by a group CEO having vast experience in pharma retail. Dava India launched in 2018 with franchisee-owned, franchisee-operated FOFO model and further expanded its reach through the launch of company-owned, company-operated COCO model in the year 2021. As on 31st March 2025, it has built an extensive network of 1,582 stores with a blend of 852 COCO stores and 730 FOFO stores spread over 26 states and 2 union territories of India. As of now, at every 10 hours, Dava India is opening one pharmacy store. Apart from expanding its retail footprints, Dava India is also playing an instrumental role in employment generation, employing a team of 3,000 plus employees and creating one employment at every 5 hours in India. At present, we are serving more than 11 lakh customers per month. We have launched Dava India online B2C portal and app with the aim to provide the consumers access to essential medicines by offering seamless and convenient solutions for doorstep delivery. This e-commerce platform is launched as a hyper-local model wherein the COCO retail outlets will serve as fulfillment centers, ensuring swift and efficient order processing and delivery. Under B2C portal and app, we are now live across 1700 plus pin codes nationwide with 60-minute delivery. For the lightning-fast 60-minute delivery, we have integrated with one of India's largest hyper-local delivery partners. As Dava India continues to grow, the company remains focused on strengthening its direct retail presence and expanding its reach to more customers across India. We at Dava India are committed to provide affordable healthcare solutions to every citizen of India and provide them access to quality generic medicine at 30 to 90% lowered prices as compared to the branded counterparts. Under this initiative, till date, we have saved approximately 2,550 crore rupees of Indian citizens who have chosen quality generic medicines of Dava India.
सर जी मैं तो इन दवाइयों से जेनेटिक दवाई से 100% सेटिस्फाई हूँ।
औरों के मुकाबले आपके एक तो लगभग 70-80% रेट कम है। आजकल ये स्टोर पहले कम थे, अभी जगह खुल गया तो हमें सुविधा भी हो गई है।
At Dava India, our vision is to serve every Indian household with our affordable healthcare solutions, with a key emphasis on reducing monthly medicinal expenses and giving them sustainable relief from the costly medical expenses. At Dava India, you will get quality medicines at affordable prices, because quality healthcare is not just a privilege, it's your right. Dava India, quality medicines at affordable prices.
Namaste and thank you so much for your time. Jai Hind.
Thank you, Mr. Zota. I now invite Mr. Srivatsa Prabhakar, founder and CEO of Servify, a company that is building a product business from India for the world, a company that has consistently impressed its stakeholders by its global execution, from one country in 2020 to 45 plus countries today. The company has posted 3 to 4x growth in revenue in the past 3 years, whilst improving margins, and the only company that has been onboarded by 2 large OEMs, Samsung and Apple, and has 0 customer churn rate. Over to Mr. Srivatsa to give an overview of what he is trying to build at Servify.
Thank you very much, everybody. Thanks, Yash, Mr. Kela, and Singularity platform for giving me this opportunity to present in front of you. I run a boring business, so I hope I do justice after so good, terrific speakers talking about their great businesses. Like they say, we are in a business, in the lending business, they say it's not a business of distribution, but the business of collection. I think we are in the business which is again risk-based, and therefore we call it as the business of selection. Because if we don't choose our customers right, we end up probably losing money, and that's where Servify came into existence. And we are building a business, hopefully, like the Warriors Mr. Hitesh showed, which scales from 100 crores to 10,000 crores in 10 years, and we hope to do that in the next 5 years. So we are today at around 1,000 crores, so we hope to touch 10,000 crores in the next 5 years. So hopefully we'll do justice to what we are doing. You know, I can proudly say most of you are probably my customers without knowing me. If you own a smartphone, and I'm very confident you have either in the past or currently or in the future will experience some intervention from our platform, because we work with almost every single smartphone company in the world, especially in India, all of them except probably feature phones. So the problem for a consumer is the OEMs always provided 1 year of limited warranty, which covers manufacturer's problems, but nothing that's accidental damage or out of warranty, but the customers use it for longer. And they said it's a cost center, it's customers' problem to solve it, let them go anywhere they want. But that opportunity was looked, or at least in the developed markets, were taken by insurers because they said, okay, you can buy an insurance and we will cover all of those with a replacement or a free repair. But our belief was it's okay for automobile because you don't really feel personal about your tires or bumpers or steering or bonnets, right? But if it is your phone where you have your data, your memories, your confidential stuff, do you want, with due respect, let's say you buy an iPhone, you want Allianz to service it? You're okay if they underwrite it, but you still want Apple to service it, right? And that's why we said it's time to bring OEMs in the picture. And this is a large enough opportunity. And we said, how do we really solve it? So that's where we thought, to do this, you have to get a lot of the pieces on a common platform, and it has to be run with customer first rather than risk first. Because customer is buying a service product, expecting certain experiences, and not buying a risk product. It could be the foundation, how you commercially underwrite the risk, but it can't be a risk product customer is buying. And therefore, we said, how do you really manage this? And especially OEMs, especially the large telcos, where the hardware provides very little margin, obviously they understood the value of providing value-added services like this, especially in, again, developed markets. But they all ran it, again, as a risk business. So we said, no, this has to be stitched very well, has to run on a common platform that brings every single ecosystem provider and therefore make value for everybody. And then, of course, like any risk business, it should not be 2% of your risk fraud customers determining experience for the 98% others or their costs. So we said, can we build a platform to therefore work towards 98% of the customers and commercially solve for the 2% customers? And that resulted in getting insurers on a platform, getting contracts and customer transparency on the platform, administering the claims, distributing the product at every sales touch points, because when you're selling this, it's not a physical product. It's not a box that one can move as distribution. It's a digital product. So if the customer is buying an iPhone and buying an Apple Care, just outside of the retail store, if they walk in and the product breaks, you can't say, sir, data nahi hai, or claim nahi de sakte, right? And that's why we said there has to be a lot of deep integration with the product itself. And that's how we built a full stack, which gets not just the ecosystem, but also all those controls to manage fraud or better experiences. So that's what we call it as brand care. And that's powered by Servify. Because we work with the ecosystem and on an asset-light model, we said the OEMs already have their distribution, or retailers already have their promoters on ground. Why should we have our people? So it's sold digitally using our platform, deeply integrated at the point of sale, but without our people. And when it comes to service, it's the same OEMs who have built a supply chain for managing their original warranty. And nobody better than them to really get original parts, get it cheaper, and manage it very well. So we said we outsource the service back to them, but we orchestrate the whole thing. So it's almost like, think of it, how do we really bring value? It's like you want to get, let's say you're sick, you have a stomach ache, and that's a symptom. The customer has a problem, display is not working. When you go to the doctor, you set up an appointment. Again, our platform enables appointment at a service center or pick drop or a exchange, etc. But how do you make the decision? It's the doctor who diagnoses you and says that, okay, this is the problem, food poisoning is the problem, and therefore you need to take a medicine which is probably Lomofin. In our case, our platform is the doctor, which does the diagnostics, and therefore the service center just does what the platform recommends to do, again controlling all those potential fraud or loopholes which happens in a typical risk business. And therefore the service center just acts as a nursing staff in a hospital, just puts the injection or gives the medicine. If you allow them to, in any insurance business, right? Sir, insurance hai, so every doctor will come and visit you. Every injection gets added. You will be charged for a higher bed rate or whatever. In our case, none of that is possible. And that's probably the reason why we are able to scale and keep increasing our margins and profitability. So this is a scale that gives you when you work with the ecosystem. And like I said, the platform orchestrates all of this from an operating level standpoint. And we are proud to work with some of the best in the business, top 3 out of the top 21 Fortune 21 companies. And this brings value to everybody, so everybody is a winner here. The insurers get more business, better books. Obviously, their business is a float business, so they get large volumes of premium. Retailers get to make money clean. They're not now part of that painful customer experience management themselves. OEMs get additional business. The service becomes now profit center. And of course, everybody else in this, including customer, gets a benefit. And this is exactly how we believe we have a structural advantage, unlike any other company which talks about competitive advantage, because our business is a scale business, land and expand business, distribution is through digital means, and therefore you integrate once with a Chroma for a Samsung, but then you add an Apple just by adding an SKU. You're not necessarily doing anything beyond that. So I think that brings us pricing power, and which helps us also margin expansion. So like I said, ours is a asset-light business with no risk on our books, but we get to participate in the scale, and therefore it's a scale economy, and it continues to grow with a huge operating leverage. Oops. And like I said, we work with over 100 brands today, and these are some of our customers, whether it is an OEM, whether it is telcos. We are proud to also now break into large telcos like AT&T in the US, Saudi Telecom in the Middle East, Orange in Europe, and many others, including Amazon in the US now, exclusivity. So a lot of these wins are because of the model, and we hope to really now build a company that will scale to not just 45 countries, but wherever a consumer product is sold, and that's probably about 100+ countries. Like I said, this is a scale economy business, and we hope we will also get into other categories as we get opportunities. We've got a lot of opportunities from some of these personal category products. Imagine your Gucci bag you're buying, which doesn't come with a replacement. If it gets stolen, your 2,000 euro investment is gone. Why not? You have a protection which gives you unlimited replacement in wherever maybe you don't have a Gucci store in India, but you buy it from Singapore, but you get a replacement here. So that's the approach we're taking, getting into every single personal category. So truly $150 billion plus market TAM business, scale business with a huge operating leverage, and hope we will also follow Mr. Hitesh Ji's business model of reaching 10,000 crores in the next 5 years. Thank you for your time. Looking forward to all your blessings. Thank you.
Thank you, Mr. Srivatsa. And now for a session that features Mr. Sunil Vachani, founder and chairman of Dixon Technologies, as he shares the remarkable story of building India's largest EMS, Electronics Manufacturing Services Company, from humble beginnings. Often referred to as the Foxconn of India, Dixon has been at the forefront of India's electronics and manufacturing revolution. Mr. Sunil Vachani is recognized with several prestigious accolades, including Electronics Man of the Year 2021, Electronic Industries Association of India, ELSINA, EY Entrepreneur of the Year 2021. We request Mr. Sunil Vachani, founder and chairman of Dixon Technologies, to come on stage for a keynote on the Dixon story.
Good afternoon, everybody. Firstly, I want to thank Singularity for inviting me here today. I'm extremely delighted to be here today, and especially because I'm also sharing the stage with Dr. Ajay Kumar, a person who I greatly admire and respect. And I think very few people here would know that he is really the person behind the rise of the electronic industry and where the industry is there today. So I remember early days when we were just starting off. We used to visit a lot of the government offices and talk about our story. And, the constant message that we used to get was that, why are you wasting your time? Our strength lies in software. And really, electronic hardware is not going to go anywhere. And Dr. Ajay Kumar was one person who really took it upon himself and he said, tell me what has to be done to make this happen. So a lot of the policies that you see today, like MSIPs and the other policies, is all thanks to him. And may I request all of you to please give him a big hand for his immense contribution to the industry. Thank you, Dr. Ajay Kumar. So what I want to do today is, talk to you about this huge opportunity that sits in front of us as a country, as an industry, and also as a company. The opportunity to make India the next hub for manufacturing ICT products, not only for the domestic market, but for the world. And I think this is also a time where the entire world now is, looking at an alternative to our neighbor. And especially the events in the last month or so have really accelerated this, search for China Plus One. Interestingly, I was, I'm part of a group chat of our industry association, and someone put up this very interesting message in the morning, and this message was, I think, from one of the companies there, and he asked that, can you make blenders, right? And I think this is what we've been seeing, that, of course, India is not known for making blenders or small appliances. And these are the kind of messages that we've been getting, in the last few days, that how fast can you scale up, right? How many factories can you allocate for us? So I think this is a massive shift that is happening, a massive transformation that is happening. And we need to ensure that, we grab this opportunity with both hands. Can we get the presentation, please? Yeah, okay, thank you. Yeah, so if you look at the overall market, the electronics market is roughly about $3 trillion. And expected to go to about 3.5 trillion by 2030. India is still a very, very small share. It's hardly about 3% of this market, so we're roughly at about $120 billion. No surprise that this industry is dominated by China. They have a very, very dominant share of almost about 48%. But I think all of us have this feeling in this room that this is definitely likely to come down in the coming months or the coming year. Now, who's really going to grab this opportunity? Which country is it going to be? And what does India have to do to really, take a large part of this market? So the EMS market globally is about 30%, at about 1 trillion. But what is happening now, again, there is a shift which is happening globally, that a lot of the companies are looking at more and more outsourcing. I think people have seen the huge success of the Apple model, which is an asset-light model. And as you know, that Apple doesn't own any factories. And now more and more companies are focusing on design, on brand distribution, and outsourcing the manufacturing. So we've seen brands which have never outsourced, brands like Samsung, Whirlpool, are suddenly now doing more and more outsourcing of the products which they have been manufacturing for a very, very long time. So I think this is an extremely positive trend for the EMS industry. Now, this is a very interesting slide because this is, again, reminding us of the times where we used to import almost 95% of mobile phones, that were sold in the country. Almost, 100% of some of the other products like televisions, right? And this shows you that how far we have come as an industry. It's probably for the first time that we have produced electronic goods worth about $120 billion out of a total demand of roughly about $150 billion. In terms of exports, you'd be very happy to know that we are the third largest category amongst all categories of products that are exported. And I have this feeling that I think we are going to be in the top 2 in the next few years. So I think really now what India needs to do to make sure that we realize this dream now is to invest deeply in the components ecosystem, right? We already have a large market, domestic market, we have a pool of labor, we have an excellent government policy, so everything going for us. But I think what is really missing is that component ecosystem, and I'm going to talk about that what the government has done in the last few days to make sure that happens, and that's very exciting for us. I think the next slide is also very exciting because it kind of points out about the huge potential that exists in India in the domestic market. So as you can see that we are at just about $78 per capita consumption, right, which is probably the lowest as compared to the other developing countries. And some of you might know this, that the penetration of the products like televisions, washing machines, air conditioners is extremely low in the country. Hardly about 12 to 15% of the people own a washing machine. So this kind of tells you the huge potential of the products that we're talking about today. And I think as the GDP, per capita income rises, we'll see a hockey stick curve as far as, the growth is concerned of these products that we manufacture. So what is Dixon's role in this particular, I should say, this kind of huge opportunity that sits in front of us? And what are we doing to ensure that Dixon emerges as one of the top 5 companies, EMS companies globally? So this chart shows you about the products that we manufacture. The products which are highlighted in dark blue are the ones that we manufacture as an ODM, right? Which means we design our own products. And the other products are currently where we work as an EMS, and also we are in the process of migrating to ODM in these products also. I'm often asked this question, that why are we in so many diverse product categories? Because when people look at our competitors in China or the companies which are in EMS space, traditionally, they manufacture one product category, they create very large scale, and then they go backwards. Well, I think the answer is very simple, because when we started off, and even now, India is not a very large market for any of these product categories, for any one company to focus on just one particular product. So that's why we have been in these product categories, we've gone into these product categories, and there is a synergy, which I'll talk about in all of the products that we manufacture. And I think, the heartening part is that across these product categories, Dixon has built very huge scale, and I think has the leadership position across most of the product categories. And I'll talk about the capacities that we have created, against each of these products. So this chart, I think, tells you about, the amazing growth that we've had from the time, and the reason I mentioned 2017 is the time that we got listed until now. The huge growth in revenue, and of course the market cap and the employee strength. But when people ask me that, are you really happy about this? Of course, I'm elated about this. But I think the most satisfying part of this journey is that, the customers that we worked with 30 years back, are still our customers, right? No company has left Dixon or, terminated the relationship, because of the relationship issue. They might have got out of the product category, but those companies still work with us. To give you an example, Philips was one of the first companies we started manufacturing VCRs for, right? And today, just a few days back, we signed a joint venture agreement with them for the entire lighting products, where we're putting in our manufacturing assets into one company. So I think this makes me extremely happy. And this is what I tell my people, that if you get the trust of your customer, how far you can go really, no one can imagine. And I think, people ask me also that, what has been really the key strengths of the company, in the last few years that we've gone so far and probably, grown so fast. I would say, I think, it's a combination of factors. First, of course, it's the great team, which is completely empowered. It's our speed, it's our agility, our flexibility, our transparency with the customer, and of course, the frugality that we practice across all the businesses. And I'm sure, we'll talk about it after this, that what really drives Dixon and what are our key strengths besides this. So very quickly, these are the verticals that we are in, and as you can see, that Dixon has created, a very, very large scale. So across each of the product categories, we are the number one or number two. And I think what is particularly satisfying in this chart is what we have done in the mobile space. So if you look at maybe about, let's say 8-10 years back, we hardly had a capacity to produce maybe about 1.5 million smartphones every year. And now we have reached a capacity of almost 70 million smartphones per annum, which is almost 50% of the total market size, right? And I think scale is very important because scale leads to global competitiveness. And this is something that we're continuously working on. Now we are, in fact, setting up mega factories across all product categories. We have a new factory coming up for manufacturing mobile phones, which is going to be 1 million square feet at a single location and employing almost 10,000 people. And if you look at the chart on the side where I talk about the growth opportunity, I think the real growth now is going to come from, of course, the domestic market, but the real growth across these product categories, whether it's mobile phones, it's telecom, or the wearables and hearables, I think that's going to be a huge area. Just to give you about the idea about the opportunity in terms of numbers, just in the US market alone, right? Because there's been a lot of talk about the opportunity in the US market. So if you look at a product like mobile phones, US is importing almost $60 billion worth of mobile phones every year. $80 billion worth of IT hardware. Almost $50 billion worth of telecom products. And mobile phones is particularly interesting because almost 75% of the demand in US is met from factories in China, right? Now, so with the tariffs coming in, it gives you an idea as to what kind of shift that could happen in the coming months or in the coming years. Looking at the future, as I mentioned, that the focus of the country and the focus of the industry and the company has to be on deepening the manufacturing. I'm sorry, some of you, I'm sure, cannot see the chart. Okay, it's clear. Yeah. So the focus is going to be on deepening the manufacturing and creating a component ecosystem. So I think it's great that in the last week, the government announced a PLI scheme, especially focused on the components, and a large allocation has been done for that. It's a very attractive scheme. So in the coming months, the company is going to be investing in displays which are used for laptops, our mobile phones, and also about the wearables. So it's going to, large part of it is going to be our own consumption. We are going to be investing in a camera module business as well as mechanicals. So I think we are short of time. I won't go into too much of details into the other slides, but the point is that the focus of the company now is going to be on creating a very large scale, is going to be on our own design and manufacturing, is going to be on stitching partnerships. Recently, we have signed up with Vivo, as you know, for manufacturing mobile phones, wherein the entire manufacturing of their company is going to come into a joint venture. This, of course, is going to create very large volumes for us as far as mobile is concerned. We are also looking at manufacturing laptops out of the Chennai facility, which we just signed yesterday with the Tamil Nadu government. And this gives an idea about the upcoming infrastructure and the footprint across various product categories. This is about the component backward integration that I talked about. And as I mentioned, this is going to be a huge area for the company. And I think why this is significant for the industry and for the country, because a lot of people have been saying that you are manufacturing mobile phones, there is large capacity, but where is the value addition, right? And I tell people that the same question must have been asked when Maruti came in, that ki bhai ye to aap gaadiyan to bana rahe ho, but where is the component ecosystem, right? And today we see that the auto component industry, I think, is a world leader. So I think similar thing is going to happen in the electronic components industry, and Dixon is going to play a very major role in this particular opportunity. So I think to close, I'll just close with this slide about the performance of the company. I've already talked about the huge growth in the revenue and the EBITDA, as well as the the PBT and the other numbers. So I think I would like to say that this is the beginning of the journey. The journey has just begun. Remembering that Shah Rukh Khan movie, which he said ki abhi to picture bahut baki hai. And to sign off, I remember the words of Victor Hugo, who said that no power on earth can take away an idea whose time has come. So I can assure you that this is our time, this is India's time, and hopefully Dixon is going to be at the forefront of this revolution. So thank you so much for your patient hearing, and looking forward to answering your questions.
Thank you for sharing your inspiring journey, sir. To continue the conversation, we request Dr. Ajay Kumar to please join us on stage. Dr. Ajay Kumar is a distinguished former Defense Secretary of India and is recognized as the longest-serving secretary in the Ministry of Defense. He was the architect of the key defense reforms, including the Agniveer scheme, Atmanirbhar Bharat in defense manufacturing, and the IDEX program to foster innovation and startups in defense tech.
I'm going to... Can we start? So good afternoon, friends. I mean, this is not every day that you get to talk to someone who's as successful as Sunil. My own association with Sunil goes a long time, but when I look at you with a new sense of respect, and to see, to me, you are success personified. And it is such a pleasure to see you where you are today, and to be in some way for this small time be part of your success. I must say that I think I'm truly privileged.
Thank you, sir. This means a lot to me, honestly. Thank you, coming from you.
So tell me, when we started this journey nearly 15 years back, did you ever think this was possible?
No, sir. Honestly, I don't think any of us could have imagined that we'll come so far. But I think we had that conviction, all of us, sir, including you, that at the back of our mind, that India has that opportunity, right? And India could emerge as a big hub for manufacturing for the world, right? Because we knew the kind of strengths that we had. We have a huge amount of talent available, right? And when we saw that multinational companies who had set up their factories, they talked about that the productivity of our labor was as good, or even better sometimes as compared to the other factories in the world, given the right kind of environment. So I think the early signals, sir, were there for all of us. But I'm glad, sir, that you supported us and you recognize this this opportunity much before than anybody else could do. And really, that support turned out to be invaluable.
Yeah, fine. I mean, people like us, do some things, create some policies. And of course, we also created a slogan, Sanjay is here. And we created this whole idea of electronics import becoming bigger than oil import, which actually struck chord with a lot of policymakers. And that is how some of the policies got approved. Otherwise, no one was willing to. Actually, we believe in that sector. And I still, remember that, whole biggest import after oil kind of slogan that we created. But
that means, sir, we'll have to look for more slogans now too. Yeah. So maybe Vinod and us, we can work on this now.
But coming back, tell me, so what were the big challenges that you faced between 2010-11 to 2025? Today, of course, when you look back, where were times when you saw that you felt maybe it's not the right line or this is not the right industry to be in? And how did you overcome those challenges?
So I think, whether it's any industry or, any opportunity, the biggest challenge that one faces as an entrepreneur, is the challenge of the mindset, right? And that mindset, whether it's of the government or the mindset of, the people within your organization or the mindset of the stakeholders around you. And I think this is what I talked about some time back, that, this is what happens when, the leadership of a country really gives a call to action, and I think when our Honorable Prime Minister talked about, let's make in India, let's make India the hub for manufacturing for the world, that message, went to everybody down the line. And we saw that, suddenly everybody started saying that, saying that ye ho nahi sakta, started saying that, okay, tell us what can we do, right, to make this happen. And I think this is what happens across, organizations also. When the leadership gives that call, right, then, things fall in place. And I think now is the time that, the leadership should be talking about, whether it's the companies, entrepreneurs, or the government, that how we can make this sustainable by designing in India. How can we make this sustainable by deepening the manufacturing? And how can we make this sustainable by making sure that our MSMEs start believing in scale, the power of scale and global competitiveness? So I think that's the way forward now.
Yeah, but something which you remember talking to your employees, talking to your senior leadership, which you think stands out as a watershed moment for you in terms of your growth story? Some story which you'd like to share with everyone?
Yeah. So I think, the watershed moment was that, when the company realized that what our focus should be. And I often say that, business is a lot like yoga. The minute you realize your focus, your core, things start to change. And I think the big change that happened for us was, I'm talking about maybe 20 years back, when we were also having our own brand. We were doing marketing of our products, and we were also trying to focus on EMS manufacturing. And fortunately for us, we realized very quickly that we were really not investing for the future in either of these two verticals, right? And this was a very difficult decision, because this was a time, sir, when in a branded business, we were making huge amount of money. So when when we discussed, me and Atul discussed with our team that, we want to get out of the branding business, it was a very difficult thing to sell to our people, right? Because something that is profitable, something that is scalable, why do you want to get out of it? But we realized that our focus is very important. And I think that was the changing point for us. And I think ever since that happened, we saw that we were investing for the future. We were creating that scale. We were investing in the design of our own products. We were really kind of also making sure that we offer that customer, that wow factor. So I think this, I would say, sir, was the turning point. And also, I think a big turning point was when we had a first private equity investment, because that allowed us to, dream on a much bigger canvas, right? And I think those are the two critical points of our journey.
So apart from capital, I mean, you were one of the first ones to start setting Indian companies, start setting mega factories in EMS. What is that, which helped you kind of, make those decisions and then successfully implement those decisions, translate them into actual ground reality on a very quick time? And it so happens that you also were able to usefully leverage the PLI scheme, which was for everyone. Others could have leveraged it, but you were able to do better than others. What are those factors which enabled you to do that, actually?
So there are various factors, but I think if I were to point out a couple of them, I think I would say the biggest factor that why we were the first of the block, we were able to, as you rightly said, when the PLI scheme was announced for mobile phones, we were able to set up the factory in 6 months. And we were the first company, to cross the incremental sales. As you know, there were two criteria. One was the investment and incremental sales. We were the first company to cross that hurdle, and also the first company to claim that incentives. I think the biggest point has been, sir, empowerment of our people, right? And the fact that we are able to create these mega factories at quick pace, we are able to execute so fast, is because I think our people are really empowered. And I would give full credit to Atul, our CEO. A lot of people here know him. I see a lot of familiar faces. And I think he's running a very, very tight ship. He's created entrepreneurs out of all the division heads that we have. I often joke with him that, those division heads came as engineers but have turned into chartered accountants, because now they also talk about ROC, returns, very, very mindful of what has to be done for our stakeholders. So I think that's the key change. And of course, there are lots of other things that fall in place when the organization does well.
In fact, with us we see a very simple, sweet, warm, smiling Sunil. But also, we also see the amount of trust you have been able to generate. And you talked about it with your customers, with your employees, and with all the stakeholders who are part of the ecosystem. What has been what is the role of your family in actually being able to create your own personality and your leadership style?
I think, sir, first role of the family is to stay away. I think, so that's very important. But I think on a serious note, I always say that as, a role of an entrepreneur, really what, entrepreneurs should be doing is to try and have a microscopic vision and a telescopic vision at the same time. Because, a lot of entrepreneurs, I find, maybe including myself also, that sometimes we get so involved in the day-to-day things, maybe signing checks or vouchers, that we forget about the big picture. And, obviously, the day you're not growing, you're dying. And some of us are so high up in the air, just looking at the big picture, that we really don't know what's happening in our companies in terms of happening to the smallest detail. So I think, that's very important to have that kind of a vision. But, I'll admit that I don't think I've perfected that, because, I'm often told by Atul that I'm diving in too deep sometimes into details, maybe which I should not be. And maybe sometimes I'm also missing the bigger picture. So I think for me, it's a work in progress to ensure that I create that fine balance between the two. And also, as I said, that how can I empower my people more and more, because the next, sir, I'm sure the 20 years are going to be very different. Like they say, what got us here will not take us to where we want to go. We'll need a different set of capabilities. We'll need to invest in digital transformation. We'll need to invest in many, many more things. And certainly the scale of the company is completely different now from what it used to be, 25 years back. So that would mean more empowerment, more trust, getting that extra mile for that customer. So a lot has to be done.
Okay, so let me ask you this, and I think no conversation today can be complete without this point. I mean, you have seen huge growth, 7x growth in the last 5 years. But the announcements by US President in the recent days has brought in mixed feelings in different sectors. First of all, how do you see electronic sector responding to those announcements, and how do you see your own company responding to those announcements? And do you see opportunities? Do you see threats? How you perceive them?
Sir, I see, as I mentioned in my address, I see this as one of the biggest opportunities that has come our way, both as a country, as an industry. I think it was very obvious right from the day one when this thing started, when Mr. Trump announced talking about tariffs, that this was always going to be about US and China, tariff war, right? The others, of course, there was that temporary pressure, but it was always going to be, maybe the other countries would sign off on something that will be mutually beneficial. But of course, it was always going to be about China and India. And now the kind of manufacturing I talked about that is there, and even if some small portion comes of it, we could be talking about huge numbers. Already, sir, you have seen that in the last few days, we have touched a figure of almost $30 billion of exports just to mobile phones. This could very easily go to about $100 billion in the next 5 years. And I talked about the kind of numbers, the opportunity that is there in the US market. So even before this happened, sir, people were looking at an alternative to China, right? And also to Vietnam, because Vietnam also is kind of right up there, full up there, because they don't have, there's, I believe, a manpower shortage, there's a power shortage in some areas. So we, as it is, people were looking at the shift. What this will do is now, this is going to put that drive into, fourth gear and make sure that, and as we see from the messages in the last few days, people are scrambling now, in fact, to look for an alternative. So now we need to make sure, of course, from the industry side and the government, that we put the right things in place to ensure that at least this time, we don't miss this opportunity. Because I think the last time this opportunity came, before COVID, when people were talking about China Plus One, honestly, I feel we lost out to Vietnam. But this time we need to ensure, that we grab this opportunity.
Can I ask you a direct question? So are you looking at more Apple phones coming to India and Dixon doing them?
So normally when someone asks me, I don't answer that, but
you don't have to answer it.
The only thing is, I think, sir, the way I can say that, right now, the kind of capacities that we built, I think we are catering to almost all the Android customers. And as I mentioned, that now we have a capacity to cater to almost 50%, right, of the, the total market. And there is no doubt that Apple in India and globally is an iconic brand. In mobile phones is the first name that comes to mind. And even when we talk to the, to the Apple senior management, I think what they are very keen on is Indian entrepreneurs. And they've announced it. It's not something that I'm sharing that, they've told us. They've, openly talked about it. That they're very keen that Indian entrepreneurs come forward and invest as part of the ecosystem, whether it's in the components. And we've seen in their case, it always starts with components. So even if you see some of the big vendors who cater to them, they started off with components, as you know, sir. So we are hopeful that, someday in the near future, we start off with certain components. And let's hope that it leads to, bigger partnerships in times to come.
Also, because we're talking of Trump, what happens to ITA now? Do you think ITA is dead and gone, or do you think, and what does it mean for Dixon, and what does it mean for India?
So, sir, I think there is already talk that is going on, what I've heard, and the government is talking about it, the parliamentary panel is talking about completely getting out of the ITA-1 agreement. I presume, sir, that's what
that's exactly
that's
right.
what you're talking about. So this was signed a long time back.
97.
And I think when the government probably looked at the impact of this agreement, I think the kind of results that we have got is not really being satisfactory, or the kind of results that we wanted, I don't think we've got. In fact, I would be, go to the extent of saying that it's kind of destroyed our component ecosystem, if I were to put it a little strongly. And we know that we cannot be a global superpower without a component ecosystem. So if really now that the US is, gone against the WTO guidelines of having differential duties for different nations, if they really talk about getting out of that commitment, maybe we should look at seeing that can we get out of ITA-1? Because if that happens, I think it'll give a huge boost to the component industry, and that is really what is required besides the new PLI scheme that has been launched a week back.
So for all practical purposes, we can treat as if ITA is somewhere in the cold storage for the moment. Is that right?
Sir, I mean, it cannot be in cold storage because we are a signatory, so we have to be, honoring the commitments.
We're putting duties all the time now. I mean, Trump has put
Sir,
duties across the board.
We haven't put any duties on ITA-1 items as a country.
Mobile phones?
Mobile phones is against this thing because smartphones did not exist. So there's a clause in the ITA-1 agreement that was only for the products which existed. Well, again, that has been contested, but it's something that the government has to, negotiate.
But no, but with China, I'm sorry, the US putting duties, what will it do in terms of, if, US, which was the main, proponent of that agreement, is today had decided to put duties on everything, then, and, US companies are the ones who are pushing this the hardest at that point of time. Now, of course, Chinese are there as the biggest supplier, but they don't have the same international clout as US had to be able to force ITA into the system, and which is what, as you very rightly said, actually it's defined the electronics industry world over with domination of few companies. Now with this, do you see a larger impact on the electronics sector in the country?
Sir, where I see a big impact, and see, one is for sure that the US putting different duties on different countries is definitely going against the agreement, right? So one doesn't know that how long this lasts. But what I'm saying is, if India were to withdraw, I think it'll be excellent for the country. But what I want to talk about is also the opportunity that is there in some of the IT products. So if we look at, and we were discussing, sir, just before we entered, that one of the biggest opportunities that we see is in the manufacturing and exports of IT products like laptops. Because this is one product where India has very large scale. I'm sure some of us know that we as a country are importing $15 billion worth of IT products, which is large. So one, there is an import substitution opportunity. Two, there is an opportunity for Indian companies very quickly getting to own design and manufacturing, which unfortunately we could not do in mobile phones. Because, sir, as you know, mobile phones is a highly complex product because the supply chains are very, very difficult. Every 6 months there is a model changing. And with limited capacity available in India of tooling, and other things, it's very difficult to kind of design your own mobile phones. But laptops and IT products is very different because some models, go on for years. And the designs don't change so fast. So I think this is one product category that really we could look at as a country of emerging as world leaders.
Absolutely.
And Taiwanese are getting out of it, sorry. They're getting out of low-end products like laptops and really focusing on the high-end servers, as we've seen in ODM companies.
Yeah. No, just for the benefit of the investment community, IT products, electronics is divided into multiple sectors. And IT products basically means laptops, desktops, servers, printers, anything else? Mostly this, right?
That's right. But all the components
and the components that go in all of this, that's right. And you did mention, and very rightly so, you have focused on certain sectors and achieved scale in those sectors of electronics. I'm just curious and your thoughts on, a couple of sectors where we see a lot of growth in the coming years, and one of them is automotive electronics. Is that totally out and out for you?
No, sir, that is definitely on the radar, and I think I briefly touched upon it in the presentation, that one of the future opportunities that we've identified is the automotive sector. Because what we've seen, there is a huge shift happening in the automotive sector, that a large part of the car is electronics. In fact, some people say that now the new electric cars are actually smartphones having wheels, so that's the kind of this thing, because the number of electronic products that they have. So when we are looking at a new venture, sir, as I mentioned to you, for setting up display, and we are looking at the display module facility, which should be up and running by maybe by October. So the automotive display is going to be a big part of it. Also, sir, we are looking at the high-value EMS, like catering to defense, for which something that you have been a very close part of, and medical electronics besides automotive electronics. So these are the areas identified for the future already.
And fantastic, this display EMS that you're setting up, and congratulations on this new MOU with the government of Tamil Nadu also. So all your plans are fructifying one by one. Now on the display side, we are now seeing you assembling the display units for the whatever equipment. When do we see you going backward on that?
Sir, we've already talked about it. Our intention of getting even into more backward integration of setting up a display fab. But of course, this is dependent on the new ISM policy, because we would not be able to do it unless we have huge subsidy. And I think we've seen that globally, wherever the semiconductor infrastructure is coming or the display infrastructure is coming, it has only come in with huge government support in terms of subsidies. So we are waiting for the ISM 2. But I think besides the subsidies also, sir, honestly, we are kind of evaluating and looking inwards, that do we have it in us to handle that kind of project, because what it requires is a completely different scale, completely different skill set, a completely different team ability. So I think a lot of questions will have to be answered by us, other than just the financial side of it, which is only subsidy and from the government.
So, but you are now getting into components, and which is such a welcome news for everyone, and components is again a very huge scale game as in electronics. In fact, everything in electronics is a scale game. You can't survive unless you're doing at scale, unless you're in some very niche areas. where do you think the value, one of the biggest critiques of electronics industry outside of people who are outside and people who may not know the industry has been that value addition is low. How do you see that changing now, let's say in mobile phones, How do you see this mobile phone value addition changing with the new PLI which has come, as well as your own focus on, various display units and other components that you are doing? How do you think that will grow for you as a company?
So, I think this is a question often asked by all investors and I think at all forums that, why is the value addition so low? Unfortunately, when people ask that question, they only look at a product like mobile phones. And I was just mentioning to you a little while back that when we look at other product categories, the product categories that we manufacture like, the refrigerators, the washing machines, LED lighting, there the value addition is much, much higher. In fact, we have, Bothaji here from the air conditioning industry, Manishji, and they'll tell us that an air conditioner, the value addition is, the kind of component ecosystem that has been built in the country after the last PLI was launched is amazing. So many companies have come with compressor manufacturing, and I believe now they're at a value addition of about 75%. So I think mobile is one area which is definitely a problematic area. The problem there is that a large part of the bill of material of mobile phone is the semiconductor, right? So even countries like China, they've been able to have a value addition of only about 55%. Vietnam, in fact, is only about 30%, right? And we're about 18%. But the good news is, sir, that now with the display facility coming in, ours and many more, and also the camera module, we'll be able to take it to 30% maybe in the next 1 year or so, right? So I think which is extremely positive because Vietnam took such a long time to reach this level of value addition, and we'll be there very, very soon. And I'm hopeful that the new scheme that has been launched by the government will have a good response. A lot of the MSME companies will also come forward because the scheme is very attractive. And if that happens, I think the value addition will keep deepening. And we'll see us, slowly climbing that
and we
ladder.
can hope that you will again be the fastest taker of PLI this time also, as was the case for EMS.
With your blessings, sir, definitely we'll do that, yes.
I think that's great news. Let me ask you on exports. So far, you've been doing a lot of work for India. How do you see your export market growing in future? Because in the end, this is a global market. This is a market where you service the world from one place. That's how the market is organized. How do you see yourself growing in the global market?
So that is one area that is definitely a work in progress for us because only about 10% of our turnover comes from exports. But as I mentioned, the events of the last few days have been extremely encouraging. I think the number of calls that Atul and me have been getting in the last few days is phenomenal. The kind of reaction that is there, extremely positive. So now we just need to ensure that we just go out there and execute. So that's what is to be done. And if we do that, I'm sure exports is going to be a very, very large part of our turnover in times to come.
And will we see a situation where we will see Americans coming to India to buy their iPhone?
Yeah. So, sir, already, it's extremely positive that 20% of the iPhones which are sold in the world are made in India.
That's right.
And we're hoping that now with this, it'll go to at least 70%, if not more, in the next few years.
We have seen 7x growth in last 5 years for Dixon. We are seeing a huge opportunity, and your track record shows that you have done it. You can do very well. What does 2035 looks like for Sunil Vachani?
Sir, we have grown at almost about 35% CAGR, and as we saw in the chart and numbers, we have doubled our turnover, sir, with last year, the last financial year, to almost about 40,000 crores, coming from about 18,000 crores. And I hope we continue to do that. But as an entrepreneur, sir, I'm a little different. That I don't believe vision in terms of numbers, because people ask me, tell me that okay, next 3 years. Is it 1 lakh crore, 2 lakh crores? I tell them that, look, it's simple math. Like when we're talking about, let's say, the mobile market itself, the total market size at about 4 lakh crores, right? Laptop is about 1 lakh crores, so 5 lakh crores. So even if we were to get, let's say 20% of that market, right? We're talking about 80,000 crores. And currently in mobile, we've just done only about 20,000. So the reason I'm talking about these numbers, it gives you an idea that how fast we could reach those numbers. But like I said, our vision is that we need to make sure that we are an extension of our customer, we get the trust of our customer, and we go that extra mile for our customer. Because if we do that, where this could go, no one can imagine.
But you are India's Foxconn, and Foxconn is 400 billion. So you cannot be satisfied with 45,000 crores.
No, absolutely. So I think we look forward to the day, when Taiwanese companies tell their companies that, you need to be the Dixon of Taiwan. So if that happens, then yes, maybe, we should look at even numbers beyond that. So why not?
So this is the true Sunil, This is the true Sunil, which actually, I think, takes this company to new heights all the time. So what is this? Can you describe this attribute of yours, which is actually taking up aspirational positions and then trying to achieve those aspirational positions? How would you describe this attribute of yours?
No, sir, I feel my role in the company is very limited. In fact, I'm kind of sitting idle these days. It's in the sense that my role is to make sure that, I create that vision for the organization. And I have to make sure that people believe in that vision. And I make sure that people are empowered, take those decisions that the company has to reach there. And also, like I said, sir, that, as entrepreneurs, we have that unique, responsibility of connecting the dots of the outside to the inside, right? So making sure that there is complete alignment as to what is happening outside, and the company is gearing up to meet those challenges. So it's very simple. It's the team which has done the job. I'm playing a very small part in that.
And we totally agree, and we totally applaud your team. But this is exactly what we're trying to understand, that I'm sure each CEO in a company is actually wanting to be able to do this. But what is that makes you successfully achieve this, where you are able to empower your team, have a colleague like Atul Lal, who's been there for you for how many, 3 decades, 4 decades? Yeah, 3 decades, and works, absolutely closely in partnership with you. What is that? What are those 1 or 2 insights which you think which enable you to be able to do this, and which are your core strengths in the company?
सर मैं अपनी तारीफ कैसे करूं मैं
नहीं कर सकते यहाँ पे बिल्कुल
sir, I think, like I said, it's all the team effort that is there. They've done a tremendous job. But I think if I were to answer that question, and one thing that probably you're looking at, that what really inspired me, and I think I would say that single this thing, it was my late father. I think I saw that huge qualities that he had. He was a real people's person. He had a huge foresight. Some of us might not know he was the first person to launch color TVs way back in 1983, when very few people saw that. So I think, having seen him, work and operate so closely, I think that was a real inspiration for me. And I think that really brought about a huge change. And as I mentioned that, when I was starting the company, I turned to my late father, that I want to do this, that I want to start a company where I manufacture for others. And of course, as you know, that we had a very successful brand in the family. And he was quite surprised that I want to do that. And he said that, okay, I trust you. I'll give you a small amount of capital, which was about a few lakhs. And he said that I'm going to choose the name Dixon. So he chose the name. And then he said, I'm going to make sure that Atul comes with you. He mentors you. Atul was his blue-eyed boy. And of course, he said, I'll give him my blessings. So all 4 proved to be invaluable. And, I'm just lucky, blessed to be at the right place at the right time.
And I must share a personal anecdote. When I first met you, you were making TVs, and today, of course, you are a founder of this large conglomerate. I wish you all the very best, and thank you very much.
Thank
you. I still feel, it's people like you who has made the electronics journey in India a reality. So, with great compliments, I think he deserves a standing applause.
No, sir. Thank you. Like I said, sir, this means so much to me that you are at the same stage as me, and really grateful for that. Thank you.
Thank you, sirs, for that engaging conversation about the Dixon journey. We request you to accept a token of our gratitude on behalf of Singularity. May we have Yash Kela to do the honors, please. And now we would like to invite on stage Mr. Kharshid Daruwala, Chairman, Sterling and Wilson Private Limited. He is also the Chairman of Sterling and Wilson Renewable Energy Limited, for a portfolio showcase on Sterling Wilson. Ladies and gentlemen, may we please ask you to return to your seats. The next session is about to begin. Thank you. Ladies and gentlemen, may we please ask you to be seated as the next presentation is about to begin. Thank you. And now we would like to invite on stage Mr. Kharshid Daruwala, Chairman, Sterling and Wilson Private Limited. He is also the Chairman of Sterling and Wilson Renewable Energy Limited for a portfolio showcase on Sterling Wilson.
Yeah, hi, good evening. I think I'll have to wait for the group to settle down a bit. So. So while I'm here to brief you all on Sterling & Wilson Data Center as a company, I thought it would be important to also run through a bit of background on Sterling Wilson as a group. So basically, my grandfather set up Sterling Wilson in 1927, and we've been partners with Shapoorji Pallonji Group for my grandfather's time. I joined the group. I've done my CA in 1993, and I joined the group in 97. That time we were a small company. We were about 7 crore turnover, and we had about 50 people. From there, it was an incredible journey. Actually, Shapur, Cyrus, me, we grew Sterling Wilson. We got into MEP contracting. We got into, we set up a large genset company, India's largest genset, second largest genset company. We then actually got into solar EPC. And as we stand today, Sterling Wilson Group has now 4 companies. One is Sterling & Wilson MEP and TND, so where we do what Voltas, Blue Star, and ourselves, we are maybe 3 of the largest MEP contracting companies, transmission distribution, what KSC Kalpataru do. Then we have Sterling & Wilson Renewable, which is a listed company in the stock market. Reliance Group owns 32%, Shapoorji owns 6 point odd, I own 5.7. I'm still chairman of that company, and the management continues to be the same. Then we have Sterling Green Power, which is actually a company where we are India's second largest diesel genset manufacturer. And I'll spend time on that company because it's directly related to the data center boom that we are seeing both in India and globally. And last but not the least is Sterling & Wilson Data Center, where we've had Singularity and Madhu Bhai and all invest recently. So just to give you a bit of history, when we grew from this 7 crore turnover in 1997, by 2019, things looked as pretty as what you could get, right? The group turnover had reached about 10,000 crores. We were growing, profitable. The solar EPC business we had set up in 2011. And from zero, we grew to about 8,000 crore turnover with a 600 crore PAT, no capital employed in the business, no working capital employed in the business. So great ROCs, business was booming. All this was actually possible because of our great partnership with the Shapoorji Pallonji family. They had a phenomenal brand, reputation, and Sterling Wilson, if you see any EPC business, the requirement or the working capital for us really is non-funded limits. If you do the business right in EPC, I truly believe, at least in the right EPC businesses, you can do it without working capital or with very, very low working capital. And that's how we succeeded. So we had hardly infused any capital. The 25,000 bucks my dad and Pallonji had put into the company, that was the starting of that company. Post then, there was nearly no equity infusion to take it to 9,000 crores. But at that point of time, what happened is that the thought process was that, yes, I think the bank guarantee limits are infinite, and any business we entered into, we were able to scale with the support of banks. Then when COVID hit, it became something that was impossible to manage, nearly impossible to manage, and I'll just run you through a quick slide on that. We had about 540 projects only in Sterling Wilson MEP worldwide. India, Middle East, Africa, we were all. Sterling Wilson Renewable, at that time, was doing projects both in India. We had $1.2 billion of projects in Australia. We had maybe 200 million in the US, and we were doing projects of 500 million in South America. 9,000 people working across the world, executing projects. And when COVID hit, 3 things happened at the same time to us, right? So one was Shapoorji had a tough time. It had to go into a one-time restructuring. So suddenly the protective umbrella that was there for the group vanished. Sterling Wilson itself had grown on a very low capital base. So while return metrics were excellent, but the capital base was very low. So to take a COVID impact of these kind of jobs across the world, slowing down and stopping, was extremely difficult. So what effectively, so if you see the scope of Sterling Wilson's global EPC operations, actually as an Indian multinational doing EPC, we are really, really more international than most. And we've got a presence in Australia, we've got a large presence in Africa. In fact, in Africa, we work in 20 countries at any point of time, doing various projects, hotels, hospitals, power plants, gas-based power plants, diesel generator sets, now data centers. So when we hit this problem, suddenly all the financial matrix, obviously, when it was like a handbrake getting pulled straight away in the middle of your ultimate growth that you had as an organization. And we ran into a situation where literally I remember there were 300 crores to collect from my customers, just advances, and we couldn't give them bank guarantees. And that really put the group into huge trouble. As you can see from this, in 23, we had a negative net worth after all the COVID losses of 100 crores, 112 crores, and we had 3,000 crore debt. It felt like it'll be impossible to survive. And I remember from the day COVID struck, I was an NRI in Dubai, flew down, knew that this is going to be the base now for me to sort the issues out for all. That time there were 3 organizations. And I think right from, like say, 9 in the morning till 9 at night for maybe 2.5 years, nearly every day, you were just sitting and resolving that issue that we had across the globe. I think one call we took as promoters, both SP family and myself, unfortunately, we had not actually interacted with the investor universe at all. We were in great businesses, great potential, but I think we had not actually capitalized the business enough to take advantage of that growth. And that's a call we took at that point of time that no, from here, as promoters, we need to take every possible step to capitalize the businesses so that we can all succeed and grow together. For me, the first big step that happened, and that's where I think the investors showed so much confidence, was in Sterling Wilson Data Center. I remember last March, that's just 13 months back. I was sure the Sterling Wilson brand is fantastic. The team that we had, Prasanna, who's my CEO, will be speaking later. We had a fantastic team. We had actually built about 23 turnkey data centers in India, 50% of them including civil and everything, full MEP. While the next competitor, the next largest competitor had built 3, and the other one had built 1. So we had a great track record, but unfortunately, because of the lack of capital, customers spoke to us saying that unless you recapitalize, we'll never be able to support you. And that's where we took this call. If you see, in 2024, while we had done a 500 odd crore order booking earlier, things were looking good, it had slumped to 175. And that's when I met Madhuji and the team, the other investors, and we said that as soon as we fix this problem, there are customers out there who will just continuously give us repeat work. The opportunity is phenomenal. And that's exactly what happened. We capitalized ourselves last March, and immediately we got repeat jobs from Microsoft, we were doing phase 1. We got phase 2 and phase 3 immediately from them. We've been working with Egypt Telecom for the last about 5 years. Nearly every data center done by Egypt Telecom is done by us, but they were hesitant. Immediately after we got capitalized, they've given us right now 2 jobs, which are about $70 million for Google, their cable landing stations in Egypt, which are being put up by Egypt Telecom, and so on. Blackstone gave us our first project in New Bombay. And that's where you see that customers are extremely keen to work with strong EPC brands because there's not too much delivery out there for data centers, because it's a new business which is now substantially growing, and that hockey stick is so quick. And I'll just show that to you in the next few charts, that EPCs is one, but second, product companies also. They're all struggling to actually meet the requirement. This chart shows you that in India, about 6 million per megawatt is the cost of building a data center, which is about 50 crores. In this 50 crores, 40 crores is Sterling Wilson's true DNA work, which is doing MEP. If I actually look at the situation per square foot, if you take a commercial building in BKC, you got $3,000 construction cost, 1,500 electromechanical. In case of a data center, it is $3,000 to build civil, is 40,000 rupees a square foot to do electromechanical. Out of this, clients typically buy 50%, so you're left with the balance 50% for yourself to do. Typically, most data center EPC guys are civil guys who are trying to do MEP. Well, we've been from the MEP DNA, and fortunately, when I spoke to Shapur and Cyrus in 2015 itself, they allowed Sterling Wilson in our partnership to be the general contractor. Typically, most other businesses, they are the general contractor. So you can see that India has the cheapest cost of build. How much we worry about the electricity, the boom, the transmission distribution network in our country, I think we are one of the best globally. Today, US also struggles for capacities. They're putting up gas plants for maybe 2 and 3 years, dismantling the whole gas plant for data centers, then getting permanent power. In India, we don't have that problem. 50% comes up in Mumbai, then Chennai, Pune. So we have an ecosystem now where earlier speakers have spoken that massive amount of data is being generated in India, huge. Massive amount of work is being done by India for the world. So, and we are the cheapest cost of construction with a great backbone of the on the electricity grid. So we have everything that we really need for the DC boom to take place. If you're looking at the incremental growth, if you see 2019 to 23, in those 4 years, hardly about 300 odd megawatts of DC build happened. Then year after year, you're seeing that even in 25, it's only about 300. From here, we are starting to see this incremental growth. And it's so tremendous that when we are looking in the year 27, when you're talking about 800 megawatts of DC build that will happen, which is about ballpark 40,000 crores. So from an industry which was nearly nothing 2-3 years back and sporadically being built, it's now becoming an industry which is 40,000 crores. In my belief, this is still not capturing the AI boom. And I'll give you one classic example. For our genset business that we have, and that really can show you the size and scale of what's happening, the Reliance Jio, the entire convention center, we've supplied the gensets there. That's totally 10 megawatts of consumption for entire Reliance Jio. The new Adani airport, we are supplying our gensets, that's 20 megawatts. There are 2 buildings which Blackstone is doing for Amazon in New Bombay, 2 buildings out of like huge campuses. Those 2 buildings is 170 megawatts of gensets. There's a 5-story data center and there's a 5-story genset building to accommodate that. Recently, there was a developer a real estate developer in the Middle East. If I see his total genset demand in a year, and he's in the top 3-4 developers in the Middle East, will be about 100 crores. He placed an order about 5 months back for about 350 crores of data center gensets. He's placed another 150 crores this April. A single person can buy out a whole turnover of any organizations like our data center build or genset organizations. So the opportunity across the world is tremendous. I was in the US while I'm talking here about going from adding 300, 500 megawatts. There's a large data center conference that takes place every year in Honolulu. The co-location players there, each of them is putting up 500 to 1,000 megawatts. There were at least 5 guys who are putting up 1,000 megawatts a year, data centers in the US. That is creating this massive global demand. And from our perspective, is the right place, the right time. Like I've seen the solar industry, like I said, we grew from 2011 from 0 to about 8,000 crores. The difference with DC is that it has a lot more entry barriers, and as a EPC at least, and then supply chain. The other thing is that what we've seen is that it has best of both the worlds. Because of the entry barriers, we've got great margins, we've got great gross margins in the projects, and at the same time, it's got the same DNA of a negative capital employed business. So that's why the scaling up of this business is a huge opportunity for all of us. I think I've run out of time. I'll try and give you a quick glance just on the genset side of what we are doing. If you see Sterling Green, while we are doing diesel generator sets, we are also doing EV chargers, etc. But I'll just focus on the DC side. We took a bit of investment, both Shapur and myself, primary and secondary, recently, just 5 months back. And that's how it was, right? So when we were looking at actually the order book for data center, this year, we were projecting that this year will be about 200 crores and next year will be about 1,000 crores. And we landed up with a 750 crore order booking. Now, internally, we've projected 950 crores. But each individual customer today is capable of giving us anywhere between 500 to 1,000 crores themselves. So now we are in the process of expanding factories into Dubai, setting up something in US. They're outsourced factories where we'll be doing this kind of work. So just from my perspective, it's a very under-researched, while we've all been hearing about data centers a lot, it's a very under-researched area. We as an organization are happiest to spend time because we've been there from 2015. We are the happiest to actually spend time with the investor community and all communities. We welcome everyone to understand more so that we can all, as a country, actually take advantage of this boom, both domestically and internationally, because we believe that India's supply chain can actually meet global demands. Thank you very much. There was a lot to talk about, but I think I'll cut the conversation here. Thank you.
Thank you, Mr. Daruwala. Our next portfolio showcase is Arihant Foundation and Housing. Arihant is on a mission to redevelop Chennai's skyline. Arihant operates on an asset-light model with strategic partnerships with JP Morgan and Ashiana Housing. Arihant has 14 projects under development covering 3 million square feet.
Good afternoon, all. I thank each and every one of you for taking the time to join us today. I would especially like to take this opportunity to thank Singularity Fund for giving us the opportunity to showcase our business. I am Arun Rajan. I'm the CEO at Arihant. I have with me my promoter, Mr. Kamal Lunawat, also here with me. Arihant is a real estate developer based out of Chennai with a legacy spanning over 40 years, built on trust and performance. In this session, I'd like to take you through how Arihant is poised to create maximum value in one of the most performing cities today in the country. Let me give you a showcase about the macro level. Tamil Nadu today has seen the highest growth rate in the country at close to 9.7%. This state today has got a 17.5 lakh crore GDP. And ever since the COVID period, the state has consistently shown a growth rate of at least 8%. Over the last 3 years, the state has created close to 32 lakhs jobs, as well as seen investments to the tune of 10 lakh crores. The city of Chennai in particular is today, has always been known to be the automotive cluster of the country. Today we are seeing close to, it's also become a hub for electronic manufacturing. And most importantly, where we are seeing an opportunity is the city is now the third largest office space absorption in the country. In 2023, Chennai saw an office space absorption of close to 10 million square feet. And in the year 2024, we did fairly short of 10 million square feet only due to a lack of supply. So that creates a huge opportunity for us. And this is predominantly driven by the growth of GCCs and the demand for GCCs in the city. Today, Chennai occupies a post of one of the top 3 GCC occupiers in the country. Just this first quarter of 2025, the calendar year of 2025, Chennai has seen an office space absorption of just 2.6 million square feet. This is, in a way, facilitated by the Tamil Nadu government's incentive program for incentivizing GCCs to set up their offices in the city by offering payroll incentive schemes. And we believe that this is going to be one of the key drivers in terms of growth for the Chennai real estate or Tamil Nadu real estate market also. Apart from Chennai, Coimbatore is also becoming a big hub for GCCs. Amazon and HCL, large companies have already set up bases in Coimbatore. And this is also one of the large opportunities we are seeing. Apart from the office market, the Tamil Nadu government is also very clear in terms of redefining the entire landscape of the state. This is brought in by the Redevelopment Act, which has been passed by the Tamil Nadu government last year. Till last year, to enable a redevelopment of a housing society, 100% consent of all the owners was actually required, which practically made it impossible to do any sort of redevelopment works in the city, barring a few. But this, the Tamil Nadu Redevelopment Act has enabled only 75% consent of all the owners is required. And this we see is a big opportunity for us as a company and generally the market also for changing the entire landscape. Buildings which were developed 50 or 20, 30 years back with an FSI of just 1.5 to 2 times, today, as per the regulation norms, can see a FSI going up to 5 times. So this offers tremendous potential for the redevelopment of the entire city's landscape. So this is where I would like to highlight as to where Arihant is coming in. Let me speak a bit more about Arihant. We are a 40-year-old real estate company based out of Chennai. Over the last 40 years, we have developed over 25 million square feet across multiple segments. We are actively involved into commercial real estate, residential real estate. We are also into senior housing in partnership with Ashiana of Delhi. We're also very active in the plotted development space. Over the last 40 years, we have created homes for over 10,000 odd families. And our model predominantly has been that we work very closely with landowners across the city and develop on their land. So over 60 joint ventures we have actually worked with both corporates as well as individuals. This is predominantly due to the trust which Arihant as a brand has in the city, which enables landowners to partner with us to create city-defining landscapes. In the commercial real estate segment, we have developed over 5 million square feet, and we have to our credit some of large Fortune 500 companies. This includes Verizon, DuPont, Malaysian Airlines, Fidelity, and a lot of the commercial offices which we are developed, we continue to maintain the buildings, and having a large pool of commercial real estate clientele helps us in terms of scaling up also for the growth which is expected to be brought in by the GCCs into the city. Let me talk a bit about why Arihant. What are the USPs which Arihant as a brand offer? One is, we'll be one of those very few real estate companies to come out of Tamil Nadu which have a multi-segment expertise. As I mentioned already, we operate into residential, commercial, and this actually gives us a position wherein we can do a demand-based pivoting. So which is a strategy which we've been following for the last so many years. We follow an asset-light model wherein most of the over 90% of the developments which we have done are actually joint ventures, working with the landowners. The brand obviously is a household name in the city and associated with premium residential development also. And obviously, as I mentioned, the relationships which we have created across the so many years helps us in scaling up for the next phase of growth for the brand itself. In terms of relationships, we have already done equity partnership with JP Morgan. We are doing over 2 million square feet of senior housing in partnership with Ashiana. Senior housing is a very potential space. We have already built and sold over 1 million square feet. We are also actively engaged for another 1 million square feet which is currently underway. We have done build-to-suit projects for large corporates like HCL, multiple projects for HCL. We have done a build-to-suit for ICICI Bank. Last year, we did a significant transaction wherein even before commencement of construction for a land which we own, we did a build-to-suit for Equitas Bank for over 300 crores. So this was even before the commencement of the construction, just after receipt of the approvals. We were able to do a forward sale of the entire development to Equitas Bank for over 300 crores. This, I mean, the very fact that a bank has placed trust in a developer and entered into a transaction at the beginning of the project itself puts a lot of confidence in the goodwill the brand holds in the city. I would also like to take this opportunity to talk about how, as a brand, we are now diversifying. As of now, we have, as we speak, close to 3,000 crores of gross development value projects underway. Over 3 million square feet is currently being developed by the company. We have been able to steadily show an increase in terms of the revenues. And in terms of the pre-sales, just over the last 1 year, we have been able to show a 2.5 times increase in terms of the pre-sales. In 2024, we had done 148 crores of pre-sales. In 2004, we have doubled it, almost 2.5 times to 381 crores. This financial year ending, we are poised to surpass this number also. In terms of our return on capital also, we are steadily working towards a higher margins. Across all our projects, we look at an EBITDA margins of close to 35 to 37%. In terms of our vision, we are looking at, over the next 2 to 3 years, developing close to 5 million square feet, and looking at a GDV of close to 5,000 odd crores. To achieve this, we have already started working. As we speak, we have signed definitive term sheets for close to 3,000 odd crores. The due diligences are in progress. Hopefully, once the definitive agreements are signed, we will be poised to achieve this particular growth. As a brand, as a company, we are seeing at an intersection of legacy as well as opportunity. The state as well as the city offers multiple opportunities, and we are looking at a point of time where we will be able to leverage that with the expertise and brand recognition we have in the city. I thank you for this opportunity. Thank you so much.
Thank you, sir, for your presentation. Now, it's not easy to move mountains. However, Dr. Ajay Kumar did just that in transforming the Indian defense manufacturing and the private sector participation in defense. We invite him to please come on stage. Dr. Ajay Kumar served as India's Defense Secretary and was the longest-serving secretary in the Ministry of Defense. He played a pivotal role in modernizing India's defense ecosystem, spearheading the corporatization of the 200-year-old Ordnance Factories Board and launching the IDEX program to foster defense and aerospace innovation. He was instrumental in shaping India's geospatial data and drone policies in 2021. He also held key leadership roles in the Ministry of Electronics and IT, NIC, and the Government of Kerala. He holds a PhD in Business Administration and an MS in Applied Economics from the University of Minnesota, along with a BTech from IIT Kanpur. Currently, he serves as a distinguished visiting professor at IIT Kanpur, a senior fellow at Carnegie India, and an independent director on multiple boards. Dr. Ajay Kumar.
Good afternoon, everyone. I just will take 5 to 10 minutes to set the stage for the panel, which will discuss the defense sector after this. And given the time constraint, let me just speak specifically on some points which I thought would be relevant to an audience like this. And the first point which I wanted to make was we are all kind of experiencing a change in the defense industry ecosystem. And what is this change? I'm sure many of you are recognizing it, but for those who don't, I just want to mention that this change which has happened in the last 5 years, if you look back at 2018, not too long back, we still had a defense industry which was about 80,000 crores in the country. Today, it's about 1,30,000 crores. So it's not something which is, we have seen stories of 5x growth, 10x growth, 3x growth. This is only about 50% growth over 5 years, which is good, but not very, something which we will really tom-tom about. But then why is this enthusiasm in the defense industry sector so much more than what these numbers will show? Now, if you look back at 2018, most of our defense industry was cornered by defense public sector undertakings. In fact, 2 of them figured in the top 100 defense companies of the world. HAL, of course, the biggest. But if you look at HAL, HAL made its first aircraft in 1940-41. And Dassault made its first aircraft in 1947. Today, we are buying the world's best fighter jets, Rafale, from Dassault. And we know that we are, till at least in 2018, we do not have a fighter jet made in India. Look at the contrast. We have 4 fantastic shipyards. In fact, 5 of them. We made over 1,000 ships in this country. But we did not export a single ship. And that is the state of affairs which reflected, even though we had size, we did not have the capability to actually compete in the international market. And why was this? This was because all our manufacturing was based on transfer of technology. And this transfer of technology, what does it mean? Transfer of technology meant that we had limited production, but unlimited dependence. Unlimited dependence on spare parts, unlimited dependence on critical systems and subsystems for which the transfer of technology would not have happened, and no one gives you 100% technology. It's 60%, 70% if we are kind, otherwise 20%, 30%. Unlimited dependence on MRO for service, repair and maintenance, and unlimited payment of royalty. The royalty never ends. You keep giving royalty year after year, 30 years after the platform has been inducted as well. So limited production capability, you can't, when I say limited production, you can't produce more than the specified units. You can't upgrade, you can't indigenize, you can't do anything. But most importantly, you can't even export. And that is the situation we were. What we changed was, we said, this is no Atmanirbharta. And that is why we started saying, we have to create our own technology. Of course, a big difference in creating this own technology started with the start of IDEX. I don't want to talk about it, but it has created a startup revolution in the country. But what it showed was that technology produced in this country was as good as the best in the world. And today we have startups who have, in the last 3 to 4 years, achieved valuations anything ranging between 1,000 to 10,000 crores. And some of you have participated. Now I am also participating as my new small venture fund in that. But so this is the huge, big ecosystem today, which I wanted to mention to you, which a change has happened is, it has changed from doing production, manufacturing, from transfer of technology-based production systems to creating technology ourselves, which we can not only use ourselves in the country, but also export. And this has had multiple spillover effects. It has led to not only startups doing R&D and innovation, but industry doing innovation, PSUs doing innovation, much more innovation happening through DRDO, et cetera, et cetera. Now, based on this, let me just talk of 4 or 5 major trends that I think this industry is seeing as we go forward, and which may possibly be of interest to this community. First is, since 2019, we have seen upward of 10% growth in the capital budget of defense sector in the country. There has been steadily, and some years it has been 15% and above, some years, but at least 10% growth, and one does not see that trend changing. I think given our contested neighborhood and the geopolitical situation, we will continue to see focus on our defense capital budget, and therefore, we will continue to see more and more procurement. We are today the 4th largest procurer of defense equipment in the world, And I think this situation is going to continue in a more healthy respect. The second big trend, the 75% domestic, the 75% of budget has been earmarked as part of government's efforts to promote Atmanirbharta, which will again continue. One does not see that going anywhere, which means whatever the budget is, capital budget is, it will continue to have a big chunk of it, 75% of it is going to continue. And the positive indigenization list, which means a list of items which are banned for import in defense, will continue to expand. So we will see more and more items, and these policy initiatives, I think at least in the next few years, we do not see them going anywhere. These are good signs. From a governance perspective, one of the outstanding agenda which has not been done and which is having huge impact, I think, on this innovation ecosystem in the country is DRDO reforms. This has been on the table. This was first talked about in the budget of 21-22. This was later on a committee headed by former PSA, Professor Vijay Raghavan, which has given its recommendation. It is with the government, and we will hope this is something which needs to be accomplished. One of the hopes and one of the thoughts is, now that the government is creating a private-led R&D mechanism for product nation, under which 1 lakh crore rupees have been earmarked for industry R&D, defense would be part of that whole reform process. And alongside that, we may see some reforms, but one will have to wait and see. But that's one of the highlights of big changes that are happening. Apart from that, this year, government has again given 10,000 second tranche of fund of funds to SIRBI, 10,000 crores, which is going to get now, hopefully, the first 10,000 crores took nearly 10 years to get exhausted. We hope the next 10,000 crores should get exhausted in 5 years. And also in space, and we have AVM Khote here, so he will be talking about how InSpace has got its own venture capital fund, which is going to support space ecosystem in a big way, and actually the fantastic work which InSpace is doing in the space sector to promote this sector. Let me stop on the policy perspectives. In terms of industry, 4 or 5 trends, big trends, which one does see going forward. We are seeing entry of new industry players in this segment. We are seeing MSMEs who are assuming bigger role in defense sector, and this trend we expect to continue. We are seeing horizontal expansion of companies who are not in defense sector getting into defense sector. We will see this trend to continue, and we do expect a lot more people. And that's also because the geopolitics as it stands today. One of the things which we did not mention, that in the last 4 or 5 years, apart from the change with the innovation ecosystem, we have seen huge changes in the export profile of defense industry. 15x growth in the last 5 years in defense export, but this is still tip of the iceberg. And this industry is going to grow on the shoulders of export in a very big way. And therefore, I think that is something which is a big opportunity, which 80% of defense export is driven by private industry. And therefore, that is going to drive the growth of industry in future. And this is something where, if you look at the defense, we look at 130,000 crores of this industry in India, or the budget of government of Indian defense, which is about 2 lakh crores a year, which is spent every year, roughly, capital and revenue budget for defense. But if you look at the global budget, defense and aerospace together is about $700 billion, $600 to $700 billion. And if you were to add space to it now, then it is over $1 trillion. So look at the huge global opportunity, which by creating new technology, which is world-class, we are today no more confined ourselves to this 2 lakh crore budget of Indian government of India, but we are looking at a $1 trillion opportunity, which is there in the defense, space, and aerospace. And a very fundamental aspect to this is that in several of these new segments, this industry is integrated between civil and defense, aerospace, space, AI, IT, cybersecurity, and so forth. We can drones. A large number of these sectors are today the defense industry and the civil industry is getting fused, and therefore players getting the industry will and must take advantage of this whole opportunity. Quickly on the Trump impact. I think while Trump, there is some positive indications on the Ukraine front and on the Gaza war front, but today we will see increased demands from Europe, which will be creating new demands for the Indian industry, which is there, and there is increasing willingness from countries across various continents, from ASEAN countries, from Middle East, from Central Asian countries, from African countries, and of course, in a very big way, from America, North America, and now from Europe, to buy from India, to source from India. So I think all across the world, we are seeing demand from Indian defense industry, which will be a huge driver for growth in the coming years. Last point, specific sectors where one does see significant amount of opportunity. That's in explosives and ammunition, particularly in the large caliber and ammunition, which is of significant interest even in the days of drones and other things. There's, of course, space. We have not even seen tip of the iceberg here in India. The space demand is going to grow exponentially or more. And we will see both in all verticals of space demand, we will see opportunities come. But most importantly, creation of payloads which will allow ubiquitous monitoring of all spaces of interest by Indian Armed Forces would be something of great interest. So new payloads of different kinds, which will allow you to look 24/7 all the time in all areas of interest, and whatever is required at the satellite front, at the ground station front, will be something which we will see happening all the time. And today, a number of our startups are actually doing very interesting kind of work across a spectrum of these things, which will be something in years to come to watch for. Electronics behind all of this, we saw Sunil talk about it. Yesterday, we saw Manish and others talk about it. Electronics is going to be a very, very big part of defense industry. And here, again, we are talking of defense, because when we were importing systems, and I mentioned some of the systems would continue to remain always imported, those are the systems in electronics which are today getting indigenized. It is radars, control systems, it is antennas, and so forth. All kind of equipment are getting indigenized, and this is a huge area which is giving opportunities. Lastly, on the aircraft fronts, Toby is here. I think we may eventually see export of LCA and helicopters, or LCH platform or a LUH platform getting exported from India. It may not happen in the short term, but over in the next 2 to 5 year term, we will see export of these platforms from India. It has multiple things which should happen before this could happen, but I would like to believe that this would happen. One last point, and I will stop for interest of time, and that is a huge change in the marine security profile of the country. There is going to be increasing interest, increasing security perception from the marine side, because of which there will be increased focus on making of ships, naval fleet, and there will be huge opportunity for the shipyards. We will see revival of private shipbuilding industry in the country. In all probability, we will see the third aircraft carrier coming into the country, and we will see increased focus in underwater technologies and underwater naval vessels going forward. Let me stop in the interest of time. Thank you very much, and we look forward to the participation of the panel.
Thank you, Dr. Ajay Kumar. We have heard Sharad speak about strategic autonomy earlier today. Defense is naturally the category with the highest priority for strategic autonomy. The government budget allocation for defense stands at 6.81 lakh crore in 2025, with an emphasis on increasing indigenization, private sector participation, and with an intent to build from Bharat, built for the world. To go deeper into what this means as opportunities, we have our next session on defense, aerospace, and space tech, next $10 billion opportunities. Joining us for this session is Dr. Udayant Malhotra, CEO and Managing Director of Dynamatic Technologies, a global leader in design and manufacturing for aerospace, automotive, and security applications. He is an active industry leader, serving on the CII National Council and chairing the CII National Committee on Design. The next panelist is Mr. J.D. Patil, a whole-time director and senior executive vice president for L&T's defense and aerospace business. It was under his leadership that L&T emerged as a key private sector player in India's defense manufacturing system. Also joining us, Air Vice Marshal Dhananjay Khote, retired, is the Principal Consultant and Director, Strategy and Planning at InSpace, driving the implementation of the decadal vision for the Indian space economy. He was awarded the Vayu Sena Medal in 2013 and the Ati Vashisht Seva Medal in 2019 for his distinguished service. Moderating the panel is Mr. Sanjay Nayak, co-founder of Tejas Networks, a pioneering telecom product company that successfully grew from a startup to a multi-billion-dollar listed company and is now part of the Tata Group.
Hello, can you hear me? Good afternoon, everybody, and thank you, Singularity and everybody else to get us here. This is a very important session. So let me just continue with the context that Dr. Ajay Kumar has so nicely set up. So if you really see the story of India's defense production has been very interesting because it was PSU dominated. 70 years we are technically manufacturing a lot of defense equipment. But in reality, if you really see the progress today, we are really not made much progress at all. So what I would like to do in this panel is really go down into what is the opportunity which you very well articulated, what are the problems, how are we fixing, and how do we really become a defense powerhouse in the world. So 2 or 3 things interesting which come into play is that the nature of defense and nature of wars are changing, a lot of new technology is being introduced, and whenever there's a disruption in any space in the world because of technology or other things, that's an opportunity for innovation. So the way the wars are going to be fought going forward with electronics, drones, and automation, and so on and so forth, is something that we need to look at and see how we can go forward. Number 2, it's very, very clear that geopolitics has said that we have to build our own products. We have to build our own platforms. We cannot be dependent on someone else. Classic example is we are manufacturing Tejas aircrafts in India, but the engines come from somewhere else, the radars come from somewhere else, the avionics come from somewhere else. So really, if any of that subsystem is delayed or not supplied, our entire program really is not effective. And then the last part, which is more interesting, is that the commonality between defense and civil use has diminished to a very, very large extent. 20 years back, the electronics and many systems were specially designed for defense because the reliability, and aerospace for that matter, was not available before. But today, the electronics, the software, and the systems are as reliable for civil use as defense use. If you really see how SpaceX has really innovated, they've taken a lot of stuff which was working very well in the civil infrastructure and then applied it for defense, and were quickly able to get the cost and technology, et cetera, going. So I think this is really the landscape I see today. So if you really see, there are 2 kinds of players which will be needed in the country. One would be large players, which I hope are going to be private sector led, like L&T and many others, who will really be the platform creators. They have to create the large platforms. They have to be the equivalent of the Lockheed Martins and so on and so forth of the world. And there'll be a second set of players who will be the innovation-driven entrepreneurs who will pick point pieces of technology, whether it's an engine, whether it's a cybersecurity system or a chip for that matter, and create that. And we have to really integrate these two together to really get it going. So with this, I would actually start off with Jayant Patil to begin with. And if you can tell us that you have built ships for India, for defense, and if I were to take the aircraft carrier example, in 2003, India and China both, around that time, bought aircraft carrier from Russia or erstwhile USSR. China decided to learn over the next 10, 12 years of what it takes to retrofit, and then by 2012, they were able to get their own first generation out, and by now they have 3 generations out. Whereas India took the thing that let Russia do the retrofit and I'll buy, and the program got delayed and so on. So given that you're in the thick of it, going forward, how do you see we can create a lot bigger platforms, and how can large platform creators like you work with the government in terms of what you expect them to do, and with the private sector ecosystem to really create the powerhouses that we truly need to have?
Good point, Sanjay. Large platform creation fundamentally begins with you doing the basic design in India. And this is one area where India has done well. The issue probably has been that, like Dr. Kumar said earlier, all large platforms till recent years used to be nominated to government companies. The first Buy Global program that Larsen & Toubro won, this was an era, 15, 17 years back, private companies had to only compete or could compete where there's only global players. If there's an Indian program, because the design used to be coming from Navy, it used to be necessarily given to a defense public sector undertaking. So we began our first bang on the strength of completely in-house design by beating everybody globally. And these are ships we built for Coast Guard, 54 of them, and 12 of them we exported. Dr. Kumar talked of exports not happening from India, but we were the first ones who exported by hand-holding this particular country, which Government of India wanted, that this particular nation need to be built with certain special capabilities. So these ships, including transfer of technology and hand-holding them to be able to build, we built 6 ships, 7 ships in that country, 5 we delivered from India. Our ability in terms of shipbuilding, it doesn't stop only with export of doing it for the country. I can tell you 40% of Coast Guard fleet today is Larsen & Toubro designed and built. And that's not a small number. In case of naval ships, we actually began at a very different level, and this is precisely where you come to in case of the aircraft carrier. We began our journey 40 years back designing equipment and systems. What goes inside a ship, 60% of the ship's value is in equipment and systems. And if you do equipment and systems, building a shell around, which is called a hull, it's always easy. So fundamentally, not one single transfer of technology or the licenses we took, 100% of this journey has been entirely in-house, Atmanirbhar, in that sense. So essentially, when you want to build a large vessel, if you do the equipment and systems in India, and especially in the strategic platform that India builds, we today are somewhere close to about 84-85% indigenous, no program, and there's true indigenous. It's not like tier 2, tier 3 importing something you're buying in rupee and calling it indigenous. So this is something which is possible if you really start from the fundamental level. With respect to the big aircraft program, simultaneous to that is a frigate and a destroyer program which Navy is today pursuing. Each one of them, we only keep talking to government saying that don't nominate, let a free market conditions work. If the free market condition works, we will give everybody a run. We didn't have a shipyard when the first aircraft carrier was nominated by government. We created a world-class shipyard. I can tell you all Indian shipyards put together, Larsen & Toubro shipyard is bigger, well recognized by US. So US vessels today come to us for refits. And the refit, when they're actually sailing in this part of the world, nearly 250 US ships sail in the Indian Ocean today, right from the Pacific. So the Indo-Pacific essentially is where that size of US fleet operates. And this is a fleet which regularly keeps calling on at L&T shipyard. Dr. Kumar happened to be present when we had the first maiden vessel that came to the shipyard. And of course, this is now a routine that they keep coming. So building capability doesn't belong by making a hull. It actually begins with the equipment and systems. And if you do that, the entire range of electronics, entire range of sensors, entire range of weapon system, Indian Navy does not import any weapon system today. The journey began 30 years back. And of course, 80% of them have been done by just Larsen & Toubro. So there is a series of developments which have happened over years, and that's exactly where the capability comes out.
Thanks. I would next go to Toby. So Toby, you've been, I know almost now more than 25 years in this, and you started to work with Indian Defense. You got a little bit disillusioned in terms of how the progress was. And then you said, why not look at the civil market and the global market, which is the counter thinking where you do India first and then global. But in the aircraft industry, both civil and defense, I think there's a lot of technology that you've seen yourself personally. So what's your confidence level that why can't we build our own end-to-end platform, the systems, and what does it take to do that? What are the hurdles you faced, and how do you think we can get going, given the government's motivation and the geopolitical situation which allows us to do this today?
That's a big question, but I'll try and be precise. So the opposite of what you just said earlier about the Tejas and all the subsystems being imported, it's interesting, in 1990, we were building all the T-72 tanks at Avadi. And one day I was 25 years old and I woke up and I saw an article in Times of India in 1990 that we couldn't build this battle tank because with the collapse of the Soviet Union, the hydraulic pumps that they were importing, and I'm talking about hydraulic pumps, they weren't able to get from Belarus. So since we were making hydraulic pumps for tractors, we started making these for the battle tanks, and then we started working as a developmental partner with DRDO for aircraft. And that got us into this global, so it's a really an interesting circle. Today, we are design, build, partner. We are a super tier one, which means you not only make major assemblies, but you design them for Airbus, Boeing, and Bell Helicopter. And so we are in a very interesting area where the entire airframe of the Bell 407, the world's largest selling aircraft, from micro parts to the whole structure that fits 6 of us on it, is built in Bangalore. We export 120 of them every year. And if the government was open to it, we could actually be, as Dr. Ajay Kumar talked about earlier, within 12 months, we could be exporting 100 helicopters a year. It just requires equipping. But for that to happen, the government of India would need to not finance us, just provide a fair marketplace. You have a situation where the PSU that makes helicopters today, HAL, has all its helicopters grounded right now. They've had 25 crashes out of the 330 that they've built. It's the world's most dangerous helicopter to fly. You got the world's safest helicopter being built with the entire airframe being built in India by a private company. But there's a mismatch with all the, all the liberalization. And to be fair, with Dr. Ajay Kumar at the helm, we saw a transformation of what we are talking about in defense. So we have come such a long way, and still we are short. And that's the opportunity. If the government just makes the market open to people, you will find a whole bevy of Indian companies giving solutions. So every Airbus that's built today in the world, the flap track beams are made in Bangalore. The center sections of the F-15EX are built in Bangalore. The P-8 power and mission cabinets for all P-8s are built in Bangalore. Chinooks. There's so much industrialization. Then the radar systems for Rafale are built 500 yards from us by another private company, exported to France, and they come back at 30 times the price. So there's an incredible Atmanirbharta opportunity in India within the private sector if the government just opens it up in a market-driven approach. And I think that's the next step that we're missing. Thank you.
Thanks, Toby. I'll next go to AVM Code. You've sort of, had a long innings in the Air Force, and now you're a part of InSpace. InSpace has really opened up the space sector, which is, as Dr. Ajay Kumar said, and all of us know, is going to play a very critical role, both in the defense as well as the, civil side of things. So can you, kind of help us with what all is happening there? What are the opportunities which are coming up? What are the long-term plans so that as entrepreneurs and businesses, we start tapping into that? Because that's an area where India seems to have a good right to win from what I can see, but would like to hear from you what the perspectives are coming out.
Thank you, Sanjay, for the question. And thank you, Dr. Ajay Kumar, for setting the stage for us to build on. And a very good afternoon to everybody present here. So like, as Sanjay mentioned, I was, to start with, in the Air Force, a consumer of the technology that was produced first by the PSUs or by foreign countries and then by our industry, now transitioning into the space area through the Defense Space Agency, and currently with InSpace, which is the space regulator and the space promoter. We have to understand the story of space with a bit of perspective. The entire space story was led by the military to start with. Towards the end of the Second World War, and then through the Cold War, it was a government-driven, government-funded, and driven by military purpose as its primary intent. And it's only towards the end of the Cold War that the technologies built during the Cold War started to spin off into the civilian sector, started to be commercialized, and giving birth to a new animal, so to say, the space economy. So the whole story is in transition, and the opportunity lies in the fact that it's not a stabilized economy or ecosystems, and they're still in the formative stages. Some people a little ahead, some may be lagging a little bit, some aspiring. But it's a story in the making, and that's where the opportunity is. So where's India in all of this? Our space program, among the countries of the world which actually went into developing their own space capabilities, is the only one in the world which did not have military intent as its central theme. It was built around the themes of socio-economic development and welfare. And it took us a long time to transition towards the defense applications of space. And then, of course, unlike China, which woke up right around the time of the first Gulf War, just after the collapse of the Soviet Union, etc., early 1991, they started to put money into space, recognizing the primacy of space to dominate what's happening on the surface. We woke up a little late at Kargil and started to move there. But recently, this whole thing has gathered an entirely new impetus and a new momentum with something that we call the space reforms. A lot of that has come about because of the efforts of the industry and people like Jayantji sitting here. And they're lobbying with the government to move India out of a purely government-led, which is essentially ISRO-led program, and bringing in the private sector into the space domain. So what are the space reforms? The space reforms essentially meant that the private sector was opened in an unfettered manner to the entire range of space activities. Everything from building a rocket, launching a rocket, building satellites, owning ground stations, and then developing the applications that are required till the last moment. And going ahead even to the Indian space economy and the global space economy. So where are the opportunities here? The revenue cycles or the value chains that come in the space economy essentially flow from three major functionalities that flow from space. Satellite communications, which was the first one right from the 1960s onwards. Satellite navigation, which we recognize as GPS or GLONASS or NAVIC. And Earth observation or remote sensing, which includes everything from weather monitoring to surface monitoring, sensing through a variety of different media. And whatever data flows through these three principal technologies is what gets converted into applications that you and I use on an everyday basis. So the internet that we use in our palms, in the mobile phones, comes through satellite internet. The GPS and everything is what we use when we hail that Ola or Uber. and also times our share markets and our bankings and all of those networks. Right? And the Earth observation data is put together in something like GPS maps. So all of this is what actually creates the basic economic structure and the revenue cycle. And then working backwards in a regressive fashion, that is what leads to the requirement of ground stations to receive the data, processing chains and the softwares. Before that, the spacecraft and the satellites themselves, and even before that, the launch vehicles and rockets. So these are where the opportunities lie in the space sector. And there are a couple of other niche areas. One is space situational awareness, and then counter space, which are more into the military domain. So that is where the big opportunities lie. Let me also paint a small kind of trajectory of where the whole space technology story is going. So far, everything has been around the use of space technology for man on Earth. So it's a very earthwards looking perspective. Story so far. Right now, we're in a transition which goes from an earthwards or Earth-centric approach to something that's transitioning to an orbital economy, which means things that are going to be done around the Earth orbits. Earth orbits generally go up to about 40,000 kilometers if you take the highly elliptical orbits, or around 36,000 kilometers if you take the geostationaries. Now, in this orbital zone, starting from 500 kilometers above the Earth, all the way to there, is where microgravity manufacture is going to take place, pharmaceuticals. There is going to be a requirement to build modules for people to be doing experiments in space, laboratories to be operating there, and so on. And the next stage of that, towards which people are already working at a furious pace, is to go into the cislunar zone, which is getting out of the Earth orbits, and into the zone of the Moon, asteroids, Mars, resource mining, and so on and so forth. So that is the big story that's unfolding in front of us. That is where the economic power is going to flow from. So we are in a very major transition, and the whole story is of that range.
Thank you. Now, so we all conclude that clearly we have to build products. The capabilities exist in India in terms of technology, firepower, enough width in the ecosystem that we can have component players, we can have the end system companies. But then there are two things which, when you talk to entrepreneurs, especially when I'm from an entrepreneurial side of things, so I can understand that part more, is where people get stuck, especially working in the defense sector or space sector for that matter, is the long gestation cycle. And these are, true for the products in general. You have to invest a lot of money up front, and then the rewards start coming. And from an entrepreneur's angle, or companies or businesses who want to invest into this space, the guarantee or assurance of business is a very important criteria, especially in defense sector. If you see worldwide, the anchor customer is the local government. So for example, US government is the one which gives the prime contracts to the US defense companies, and ditto for China or Europe or whatever. But in an Indian context, that assurance or certainty is missing. And that is really why a lot of people shy away from developing those products or investing long-term money to get that going. So there are two aspects of this challenge. One aspect of serious amount of funding, because many of these complex platforms take money. I mean, you can't build a very complicated system or a platform without spending hundreds of millions of dollars sometimes. And yes, we have efficiency in India, but we still need that. So how do we get that funding available in a meaningful way to the private sector? Because government has an intent. Sharad and Dr. Ajay Kumar talked about 100,000 crores of R&D funding available. So it has to really go to private sector for R&D funding. Maybe as grants, maybe at whatever else, because that accelerates the pace of innovation. So that's problem number one. Problem number two is the business aspect. So what I want to understand, as practitioners of people who have gone through this process, Toby, maybe I'll start off with you. So where do you think, if you had got the right support from the government, or if you can get the right support from the government, how fast can you accelerate? Because what you represent are at least 10 other companies in the defense sector in the country who are at a maybe 100 to 1,000 crore revenue range, and you would like them to be 10 times bigger. So what is that can be done to really make that happen? And then the same question I'm going to ask Jayan, that you as a system integrator, what can you, create an ecosystem, and with what assurance do you need, and how can you make that happen?
Yeah. One is funding, and one is recognition, not with a medal, but with sustained business and being a preferred supplier in future as well. The winners should get more business. So when we deal with global customers, the great thing is that we've been HAL's best supplier for 20 years. And we are the best supplier in the world as we speak for Boeing, military aircraft, 18,000 suppliers, one supplier of the year, best supplier for Airbus, best supplier for Bell worldwide. The difference is you don't become preferred at HAL. At HAL, you can be the best supplier for 20 years, it'll still be L1. And L1 can be somebody who doesn't understand the drawing and has quoted something lower than you. Whereas when you're a best supplier or a reliable supplier, just a good supplier to anybody normally, you're a gold standard, you'll be at the top of the heap of any future business. So I think that is most important for business continuity because funding gives you just a leg up one time. The long-term aspect of recognizing kabiliyat, capability, that is what we want in our ecosystem. Now, coming back to funding, what's astonishing, because we all look at Elon Musk as a hero for all of us, what none of us knew was that he got $38 billion of funding across his various companies from the US government. $38 billion. We didn't get 37 rupees, any of us. So whatever we built has been just based on 100% kabiliyat with zero fertilizer from the government. So I think that could, add steroids to kabiliyat. Thank you.
Jayant?
I think to begin with, one must acknowledge that within Government of India, 40 years back when I started with this business, there was defense research who was as hungry for good partners. And bulk of the private industry that today exists and who are big players, they actually were development partners to defense research. Now, you asked about the funding. That was a basic route for funding. Unless you were having ton of money in your own pocket, like Toby talked about, obviously that money you could put in, but the biggest worry was you don't stand a chance to get any order. Now, what happened with defense research funding is if you did it with defense research, and if it is successful, and we did about 100 programs for defense research, leveraging the knowledge with defense research, we did 350 more on our own. Now, how do I do it? It builds a virtuous cycle because what you did brings in money and you pump that money back into your own ecosystem, and that's how you become bigger. Starting with small equipment and systems, we today are mega platforms. We can do all that. I must say that this is measurable, not only in the warships and submarines. There's only one player in India who can design warships and submarines both. On land, only one player in India who can build complete artillery, air defense, and battle tanks. And we beat a global record in creation of a new battle tank in the form of the light tank that is recently now, currently still in trials. And I must say, from the first thinking after Galwan happened, the tank was ready in 3 years. From the development order, we went to DRDO for funding. We said, big money is needed, how much you can give? So it's a joint development with DRDO. 131 crore is what government could give. Balance is my money. Tank cannot be created in 131 crores. From the development contract, 19 months is 5 times better than what anybody can do in the world. So if you build those elemental capabilities and constantly pump in money in research, then you can achieve it. Now, second aspect of it is not just being able to put money in R&D, but being able to put money and trust your suppliers and the supply chain who actually never are treated as vendors. You treat them as your partners. Now, I leverage what we did in case of the Vajra program. Vajra program given to a government company would have taken more than 10 years. We did it in 3.5 years. Same program which was developed for desert is as successful in high altitude with small innovation. And innovation happened on the fly. Now we built a supply chain of 1,600 partners. Now these 1,600 partners one could leverage at the time of a light tank, and then you can create a world wonder of 19 months. So the way to do it is, obviously, initially you need funding. In mega companies, your company is willing to put in that. So Larsen & Toubro's case is we always had a nationalist leadership across generations in the company. We put in money. So this is the initial money, supplied, thereafter supported by DRDO. Start out that virtuous cycle. You leverage your own capabilities, pump in more and more money in research, more and more into your development, more orders come. And if you did a differentiated development, like what I talked of a light tank, second peculiarity of Indian user, world's worst environments all combined put together you find in India. You have a user who says, operate in marsh, operate at sea, operate at desert, operate at high altitude. Nowhere in the world, any equipment which is built, I can tell you out of decades of experience, can ever pass all of this. And this is where the customization for India comes in. And if you customize it with your own knowledge, there's assurance of, not by policy, but assurance that you will get the order. Because if you customized it, it's your order. And then you can pump money with that confidence that only I know how to navigate across these 5 segments. And then, of course, you get it.
AVM Court, I mean, in terms of the space sector, this is where we have seen a lot of, because it's a relatively new sector for the startups and beyond ISRO, over the last 4 or 5 years, the amount of action which we've seen and the development and innovation we've seen seems very exciting. So how's been the working of the government directly with the private sector and what have been the results? Because that's a good blueprint to replicate it across sectors, because when you're open to working with private sector, we are open to working with entrepreneurs, give them money, give them some form of a, initial anchor order, the results are quite, positive. So what's been the experience and what more can be done in the other areas that you are aware of?
Thank you, Sanjay ji. Let me explain a little bit about InSpace. InSpace was brought into being about 3 years ago as the nodal body to steer the progress and the advancement of the private sector in the space domain. So India's space industry was, in an end-to-end sense, practically non-existent. But there was a vendor base of over 750 vendors across India, which had developed with ISRO, because ISRO used to outsource a large number of components and sub-assemblies and parts from them. So the opportunity that actually stood before us was that a large number of them, who were used to making space-grade products and components, could vertically and laterally integrate and go up the value chain. So that was the starting point. Now, InSpace, with its mandate to both authorize and regulate the space sector, since there was such a requirement with the private sector's entry into it, and 2, to promote and enable the space sector, it wears a double hat. And it's a stroke of genius that both of these functions seemingly counterintuitively contradictory to each other, because one is an auditor function, a regulator function, and one is a promotion function. But these were put under the same person. Okay, and that's, I think, a stroke of genius that's happening. So what does InSpace do and how does it go about it? I'll just touch upon 3 or 4 things here. One is the regulation and policy framework. And there, the government of India came with the Indian Space Policy 2023, the Geospatial Data Policy of 2022, which liberalized the access to space data, which was lying in ISRO's archives, and made them available free of cost to a particular resolution levels, up to 5-meter resolution level, to any private sector entity which would want to use that to create applications. The Indian space policy itself pulled out all plugs and allowed the Indian private sector to participate in space activity. To follow up on that, InSpace came up with an elaboration of the ISP 23, the Space Policy 23, through a large document, about a 180-page document called the Norms, Guidelines, and Procedures. And with all of these policy frameworks changes, there are 2 other important things. One, InSpace becomes a single window agency, something that we take very seriously, and the whole idea is ease of doing business. And so multi-ministerial clearance processes have got compressed into one single committee. The next part is making available access to technology, because the new industry did not have access to space technology. It was all within the ISRO domain. So what is happening here now is there's a transfer of technology happening from ISRO, InSpace being the conduit for doing that, to the non-government entities and the private sector. And as we speak, about 80 technologies have already been transferred, matured and perfected technologies have been transferred to the private sector. Large projects like the PSLV which has gone to the L&T and HL consortium, and also the SSLV, are going to be operationalized entirely by the private sector. Then there is access to finance, the 1,000 crore VC fund that Dr. Ajay Kumar also mentioned. So that's one of the things that's coming. That's the government sectoral fund which the government is bringing in. In addition to that, there's a 500 crore technology adoption fund that has just been announced a few weeks ago. In addition to that, InSpace has its own seed fund for the early stage startups. In addition to that, the government of India has got as much as 1 lakh crore coming out of the ANRF, the Anusandhan National Research Fund, and many other funds which are under the Ministry of IT, MIT, and also Ministry of Commerce. So this is the kind of funding that is now flowing in. So whatever we just discussed a little earlier, that there was a lack of funding from the government, I think we've learned our lessons, and there can't be a bigger signal than this. There are thousands of crores flowing in there.
Yeah, thank you. Just in the spirit of time, I want to get to a closure. So, Jayant, I'll start off with you. So, given where we are today, and there are so many things we could do in defense, but if you say we're going to be a world champion in everything, it's not going to happen. So, if you were to pick 3 areas, 3 platforms or 3 areas where we think over the medium term, in this case, it's a 5 to 10 years, we can have an Indian company in the top 5 in the world, whether it's a drones, or shipbuilding, aircrafts. What would those 3 areas be from whatever you have seen so far?
Learning from history, one obviously is the one who controls the sea, controls the world. Yeah. Today's parlance, obviously the sea becomes extremely important because probably more than 85–90% of cargo moves that way. And that's where the sea becomes extremely important. India has proven to be extremely competitive when it comes to highly engineered vessels. And that highly engineered vessels is where we probably, given certain amount of issues which the government can sort out, if it is sorted out, we can be world leaders. Second is space. Mm-hmm. And that's essentially for a reason again, the amount of IT and the IT-enabled services and the kind of services industry that India has built, we are the world capital on IT. If we put the data side, which AVM Code talked about, and this put together, and also deliver what the space systems are, all of us who've been building, we're building 54 years, the space launch systems. So with that, I can tell you that it is less than 1/10 of the cost of a rocket, which India builds as compared to anybody else in the world. Now, this is essentially where it's only opening of minds, right kind of policy, and then one can capture the global markets on not just the space, shipbuilding. Third, we heard amazing stories on electronics, and Manish also is seated here. We actually can rule the semiconductor market in decades to come. And that's something, again, purely on the power of the manpower, the talent. That's essentially where we have it in abundance. The world doesn't. The world is aging. We are still young.
Absolutely. And maybe, Toby, last question to you. In terms of, given the new geopolitics, how big is the export opportunity? Can India become, even for component suppliers or subsystem suppliers, how can we be 10x or 100x of the size we are today? Because that's an independent business which can run without the intervention of India as a country, and something that you have really excelled at. So what does it take to create a lot more companies like yours and even bigger versions of the same?
It is going to happen for sure. And I'll explain why. One is what Jayant just said. The world is aging. India is a youthful country. And it's a youthful country that is better educated than it ever was in the last 50 years, and very aspirational. The second aspect is that in the West, there's been a very massive financialization of the aerospace industry to its detriment. A lot of the very traditional aerospace suppliers which had high technology, which went into the bigger platforms, those companies in their third generation got sold out to financial owners. And in the last post-COVID era have actually become, they've got destroyed. And you've been seeing it in the form of what has happened to Boeing. The spirits of the world actually are affecting. So what's interesting is India has youth, it's got capital, it's got skills, and it's got entrepreneurship. And that's really going to drive a very large number of Indian companies to the dream that you have 10x, 100x. Thank you.
Thank you. Since we are out of time, I would really close this, but thank you again for a very, deep discussion on the topic. Thank you.
Thank you to all the panelists. We request you to accept a token of our appreciation from Singularity. May we please have Mr. Sandeep to do the honors. Our next session is on electronics and semiconductors, the next $100 billion opportunity. India's electronics and semiconductor sector is at an inflection point, poised to become a $500 billion industry by 2030. This session will explore India's journey so far, competitive edge, policy support, and breakthrough opportunities across the value chain, and how India can become a leader in this. For the panel discussion, we request Mr. Raja Manikam to join us on stage. He is the founder of IVP Semi, a fabless semiconductor startup. He previously founded Tessolve, the world's largest independent chip testing company, and has served as CEO of Tata Electronics OSAT business. The second panelist is Mr. Dilip Sawhney. He serves as the MD of Rockwell Automation India, a global leader in industrial automation and digital transformation. He has 3 decades of experience in industrial automation and healthcare technology industries. He also chairs CII's National Committee on Smart Manufacturing and also serves as on CII's National Council. The other panelist joining us is Mr. Vinod Sharma, MD of Deki Electronics, one of the leading manufacturers of film capacitors and recently expanding into EV charger solutions. He has held leadership positions at CII National Information Communication and Technology and Electronics Committee and CII UP State Council. And moderating the session is Mr. Manish Sharma, Chairman and India head of Panasonic. He has played an instrumental role in scaling Panasonic India's operations and expanding footprint in India. A strong advocate of the Make in India initiative, he has been a key driver.
Okay. Yeah, we can begin the presentation. Thank you for
the
introduction. Would be duplicated because you were kind enough to do that yesterday as well.
Thank you, sir.
In the interest of time, I'll begin with the presentation. First of all, thank you, Singularity team. You pulled off a fantastic event. We couldn't blink an eye yesterday, and so has been the case today. And we find ourselves lucky to be witnessing massive insights coming in since yesterday. So wonderful job done. I'll take about 7-8 minutes because much has been spoken since yesterday on electronics. We do understand where have we come in specific in the decade gone by. There has been a reasonable visibility on where are we headed to in specific again towards 2030. But in this presentation, I'll begin from the vision itself. And there has been a couple, I know, structured research and studies conducted in the recent past to imagine that how should the electronics industry look towards 2047 and the impact which it should create. And then we traced it back to the immediate effort looking towards 2030. And I'll talk about that in this presentation. The bigger goal towards the centenary of our independence, which is 2047, there are multiple aspects, but essentially 4. The big vision is to achieve 12% of the world share into manufacturing, which currently stands at 3.1. And again, this entire presentation is specific to electronics as an industry. And the second one is that how do we look at the total share into our GDP, of manufacturing and infra from a current level of 29 to 32, which essentially means that this moves faster comparative to the other contributors in the economy. And third is, I think world is already start to talk about Industry 5.0, and my friend Dilip, I'm sure, is going to throw a lot of insights, having leading Rockwell Automation in the country. I mean, they're doing some phenomenal work. But how do we become a world leader? And this would be about a lot of things, not only embracing technologies, but say customizing them to improve productivity, efficiency, and a lot into manufacturing spaces. And in this whole process, have a razor-sharp focus on ensuring that we achieve self-reliance into strategic products. Semiconductor, for sure, happens to be one of them, but I think the journey towards enabling self-reliance into matters like semiconductors or display fabs will undergo a few steps, which we'll talk in our conversation today. It's a busy slide, but the levers which we are wanting to move from a current level to 2047, $120 billion was last calendar year. 23 was about 100. It's growing, but not at the pace at which we imagine. So the potential is to take it up to $3 to $3.5 trillion by 2047. And then again, as I said, the contribution, the share in the GDP from a 3 to 8 to 10%. And exports, I think, should play a significant role in enabling competitiveness and economies of scale. So from 24% of this $120 billion, 24% is exported. And a very interesting indice is that the value addition also is roughly about 24%. So I think it's a massive potential on either of the sides to look forward towards improving the value addition and also enabling the exports. And of course, it's going to create jobs in this whole process. I'm sorry, can you help me change this slide, please? All right. We at FICCI utilized McKinsey to come together with us to, again, conduct a structured study to see that where does this opportunity move in specific towards next 4 to 5 years. And we did this study in 2022 in the backdrop of significant shifts which have happened in the recent past. The total shift of trade potentially which is going to happen towards 2027 between these 5 years, the potential is about $4.6 trillion for a variety of reasons. Few geopolitical and few which are getting fueled by individual countries' ambitions, and a potential economic nationalism cutting across a lot of geographies. And India's potential to grab out of this $4.6 trillion is a clear $1 trillion. This is our opportunity, which is going to be ahead of us, and it is completely up to us to see that how much of that is grabbed out of the shifts which are going to happen. And of this $4.6 trillion, China is going to lose $2 trillion, of which about $1 trillion is electronics, where clearly there is a massive opportunity for our country to look. May I have the next slide, please? Again, I would not be repetitive, but I think massive opportunity of the indices which I covered in the previous slides. Next slide, please. We'll talk about semiconductors. Raja is kind enough to be on the panel, and we'll dive deep into that. But I think semiconductors cut across several applications. If I can share what I have myself mentioned in last decade gone by, that, yeah, while we should be very serious about semiconductors, but we should, in some sense, not have obsession to set up foundries in the country as immediately as we were looking forward to in the decade gone by. Because the ecosystem is such that there can be multiple ways to reach to a situation where we look at the fabrication to happen in the country. And I believe in that ecosystem, which the panel will speak, there is so much of work which has already started to happen and many opportunities. And the second perspective is that within semiconductors, I think we have to find our own play, that which are those applications which we should immediately focus in specific in driving initiatives into designing, which is the fabless or the OSAT initiatives which we'll take. Next slide, please. And again, we all know that the demand of semiconductors in the country, in line with the continued improvement in the demand of electronics, is going to grow. And from a current level, it is going to go 4x by 2030 and would stand at about $150 billion. And even if we are able to grab 10% of this, would be a huge opportunity to deal with. And This is a slide which I think in last 2 days we have witnessed a couple of times, but a structured approach has happened. And I mentioned that yesterday, that if you look at the decade gone by, initially there came CAPEX incentives, then came a phased manufacturing program where a better visibility and transparency in terms of change of tariffs was clarified, and then came the production-linked incentive schemes. And if you look at them from a holistic perspective, I think my encouragement to investors, in specific to entrepreneurs, would be that I believe if you put these pieces together, sometimes we feel that the disability is such that it is difficult to make projects, variety of projects into electronics, in specific into manufacturing, viable. But I think if you put your pieces together and be smart enough, like Mr. Sunil Vachani spoke about the fact that they were one amongst the few companies, sheer because of the kind of speed which they demonstrated in line with enabling the compliances, got benefited of the PLI schemes which were announced. And this is potentially my last slide. I think 2047, of course, will come soon, but is far away. So industry has clearly set its ambition for 2030. From a current level of $120 billion, Honorable Prime Minister's expectation from the industry is to take it up to $500 billion. But again, then I said that a structured study reflects that 425 is clear possibility. And from a current level of 23-24% of value addition which happens in the country, we can clearly target a 45%. If you look at the compounding impact, from a current level of $25-26 billion of local value addition, of which I believe that a lot is also coming in from elsewhere. We might be doing minor value additions here. The potential is to take it up to $170 billion. So imagine that not only at the level of the industry itself, but at the level of component manufacturing and the sub-assemblies, there will be a huge opportunity, additional opportunity of $120, $130 odd billion created in next 5 to 6 years of time. And we should have bigger ambitions to take the exports also double in terms of the percentage contribution which comes. And of course, in this whole process, as I said, we will be able to create a lot of jobs. And we have just about 20 minutes remaining, so I'll utilize the remaining time to have conversation and precipitate insights with the panel. So thank you for joining the panel. And Vinod, I will come to you first, because I think the conversation in the decades gone by is such that we do not have enough aggregated demand for components in the country. And possibly now the argument is that we may not have enough access to technology to be able to do components in the country. And again, this would be true for semiconductors also, while access with technology, design, say the capital equipment which is required, matters like those. Another major issue might be that if you're not integral to global supply chains, you know, industries continue to witness demand shocks. And if you're not integral to global supply chains, then you may have massive inefficiencies in your overall operational management. So if you can begin with some reflections.
Sure. Thanks, Manish. Thanks for having me here, Singularity. My vision is that at least for Singularity the third anniversary, electronics will be on the first day of the show. And I'm sure that we will make it there as an industry, because that's the potential that exists. But very quickly, just 3 or 4 thoughts that come to me when you talk about electronic components, something that my company has been doing for the last 4 decades and trying to survive. Number one, so if you look at the figure, let's look at electronics, and you mentioned a lot of figures, but I like to put it slightly differently. In my opinion, the whole electronics business from a demand perspective is about 4.2 trillion in the world today, right? I know Sunil mentioned a lower figure, but that's the demand, that's the manufacturing side of it. But if you look at it from a demand side, it's 4.2 trillion, divide that by the population of the world, about 7 billion. You're looking at $600 per capita is the total electronics per capita demand. In India, we are scratching the surface at less than 100 at the moment. So that's first. So the demand is going to be there, not only in India, but for the world. The second, if I were to look at, and Raja is here, so you may disagree with some of the numbers, but I'm just approximating them. Of that $400 billion, 60% of that, and so I simply follow this rule of 60%. 60% of the 4 trillion is the total BOM, right? The rest of it will go into marketing, spends, and distribution, et cetera, et cetera. Of that 60% of that is electronic components. The rest is mechanicals and several other parts of it.
Of that 60% is semiconductors, and 40% is something that I like to talk about, and that is a massive number, right? Now, what are those electronic components? And for simplicity, I always use this acronym, PEPCAMs. PCBs, electromechanicals, passives, which is the area that I come from, capacitor, resistor, inductors, connectors, actives, which are not semiconductors, diodes, for example, right? And then magnetics, which is very important, and finally sensors. Sensors alone, you'll be surprised to know, we got a study done, 28,000 crores is the import of last year of sensors into India. Indian government has spent so far, MeitY has spent 1,000 crores on research on sensors. So that's the kind of potential there is for each one of these. The good news is, first the bad news, is that we went to zero duty on these components on 1st April 2005, thanks to the ITA one that was mentioned earlier. So every single capacitor I sell has to benchmark with Japan on quality, with German standards on reliability, but with Chinese prices and Indian payment terms. So that's the kind of company or the kind of electronic component ecosystem that has survived so far. The good news is, last month, or this month rather, we have had the notification last week of the electronic component policy. For capacitors like mine, this means 8% incentive on OPEX, right? So for the investor community, I would say, look out for this space, because this is the area where physics, chemistry, minerals, polymers come together and for the first time begin to be called electronics, right? So the kind of bandwidth on technology, the skills that we require, and as you rightly said, a lot of that, while the GDP of countries has multiplied within 2-3 decades, starting with Japan, Korea, China, Taiwan, all on the basis of what we are talking about, right? So that time is coming for India now.
Vinod, if I can quickly build upon this one, because electronics might be complex, but I think we are at that cusp of time where we should start to not only let the population of the boards to happen here, but start to do laminates, PCB boards, and electronics, for the sake of simplicity, is about a lot of components riding on a PCB board. So those are like active and passive components. And you made an interesting point that sensors are witnessing huge surge of demand. Fundamentally because products have started to talk to people, products have started to talk to each other. And I have a feeling that this will exponentially grow. Would you like to add a bit on that? Would people who have interest, say, in these domains, in particularly, say, access to technology being limited, can people begin with looking at these products and, say, designing them from scratch and customizing them for the Indian requirement? Can this happen here?
Sure, sure. I look at the whole electronics piece as a 4x400 meter relay. So the first 400 meter relay, we seem to be doing well in that first leg, which was the assembly. And Sunil mentioned assembly of mobile phones, 20% iPhones being made in India. But don't forget that that came at a very heavy cost to us, right? I'm not taking away from that policy, but just to give you my own personal take on this, is if you look at a typical iPhone, which is $1,000, right, sold to a customer, and India put a 20% duty at that point of time, so an Apple had a choice. They could they could export to India from wherever they were in China, and a consumer would have to buy it for $1,200. Wasn't a great idea, so they decided to come into India, brought in Foxconn and Wistron and Pegatron. Great. What did they do with that? When a Foxconn starts assembling an iPhone, my guess is, because these numbers are not public, my guess is that the iPhone is then the factory price of that might be $600 for that same phone. On $600, Foxconn probably gets a $10, $12, $15 to do that piece, right? But the government of India through PLI paid them a 5% average on the $600, $30. We are giving $30 to do something which is $15. But it was a very pragmatic policy, because that's why we are able to discuss the sector today, otherwise we wouldn't have existed. But that first leg is done, assembly, and differently was done for air conditioning or LEDs or whatever. The second leg, if you want to, what happens if PLI is on a sunset clause tomorrow? And government says, sorry, we are not going to renew this. And Vietnam says, I'll give a 5% or a 6% or a 7%. There'll be a lot of flight of this assembly happening at that point of time. But, the world is not that simple. So my guess is that what we need to do very quickly is the second leg, which is, this erosion has to be mitigated. And that can only happen through the components, which is the second leg, which is semiconductors and non-semiconductors. The third leg is design. Because do remember that a Korean company, a Samsung, still will buy a PCB or a capacitor or even a nut and bolt if it is Korean. They will prefer that. The Japanese will do the same. Unfortunately, in India, we have a slightly different culture. I won't go there today. But we need to build that component and the design phase in India. And the fourth leg, the last one in my opinion, is where Indian brands begin to be recognized as electronic brands around the world. When we'll have our own Panasonic, when we'll have our own Sony or our own Samsung. And so that's a little far away, but we need to do all four. Yeah.
Got it. Thank you, Vinod. Raja, coming to you. So, in the whole ecosystem of semiconductor, I think we've been dealing with this argument and what comes first. But I think in last few years, we have started to find our place when it comes to the ecosystem, the design, the packaging, the testing. How do you see that going forward, say in next 3 to 5 years of time? And would there be a hint, would you like to give to people who are wanting to get into this ecosystem in any particular capacity?
Well, my advice is you should, but let me explain a very fundamental thing about semiconductor. Most of you are finance folks over here, and you have a financial metric, right, in order to invest. And I'm not very familiar with all the financial metric. But I'll tell you this, right? See, semiconductor is very fundamental. The reason why you have, cell phones, in your accessible, there's a company called Qualcomm, right? Qualcomm came up with the CDMA technology. CDMA basically, changed the scope of how you transmit data, right, in packets. It's called cell-based. That changed the way you do, cell phones. And that kind of, improved, 100 times how you packet the data and send. Let's just give you one example, right? And then you have, today we talk about electrification and the EV and so forth, right? And then you want to have, very fast charging capability. There's a company called Infineon. Infineon is a spin-off of Siemens. And Infineon came up with this, material change to use silicon carbide. Semiconductor is primarily was, based out of silicon. And they came up with silicon carbide and GaN, gallium nitride, which fundamentally changed, right, how you charge and, So my point is this: when you look at a semiconductor investment, you have to look at it a lot more as a fundamental technology. And if we want to be a player in India, as we talked about all these meetings where in the next 10 years, can we become at least one among the 10? We have to look at it as a long-term, a fundamental research-based technology player. Now, how do we get there? Obviously, right, we can't get to a level of NVIDIA, for example. Right? Again, NVIDIA is another very classic example, right? Today we talked about the data centers. The data centers are there and growing because, again, a fundamental technology in computing. And that computing is also, has generated a lot of, power requirements and so on. Now, we can solve the power problem. Now, those are kind of things that we want to do, right? We have an opportunity to take leadership in that. And we talked about frugal engineering, in the defense sector, in space, and so on, right? We can launch 1/10. The same thing applies to semiconductor as well. We can create products which our rupee will take us a long way as compared to Western countries. And the solutions that they come out of the Western countries are solving a Western problem. Whereas I think the solutions that will come out of India will solve global problems, right? Because it will be more affordable and it will be very fundamental in changing because the way we think is also quite different. So my point is this, right? We always talk about, setting up the manufacturing and so on and so on. I think fundamentally we have a very strong research. We have very strong designers. I personally come from a design community as well. We feel that we can take charge. We can control the destiny of what kind of products we make. We would start with, probably making very similar products, but very quickly, we will start making derivatives of the products, and then we'll start making newer products that will address the real problems.
Yeah, Raja, thank you. So building upon this one, a quick one, like suppose on the supply side, much has been already spoken in specific for the talent. I mean, someone spoke that 20% of the designers in this space are Indians. So we have the ability to design in the first instance. And look at the demand side. I mean, it's a very wide demand which exists of the complex ones and the simple ones. And I've reflected in the year gone by that there should be few applications we should be immediately looking at. And I know that you're yourselves taking initiatives in building solutions for controllers. Controllers are getting into products in abundance. I mean, a lot of white goods would use controllers, would not be the case 10 years before, since, say, inverter air conditioners, etc., came into abundance. And the second application, which I believe is products, as you rightly mentioned, where we can build a global value. And I think things into data security, etc., CCTV, for example, is a rapidly growing industry in the country and can be a huge encouragement. Today, in our country, we are about 15, 16 cameras per 1,000 people. We did a study a few years ago. China was about 260 cameras per 1,000 people. That is the kind of potential. So again, the chips which go into the CCTV cameras and the recorders are immense opportunity to look at. Would there be more applications would you like to recommend?
No, I think certainly. See, I'll give you an example, right? Somebody talked about air conditioners. The air conditioner penetration in India is probably at a very low number, and it's supposed to go to, I don't know, 25, 30% or so. Now, do we want to create the same air conditioners that is there today? Or we come up with a technology that will reduce the power by more than 50%. There's technology there in order to do it. Of course, the incumbents are not, willing to bring up those kind of products. But this is where I think, we are at a very early stage, and semiconductor being a very fundamental technology, we have the technology. We have the technology, and if you club it with the solar, which is distributed, power production, and is DC, so you can use DC to DC instead of having to go through the AC, DC, AC, AC, DC, DC to DC again. So you can create DC motors, for example. So there is a lot of those kind of things that are coming up. I'm just giving you an example, which fundamentally can change, right, how we produce products out of India. And these are the areas that I hope, investors like you will take a chance. And the investments required, right, again, please understand, the myth is, in order to create a semiconductor company, right, you have to put hundreds of millions of dollars. There are lots and lots of simple products that you start with, right? You build an industry one brick at a time. And we've done this, I've done this in India as well, quite successfully. And I think this is an opportunity for investors to look at it seriously, because you could build a multi-billion-dollar company out of India, because it is a huge market.
Right. Raja, I'll come back to that for all three of you towards the end, because time is limited, but you've given me a good hint. Imagine that you're an investor yourself, and I would request you to start to think. This would be my last question to you. Imagine you being an investor yourself. With whatever capital would you like to invest, $10 million or 20 or whatever, what would be your recommendation within, say, in your own domain for this money to be invested? Coming to you, Dilip, I mean, when I started my career, mid-90s, I think factory automation was central to logic controllers. We all ran our fingers on those logic controllers to, say, control the machines. It has come a very, very long way. So if you can very quickly elaborate on that one, that what does factory automation mean today? And second is, I think this, I would like to stand corrected, but again, the feeling is such that as a part of the global mandate to set up factories which are very similar to the ones which are set up elsewhere for multinational companies, they naturally, logically adopt technologies and automations within their factories which are similar elsewhere also. But in specific, the small and medium enterprises in the country seem to be not adopting in the first instance. They are not proactive. They might be reactive in some cases where some amount of hand-holding or education would happen from the OEMs. I would like to stand corrected on that one. So how do you see the trends, and what would be your advice in specific to the small and medium enterprises?
Sure. No, both great questions. First of all, what a great event it's been, and glad to be a part of it. Let's talk a little bit about what's going on in manufacturing. The figures that you shared with us, you had manufacturing going from 14% to close to 20%, and that's an imperative. Why that's an imperative, we don't have time to talk about, but you all as investor community understand exactly what I'm trying to say here. Manufacturing needs to transform. If India really has to cross the next hurdle, which is 5 trillion economy. Now, manufacturing is a very complex game. Manufacturing is also hugely competitive. And the factors that make it competitive and complex are only getting accentuated. A lot of dependence on raw materials, which are getting harder to access, energy prices, very expensive. Vinod made a very good point yesterday about how do you attract a workforce, so skills, all of that kind of stuff. To boil it all to the very basics, what I'm trying to say is there's a lot of complexity involved in manufacturing. And I'm not talking about electronics manufacturing. I'm talking about manufacturing of any type, right? Consumer goods to automobiles, etc., right? Now, how do you cut through this complexity? How do you allow the entrepreneur to begin to scale, overcoming all these hurdles? That's where, Manish, the question you asked me, that's where the role of factory automation, industrial automation comes in, right? It gives you a way to have much, much better, you begin to connect with industrial processes. Through sensors, bring it to platforms that allow you to then program instructions that would allow you to automatically tackle situations that get arisen in the real time, in production. And when you're producing stuff, let's say you're producing, there's a lot of discussion about pharmaceuticals. Whatever you produce, right from the ambient conditions to the batch that was produced, there has to be a very high integrity audit trail about everything that is getting done, right? How do you manage all of that? Pen and paper doesn't cut it, right? So to orchestrate any kind of a production process, you really need to have factory automation. Now, that has been the state for a set of years. Now, unlike consumer electronics, industrial electronics is a very, very mature field. Some people don't really appreciate that. Like you and I, we started our careers and we are already working on these kinds of technologies, right? So what's different? Well, what's different now is the kind of connectivity that exists right now, right? It allows you to connect, first of all, across your manufacturing, right? Machine to machine, machine to human, and then manufacturing as a silo to the rest of the enterprise, right? Why is this connectivity important? By having, uncluttered visibility across your enterprise, you're able to take decisions much more simply, in a much more agile manner, which can put you in control. And that can all be boiled down to greater competitiveness, since we don't have the luxury of time today. So I'll encapsulate it in that manner. Yeah. So by adopting factory automation, you're essentially creating massive competitive advantage, right? And you have to keep on evolving. That's point number one. You spoke about MSMEs. Now that is very important. Why is that important? If you unpack the Indian manufacturing sector, something like what, about 90% of the firms that make up Indian manufacturing are MSMEs, right? So they don't have access to the kind of resources that the larger firms have, right? So how do they then scale, right? And by being laggards in terms of adopting technology, they are depriving themselves of what could actually help them become much, much more nimble, which is their advantage. They can actually unlock much greater growth because they don't have the technological debt that sometimes the larger enterprise carry, right? So it is important for MSMEs in particular, especially in this day and age, when you have access to technologies that do not require a lot of on-prem systems. There's a lot of this technology in the shop floor that can now be consumed as a service, right? which is very well suited to MSME sectors, right? So yeah, those are some reflections, some thoughts.
Thank you. In the interest of time, I'll come to my final question. Vinod, if at all being an investor, you would like to look at a particular sector, segment, partnership, what would that be?
So I think this lifetime I decided to dedicate it to passive components, but so remain active in passives as I call it.
Can you make it simpler for people? What does passive mean?
That's right. So yeah, so on a board, as you said, all electronics is on a PCB board. You will have some active components, semiconductors like what Raja does, and then the rest of it, there are mechanicals, etc. But passives are what you may have learned in school physics, LCR, inductor, capacitor, and resistor. Those are the potatoes and onions of anything that you want to make. So without these three components, you cannot have any electronics. And why is that very interesting? For three reasons, very quickly. Number one, components around the world has a very high entry barrier. Anybody who wants to get into capacitor manufacturing, I always invite them to my factory in Noida. Once you do a 1-hour tour of that, you will do anything else in the world but not components. Because it's a very complex. 1 rupee capacitor takes me 4 days to manufacture. I do 4 million pieces per day. You can imagine tracking, you said industrial automation, to keep an eye on 4 million pieces of anything can be complex. But that's also the good part, because you will always need capacitors and somebody needs to do it. Who better than to people like me who have dedicated 4 decades to it? The second part is, it's from an investor perspective, most components are an investment to turnover ratio of 1:1. Right? So in the good old days, the profits allowed that to happen. Now, of course, we are in a different world. But when you are talking of a $100 billion opportunity, it's really almost $100 billion of investment opportunity, not just turnover. So that's the second reason why you would. The third for me, specifically, if I look at passives and capacitors, the energy transition was discussed yesterday and today. This is the first time that electronics and hence capacitors and resistors will play a role even in the generation of electricity. Right. A solar inverter is a lot of capacitors and electronics, a wind inverter, the storage, the electronic substations, the storage station, etc. Yeah. And the whole smart grid business. And then finally the electric mobility part on the usage side. Right. So I would stick to that, and I would really welcome all the investing community now to look at components very seriously.
Yeah, sure, thank you. Dilip, not specific to products, but would business models in your vertical evolve? Is there an opportunity with entrepreneurs to look at becoming system integrators or installing, commissioning?
Absolutely, yes. I think it's a very complex ecosystem, so there's a lot of space, a lot of room for specialists, and that's where the role of system integrators, line builders. So there isn't a type of automation company that's out there. There are multiple types. So as line builders, original equipment manufacturers, whom we call as machinery builders, they are automation companies in their own right. So yeah, I mean, all of these, and they are mushrooming. There's segments within that as well. Packaging, we consume so much of packaged product. Right, enormous. One theme, and it was good to see yesterday conversations about AGV companies coming out of India, scaling up. So that's another one sector which is very, very attractive.
Wonderful, very encouraging. Raja, any final comments from you? Being an investor, what would you like? Are we looking at a situation that a lot of people are diving into fabless now? Would that be the case?
Yeah, I think we should take some baby steps, right? So one of the things that just staring in front of us is the electrification, right? The government is putting in 50 gigawatts of solar or so per year, or aspirationally. So there is a lot of products that will fit into that, the electrification. So if I'm an investor, I would look at creating power products. Another point to make is also, you see, when you give a problem to a Western company, right? Let's say NVIDIA, right? The data centers and so on. They will come up with a very expensive solution, right? Because they have to sell an expensive solution so that they make money. The same problem, right? You give it to a Indian startup, right? With a very limited access, right? He's going to come up with a solution which will be very practical, very frugal, and so forth. Maybe not as good as the NVIDIA solution, maybe 90% good, but that's good enough, right? And then you can build around it, right? So I think, one of the things is, certainly power is a very, very straightforward thing in my opinion. And then maybe probably microcontrollers and so on. I think the kind of, GPUs and all that, we can wait for another 10 years before we go.
Agreed. Yeah, thank you very much. In this spirit of time, I would conclude the session. Much appreciated. I think a very diverse set of views coming in. And I take your point, Vinod, next year we should definitely look at ambitiously moving the needle and finding our space, if not in the first session, but on the first day. Thank you, everyone. Thank you, gentlemen. Thank you, Singularity.
Well, thank you very much. We request the panelists to accept a token of our gratitude. May we please have Manish and Nischal to do the honors. Thank you. Thank you. Our next session is on AI and data center infrastructure, the next decadal opportunity. AI is fundamentally transforming the way we work, live, and govern. By 2030, it is estimated that 7.5 billion connected humans will be living together with 30 billion intelligent connected machines in this intelligence economy, as per PwC. This would be the dawn of the intelligence age. In this session, we will hear about the role India can realistically play in shaping that trajectory, how we can reach the goal of Viksit Bharat. The session will be moderated by Mr. Umakant Soni, a leading AI strategist and entrepreneur with over 15 years of experience in AI development and investments. He co-founded and served as the founding CEO of ArtPark, an AI and robotics technology park backed by the Government of India. He also co-founded AI Foundry, an investment firm building AI ventures for the next 6 billion users. Joining us on the panel is Mr. Sharat Sharma, who co-founded iSpirit Foundation, a non-profit technology think tank that conceptualized India Stack, Health Stack, and other digital public goods. He is quite highly regarded for his work with UPI Project for India. And also, Prasanna Sarambale is the CEO of Sterling and Wilson Data Center Private Limited, SWDC, and a veteran of the global data center industry. Under his leadership, SWDC has evolved into a globally respected EPC. He was also the former chairman of the CII Western Region Data Center Forum. Mr. Arthur Barichard serves as the Deputy Ambassador for France for Digital Affairs. He crafts and drives France's digital diplomacy. Recently, he played a pivotal role in organizing the AI Action Summit held in Paris on February 2025. Ashish Arora is the CEO of Shloka Partners, a global platform providing strategic, technological, and financial solutions to telcos and data providers, as well as the investment community. He has held leadership roles at Google, France Telecom, Orange, Tata Communications, and most recently served as CTO of Control S Data Centers. Ashish Ahuja, I'm sorry about that.
Hello and welcome. I know it's getting towards the evening, right? And nice breeze is actually going to flow across the Marine Drive, and it might be really pleasant very soon. But we'll try to, capture attention and try to share what's happening, which is actually fairly unique. I mean, so if I give you a sense of perspective, right? By 1975, we had 1 billion places connected with rails, roads, air, water. And you could sell the excess production of one place to another. And that, in sense, was, in a very dumb way, was the industrial economy, right? The cheapest production, wherever it was possible, people aspired to do that. By 2009, we had connected up to 1 billion people with internet, with email, with early social networks. So you could sell the excess knowledge of one person to another. And that was what we call as the knowledge economy, right? So we jumped from industrial to knowledge economy. By 2030, we're going to have 7.5 billion people connected with 30 billion machines, and they will be intelligent. They'll be acting on their own. So together, that's going to form what we call as the intelligence economy or the age of intelligence, right? And while we've been, if I look at very clearly, Bombay is sort of like really prospered in the industrial economy, right? But when the knowledge economy came, it grew more in Bangalore or so, right? Now, the key thing is that how do we grow or make sure that, the intelligence economy, the roots of that, take shape in India? And maybe we need to combine the strengths of Mumbai and Bangalore, as Mohan was saying in the morning, maybe build a bridge of sort. But it will be fascinating to see because, $15.7 trillion of new economic value. We are at 4.2 trillion or so, and hopefully that is like, 4 or 5x of whatever India is producing right now. So there's a lot of value to be had. The current projection is that out of that, almost close to 8 trillion might go to China, right? So I think next 15 years are going to be fairly dynamic. It's going to be also laced with geopolitical tensions, with tariffs and others. We are seeing that, it's not easy to be out there. All the supply chains are going to crumble. Probably a new world order will come in. So, and just because of the fact that, machines don't believe in this abstract notion of nation, we do, humans do. It's going to be a very interesting and dynamic time. And that's where we have been debating in the morning also. We were actually sitting and chatting that what's the unique model? We know US has a playbook. It's about large tech companies having lots of data, lots of compute, and creating the most leading model or the forward models. And China has, with DeepSeek, has demonstrated that they have a playbook where they're trying to upend the market from the bottom. What's the India story? What's the playbook that we could aspire to or we could credibly build? What are our inherent strengths? What we have done so far? And so with that kind of like lingering thought, I would like to start, because that's very important, right? So when we think about industrial economy, the infrastructure is land, power, the machines and other things, right? With knowledge economy, that shifted a bit. The talent also got into the play. With the intelligence economy, it's not just, land, power, talent, but also data and compute, right? That form the infrastructural grid. So it's very important to, think and understand whether we can have a unique story or proposition to tell to the world. Otherwise, this may not happen in India, right? Intelligence economy may not prosper in India. So with that lingering thought in my mind, I would like to start with Sharath and ask him point blank that, what do you think? Do we have a story to tell? Do we have a playbook? Or, if there is a playbook, what it could be?
We are underdogs. So the first thing is we must accept we are underdogs. As you said, China and US are ahead. We have to find our own story. Arthur is here. France is in the same boat as we are. In some respects, further along. In some respects, we are further along. So first is, what is it that we want to achieve? In some cases, if corporate AI, a lot of your corporate use cases, if you use Zomato and Swiggy and do customer support, there'll be some AI system that will help them do customer support. You may not be dealing with a human agent, you may be dealing with an AI agent. Will that be Indian? Unlikely. Does it matter? No, it doesn't matter. Education software. Lot of education for kids will move to AI. AI will support teachers, provide better education. Do you think it will be Indian? It could be. Unlikely. Does it matter? It doesn't matter. I could go on and give you many more lists like that. So the question is, where does it matter? And I'll tell you where does it matter. First is health. In health, your medical devices will be AI powered. Your drug discovery will be AI powered. Your delivery of medical services, ASHA worker, doctor, will be AI powered. That is going to be an important part of the economy. That is important that we control. So we need strategic autonomy in health AI. You heard earlier, we have a space focus. We have more geospatial data, which we have unlocked since the December geospatial policy and the efforts that are now taking place with drones, which are called BVLOS drones, beyond visual line of sight. So we have the potential to unlock more geospatial data than almost any other country, including the US. And so Geo AI, would we want to control it for dual use purposes? The answer is emphatic yes. Defense AI, would we want to control in our own destiny? The answer is emphatic yes. Now, if you look at this, what does it mean? It means that, you know, you can go to an LLM and ask for dietary advice. But do you think your surgeon can ask for surgical advice from an LLM? LLM's hallucination is not a bug, it is a feature. So you don't want that feature to be working when you are asking for surgical advice, isn't it? So the type of AI that we are talking about is very different from the type of AI which is animating the world today. It is the next inflection that we need for AI, and there are many, many possibilities that are there, neurosymbolic and many others. So we have to win that battle. That battle requires us to set up research centers, which are being set up as we speak. So I think, so the first point that I want to make is, yes, we are late to the party. Yes, you know, we are the underdogs. But I think we have to have clarity as to where we can win and where it would be nice to win but doesn't matter, and where we don't care whether we win at all or not. And once you have that clarity, then you can organize yourself to make that happen. I'll just finish with this, that this is the thought process that has animated us every time in the past. We were not, you know, is there anybody here who doesn't use UPI other than Arthur sitting on the stage? And
now he might also be able to use it,
and
right?
maybe he uses UPI as well. But the point is, we are very late to the payment game. We are very late to data sharing game. But today, our account aggregator system, you know, is already very large. We've done, you know, till in 3 years, 4 months, we did 140 million consents. In January alone, we did 10.5. In February, we did 15 million. In December, we will do 50 million just in December. It is already one of the largest systems in the world. Some of you don't use it, but some of you don't. Many of these systems in India don't start in India 1. The last people who come to know of it are the people, you know, UPI, credit card folks were not the early adopters of UPI. They were out in the villages. So similarly, in Account Aggregator, which is our data sharing platform for personal data, it is actually the marginal players who want a loan, MSMEs who want a loan. They're the ones who are using it. But that system is pretty large, you know. And so I think we've lived with this phenomena where we know we are the underdogs. We look for an inflection. We focus hard on making that happen, produce some public research or public infrastructure, unlock private innovation on top of it, make sure that the government makes enabling policies. And that playbook, which is what I talked about in my talk, is something that's worked for us beautifully in India Stack, something that has worked for us in telecom, something that you are hearing might work for us in space, where Pavan Goenka is essentially following that model. Now our attempt would be to apply this to a new area called AI. So that's what I would start with.
Very well said. I think, you know, one of the discussions we were having in the morning, right, that it's not the fast follower approach which will actually win us the day. We have to accept that we are the underdog, and we would have to figure out a way to leapfrog. So just like with the UPI, we actually leapfrogged, and we, you know, right now leading in that area. So maybe there is a way in which we can create something which is very unique, right? Like we have the largest number of human brains in the world right now are in India, right? And maybe there is a way in which we can, if somehow figure out a way to translate that knowledge that is inside all these human brains into the AI systems, maybe through agentic or other ways, right? Maybe we could actually create something which could be very unique, useful, not just for India, but also, you know, globally as well. And that's where, I mean, I would love to actually ask Arthur, because since, you know, Sharad has pushed him and said that, you know, they are also an underdog like us, but maybe they are a bigger underdog since they have been having some bit more, they've gone a little bit further ahead in their journey. So, and I loved the summit that happened, and it brought the attention of the whole world to, France. And of course, with, the AI Act, EO is taking a very different model approach to the whole AI space. So would love to actually understand, like, what are the unique things that, the France is trying to do? And maybe there are some lessons for us in this whole underdog story that we're trying to play here.
Thank you. From one underdog to another one. First of all, thank you for having me. Thank you to Singularity for your wonderful sense of hospitality. It's a pleasure to be here. My name is Arthur Barichard. I'm the French Deputy Ambassador for Digital Affairs. And amongst the many things that we're working on currently, we organized the last AI Action Summit co-hosted by President Emmanuel Macron and Prime Minister Narendra Modi 2 months ago in Paris, which went to 4 main deliverables. First of all, investments, 109 billion euros in France from private investments. Then an international foundation, Current AI, aiming at sharing critical resources in the field of AI for everyone. And by critical resources, I mean talents, data, and computing. Then a coalition for sustainable AI. And last but not least for us diplomats, a significant progress in terms of international governance of AI, which is another battlefield. And it's not easy. Very quickly, in terms of lessons, even though we don't have any lessons to give you, but I will echo Sharad's points this morning on strategic autonomy, which is first of all needed, but mainly essential. You mentioned this morning the example of China on the power grid during COVID, but what if tomorrow neither of you can open a PDF document on your laptop because Adobe decide you not to? It happened to Venezuela. What if your airport has to shut down because it's using one single operating system that doesn't work anymore? So you don't want to rely too much on a single one actor and a few actors. So strategic autonomy is key, it's essential, and it needs to happen now. It's the same for France, for Europe, for India, for most of the countries, especially given the current context right now. Otherwise, you are vulnerable, and you don't want to be vulnerable in today's world. But the good thing is that it's far from being over and far from being too late. It's the idea of the French summit was to put Europe and France on the AI map, and now is the time to put India on the AI map as well. The DeepSeek moment that you highlighted, everyone says it's a victory for China. You can read it this way, but it's more importantly to me a victory for open source, and it's also a huge signal for India and for Europe to take part in the race, because it's really possible, and actually the AI market is not set yet. Mistral AI, which is one of our unicorn in AI and now is a rival to OpenAI, became a unicorn in 9 months. And it's only 3 French people working for Meta and Google that went back to Paris, and in 9 months they became a unicorn. And some great observers like Yann Lequin, the French head of Meta for AI, is just saying that LLMs are not the future of AI, it needs to be invented. So the race is just started, and you clearly, as Indian investors and entrepreneurs, must be part of it, and it's starting now. A few comments, and then I give the floor to my colleagues, but you also have to understand that AI is really political. It's not just another industry revolution or digital transition. And once you've said that it's political, it will shift many things from industry shifts to the way we learn online, the way that our children will learn online, the way you access to culture, to learning other languages. So once you said that you need a clear vision, and vision must stem from our political leaders, first of all. In France, for the last years, we have gathered a group of international experts on AI and more broadly digital, and we are really proud to have Sharad in this group, which we gather around President Macron and other ministers at least once a year in order to build this vision and to apply it in international fora and on the international stage. But it's the same with entrepreneurs. You need to have a 5, 10, 15 years long vision when you invest into AI. And most importantly, it has to go through an ecosystem approach. If we manage to attract 109 billion euros from only private investors throughout the world last February, it's because we managed to sell them good, clean, and affordable energy, data, talents, Station F, which is a world-class incubator, but also unicorns like Mistral AI, Edge, Hugging Face, and others, and a proactive diplomatic efforts on the Indian international fora. And India, there's no reason that you can't do the same. And last but not least, I'm convinced that strategic autonomy is key on the first hand, but on the other hand, it will probably be a collective journey. I heard several mentions of Airbus earlier today. Airbus is we love to say that it's French because it's headquartered in Toulouse in the southern France, but it's actually European. It's built with several countries, and the latest plane from Airbus, the A220, is Canadian. It's built in Canada. And make no mistake, it will be the same in AI. Of course, we are underdogs, but we can become a pack of wolves if we gather. And it will happen between India, between Europe, between Korea, Japan, Canada, and so on. And that's the way we need to do it.
Yeah, I think it's quite impressive that, France was able to actually get private investments to the order of 109 billion euros, right, into building the AI infrastructure. And I also take one perspective that you just shared is like, selling the ecosystem, right? Like, and that's something that Sharad was mentioning that, we in India, we often forget, but we actually have the largest number of developers with the skill pool. We also have the data often not really ready to be mined, but the potential is there. Maybe we need to create ecosystem around these things. And I think there is a lot of money to be actually had into this ecosystem. The critical part of this, kind of like a supply chain, if I were to look at from AI or the intelligence economy, one of the most essential one is what we call as where you can put servers, kind of like a data center. But these data centers are also changing, right? We see that in the first generation of data centers, they were more about storing data. But now the compute clusters are more about how do you get data in. How do you get the entire data to be there in a way where you can learn from it, and then you inference it later on. So the entire way the applications used to be built versus now is completely changed. So I would actually, ask Prasanna, he's been, working in this area for a while now. What's the sea change that you are seeing? And if, France can take a lead in Europe, right? Is there a way in which we can sort of like, leverage from those examples and, create a place or playbook for our investors to come in and actually create, the capacity? Because today morning also we were actually chatting with Mohan, and he was saying that, the supply is critical because without supply you cannot really, build on it. So So what do you think? What's your sense of it? You've been in this space for a while. What has changed?
Yeah, so from the, as you rightly said, this space is evolving very rapidly. If you look at in the blocks of, 3 decades, a decade of from 2000 to 2010, AI was not the buzzword, it was more of compute in terms of enterprise. The rack load consumption for a server rack was anything between 2 to 4 kilowatt per rack, is a transition which happened from 2002 to 2010. From 2010 to the decade of 2020, that 4 kilowatt rack moved to around 10 to 12 kilowatt per rack power consumption. And between 2020 to 2025, the per rack load consumption, which is happening today, has already moved to around 80 to 100 kilowatt per rack. If you understand from the perspective, 2 to 4 kilowatts moving in a decade to 4 to 8 or 12 kilowatts, straight away jumping to 80 to 100 kilowatts, which means the consumption for the power and cooling has phenomenally changed. And as we speak, the AI is just the cusp of it. But as the servers and the new GPUs are coming, as we are building one, the latest one with the Blackwell chip for NVIDIA, the rack loads have moved to 250 to 300 kilowatts per rack.
So you need a completely new physical infrastructure, digital infrastructure, everything is new.
Absolutely. The way the power and the cooling is going to, and is happening as we speak, is humongous. A single facility consuming 50 megawatts, and we are constructing many of them now, is a 50 megawatt single building. And in that, if you see from an India perspective, today the per megawatt cost of construction for the same hyperscalers which are coming from US or any developed country, when they build a data center in US, the per megawatt cost is anywhere between 10 to 12 million US dollar per megawatt. If you go to Japan, it's around 12 to 14. If you go to anywhere in APAC, Singapore and all, it's hovering 8 to 10 million per megawatt. India is anywhere between 5 to 6 million US dollar per megawatt. Now, that is a phenomenal advantage because we all know that there is going to be a huge demand for the AI. LLMs, of course, will be sitting not in India, but the inferencing and the agenting, which is a huge opportunity for a country like India. And with $1.4 billion population and 800 million or whatever the telecom penetration we have, it's an opportunity to cater to this market in a big way as a country. And we are already on that verge where India is moving from a cost market to a strategic location for all the reasons which are very, very visible to the AI world. So I personally feel, that yes, for sure today we are underdogs in that play, but there is a huge potential to be growing in this sector and leveraging on that.
Yeah, so just to highlight a few things. One is that, as Arthur was also saying, that, this still is just the beginning. LLMs are not the end, Whatever human brain is able to do with 20 watts, we need 20 megawatts to accomplish, right? So one, yes, this journey will go through evolution, but we already see that the way the infrastructure is required is fairly different. So this, will demand a new kind of innovation, even in the physical infrastructure as well as in the digital infrastructure, as well in the data infrastructure. So there is a lot of innovation that is going to happen and potentially a lot of opportunities in all of these three spaces. Just to quickly recap that, right? Like just in the current way of doing things, right? And as you mentioned that you require far more power. In fact, I was looking at the Ireland numbers, right? So 21% of the country's electricity output is being consumed by data centers now, right? And this is just the beginning, right? We've not really, right now, how many of you are using ChatGPT? And how many of you have been using to create interesting images, right? As Sam Altman said, the server's melting, right? So yes, so the energy consumption is very high. So, I mean, all the associated chains are going to be actually impacted. And that is where I would actually love to ask Ashish, how do you see the opportunity stack, right? What are the various elements in this supply chain, right? Right from the physical infrastructure, digital infrastructures, you're talking about undersea cables, what kind of ROI numbers, any potential investor who's out there wants to put in money, what is he looking at?
Thank you, Uma. And first of all, thank you for Singularity team to invite me to come here. I have come a long way from California, and I have been in this market for 3 decades. I have seen this from 2 Mbps link of internet when I was sitting half a kilometer from here to the digital revolution of signing the first data center leasing deal in 2011 I did here in India. And we have come a long way in this journey, and now we work globally. So I don't know how much I can justify in next 5 to 7 minutes, but let me give you a global perspective and then come to India. And when we look at the AI, that's an enablement for a hell lot of applications here. So when I look at the infrastructure plus AI, one is the hardcore infrastructure, which we need to build, which I have been doing for the last 3 decades. And then comes a lot of AI applications, which you heard from Uma as well as from others, which has even much more potential where I do get involved as an investor, as an advisor. So let me give you an infra perspective first, how I see it happening in global markets, and with respect to India, where do we stand and what opportunity exists for us right now. In the last 1 decade, so if I go a decade before, we used to build these data centers primarily for applications for compute, as well as to serve the traffic in different geographies, whether it was YouTube at that time or having some fintech data available. Then those applications moved on to streaming, whereby we need to have more data centers to put in the local geographies to deliver those content. Then we migrated to the cloud when it opened a hell lot of applications, and then we had to open the regions in the local markets to say, these are our availability zones, these are our cloud regions, and then we entered into the phase of AI-enabled compute, whereby we need at one location for training hell lot of capacity in hundreds of megawatts, and then inferences in the different geographies to support that same story. As Prasanna said, those were the days when we were negotiating like 4 to 6 kilowatt per rack and say how best we can use the power in that rack. Today, we happily talk from 80 kilowatt and even 120 kilowatt with the new cooling techniques available. That's a migration which has happened in the last 20 years, which is already 20-fold in terms of the compactness of power in the rack itself, okay? Now, where do we stand as India from that perspective? We were always talking about, the first deal I used to negotiate for Google was like a 50 kilowatt pop in a data center here. As of now, we're talking about 500 megawatt in one rack available, that kind of feasibility. Next part is, where's India in this story? If you look at India, I think we are still far behind in terms of our penetration to the data center infrastructure per se. India currently has around 1,200 megawatt of data center operational capacity live at this moment in different parts of this country, with Mumbai holding more than 50%. How much it is of the global data center market? Less than 2% probably. But in comparison, where is the traffic of this country? We, as India, have 15% of the internet traffic being generated. So you look at the parity or the gap in between the two. We serve or generate the eyeballs for 15% of the traffic, but we have only 2% of the data center capacity locally in India. So that itself gives you a trajectory, there's a tremendous potential for us to go from here. Second, if you look at the power consumption, today when we track the geography of US, we see that the 4% of the total power consumption in US is actually going towards data centers itself because the compute requirements are so high. While when I look at the numbers in India, that number is less than 0.3%. What it is conveying again, there's a huge potential for us to look into this trajectory again. Even with the current growth where we are, and I wish it will accelerate further, this 1200 megawatt will easily go to 5 gigawatt by 2030 in this country. What does it mean? It means 3,800 more megawatts will go, and it will have pure 2 lakh crores of capex just to build the basic infrastructure of data center itself. I'm not even talking about the AI revolution story at all. Just basic infra, plus adjoining industries of electric infra, cooling infrastructure, semiconductors, GPUs, CPUs, undersea cables, connectivity to provide and support that infrastructure, the fiber, the potential is enormous. And these are the industries where we are trying to work closely to see how we can accelerate the journey and where we can invest the money at the same time. So even from a power perspective itself, the free carbon energy opportunities are huge in this country as we speak. We are still a small percentage of the overall energy which is sustainable right now. I can continue to be long, but I will respect the time. But I would like to re-emphasize what Sharad told in the afternoon. We have seen more of a process-oriented innovations. We need the product-led innovations to play that AI revolution game. Means I'm a private investor in many non-public companies, and where we see the potential, and they're already in billions of dollars in terms of valuation because they lead from a product innovation perspective, that whether it is defense AI or whether it is the space or whether it is maritime. India certainly needs those focus areas where we make big bets and we make big returns at the same time. I'll take a pause here and come back whenever you want me to come.
Yeah. No, I think thanks, Ashish, for highlighting that part, that yes, India has unique opportunities. It has its own unique challenges. And given where we are in the AI journey, we might come up with unique solutions, right? And that may not be just applicable within India, but it could be taken globally. I mean, so this point I would actually like to ask Sharad, with UPI and India Stack, we really pioneered the whole area of digital public infrastructure, right? Now, if you have to come up with something unique on that line and think about not just digital public infrastructure, but maybe digital public intelligence with India AI mission and outlay of 10,000 crores, is there a unique perspective that's out there that we could get the whole ecosystem to build around? And as he pointed out, right, we need to create those innovations for us to have a playing level playing field globally.
The question is, we consume more YouTube content than anybody else in the world, and it flows through data centers, right? But what good are those data centers if they're only for consumption? Yeah. Of course, we'll need data centers for inference, as you pointed out. But what good is it if the AI systems for whom the inference is being used are all foreign AI systems? So the question is not data centers per se, which we'll need because we will be a consuming economy of AI, whether we like it or not. We already are. 31% of the prompts of OpenAI are from India even today, right? Yeah. So that's not the issue. The issue is, what will it take for us to own our own destiny, as Arthur pointed out, in AI? And I want to tell you that is a function of smart brains. If the number of people, as you said, if that could do it, we would be an Olympic power. Do you think, we send so many people for Olympic Games, does that translate into Olympic medals? No. So let us first, we have to disabuse ourselves that quantity means quality. It does not mean quality, right? We must be, therefore, cognizant of the fact that we need high-quality researchers who already are doing research in AI to be brought back to India to serve the Indian need to create the right kind of AI to solve the health problems, defense problems, geo-AI problems. And why have I been on the phone? Because I'm very happy to report to you, may I?
Yeah.
You know this a little bit, is that I mentioned to you that we need to set up focused research centers. We already, the first one is a very famous researcher with the last name Vaswani, returning from Microsoft Research Cambridge and setting up the first FRO in Bangalore. And little while ago, think of this, and that is eventually going to be public money funded, but in between, a philanthropist in Bangalore, his name is Chris Gopalakrishnan, co-founder of Infosys, has said, I don't want to wait for the public money. This person has an 8-year-old daughter. She wants to go to, she has to transition schools. Don't delay it, because if you delay it, he may change his mind next year. Don't take that risk. Get him this year. I will give whatever bridge R&D funding that is needed. Today, just today, Physics Wala, another entrepreneur, has committed 400 crores a year for 5 years. Think of it, 2,000 crores to open another FRO for neurosymbolic computing. So these are, and this will be anchored by a professor from Research Triangle Park, moving back to drive this FRO as we go forward. So I wish I could be nice to these two data center guys and say it's all about data centers. It is not. They come in the game much later. It is really about brain power, horsepower that we need, and it's not quantity, it is quality. We have those people, their heart sings for India. We have to land them back to India. They won't join our company because you don't know how to run R&D centers. They know how to run R&D centers because they created the Bell Labs for AI called FAIR in Paris, and that's why Paris is singing. And so
especially with Station F.
Station F. So we don't, send them to a company, one of these Bombay companies, for heaven's sake, they'll run away in 2 months. So you have to find a way to create a home for these high-quality researchers. You can't send them to IIT Bombay or ISC in Bangalore because they'll not pay them more than 33 lakhs a year. That's not going to be good enough. So you need to create new landing spots for this, and I'm happy to tell you that many of you are helping make that happen. That, in the end, will matter more than anything else as we go forward. So now the second thing that will matter more than anything else after the first is the fact that we have more health data than almost anybody else in the world.
Yeah.
Right?
May I make a comment?
Yes, 2 minutes. And therefore, we've been building out quietly a system for sharing that health data from a Tata Memorial Hospital to a startup in India in a way that is completely privacy preserving, that our French colleagues are also using the Indian system or going to pilot it in France. That system is going to stand us out because it will let a data economy emerge that will become very useful. So high quality researchers, high quality and relevant data, and then will come the data centers and policy and all of that.
I think I would also like
so
to...
that's what, so it's going to be the hardest thing as a country we have done, because if we don't get this right, we will become a colony of either China or the US. You can pick, you can be a trade colony of China or a tech colony of the US. Neither of them will be good places. So we have to devote every ounce of energy to change that outcome. We are not sufficiently worried because we think being a colony is not such a bad thing. Unfortunately, that's not the case. Right.
I mean, this is amazing, Sharad, and I know we've been talking about this, and this is culminating into an actual tangible output, and this is such a great foundation, right? And I think one more thing I would actually like to quickly check with you, and that with India, stack and the digitization bit, especially in terms of identity, maybe in terms of the whole ecosystem around it, and coupled with new kind of research that could be done, because it's still very early on, right? I mean, I've been in AI space for the last 15 years, so been fairly a dinosaur in that. But, this revolution, if I were to take a step back and understand that and share it with you, so we literally boiled the internet and created a giant brain in kind of like this ChatGPT. When you query it, it's like that. Then we are putting it inside, human-like functions, and we're calling it agentic AI. Then eventually we'll take it and put it inside, robots or other devices, and we will call it physical AI. So this revolution is going to, play out over a period of time. And that's why these research centers are very important, because you cannot just, buy this technology, because they might give you a model today, but then the next model will end up, then the next evolution will happen. So you have to build this factory which literally, keeps producing the AI advancements as they happen or as they progress. So the factory, the brain factory that, Sharad is talking about is very critical, very important, and I think that's something that we need to learn from the French story, because they built that factory first. And at the same time, very quickly they got around and they got, $109 billion in terms of investments around it. So I would actually like to quickly ask Arthur, I know the time's up, but, what's the one thing that you think in the next 10 years, if you have to look from outside in, because sometimes we fail to get outside in perspective, what is one thing that you think we should actually invest in?
One thing, as a country, probably energy. And when I mention vision, it's long-term vision, and you will need clean, affordable energy. As an investor, everyone is talking about chips, computing, but we will very soon lack of data, human data, good, clean data sets. And any company specialized in sourcing, transforming, labeling, cleaning, and securing data will have a lot of clients very soon.
Awesome. So I see two things: energy. Maybe we need to build the nuclear, plants or whatever, but we need to bridge the gap. And the second one that you pointed out was the new data creation, right? So the AI is going to adapt to the continuously changing world. So it's going to need new forms of data, new kinds of data. And maybe people are trying with synthetic data. Still, you need relevant human data, human-generated data, or the data of the world around us. And actually, that's going to become more and more critical for us to break through in the next iterations. Ashish, you want to quickly?
Yeah, I'm sorry, but I was holding my response to Mr. Sharad as well. I will take half a minute. This is absolutely right that from migration from this 4 trillion economy to a 40 million economy of ours, we need to go in that direction of strategic autonomy to build that ecosystem of AI applications. And this is a journey. This is not an overnight part. But having said that, we are already dealing in the infrastructure right now. I personally have administered more than $1 billion of investment in this country for infrastructure itself.
Sharp.
Yeah. So what I'm saying for the investors here, there is enough to invest in infrastructure right now while this journey explores further. I will stop here. And if you want to ask me where to invest that money right now, I would say invest in the AI applications first, because the multipliers and the rewards could be much more rewarding, though with extra risk. But if you want to invest into infra, whether it is power, DC, or other things, they are reasonably stable returns, and you can always look into that.
Prasanna?
No, I think this subject is very vast. It requires, I can see Yash, and we have already crossed the time. I will limit. I think this is the right time for us to see. The only comment I would say is I agree with Sharad. The application and the AI story has to first evolve in the inception stage. The DC will come later, but it's an exciting time for the underdogs to see how we can play a bigger role in this space.
Yeah, DC also, by the way, the infrastructure, physical infrastructure also takes a lot of time, and Elon Musk was able to quickly build that because he bought a factory which was already there, and he was able to, otherwise we just take 15 to 18 months to build the physical infra.
Yeah, data center is 2 years, and subsea is 5 years, actually.
Yeah. Sure. My request is allocate your portfolio to AI. Believe in India. India will be a player in AI. Number one. Divide up whatever amount that you take, divide it up into 3 parts. low risk, medium risk, high risk. Put the low risk one in data centers. It'll make money. Put the medium risk in the emerging data economy that India will take the lead in building. You will hear more about this. We're going to go public on this sometime in October, November. And if you are really keen to do this, please reach out to any one of us. We will get you started early. But if you do these two, please also set aside money for high risk. That high risk is, please invest in research. This is what young entrepreneurs like Mukesh Bansal are doing. This is what the Physics Wala is doing. This is what Chris Gopalakrishnan is doing. And I'm hoping that you will also do some of that in addition to the other two investments that we are talking about. So first, allocate to AI, and then divide it up into whatever number that you want, maybe 50%, 30%, 20%, whatever allocation that is suitable, but make sure you are investing in all the three buckets. So that's really what I think will be important for you.
And just to add what Sharad is saying, the high-risk investment, what he's suggesting to put in research, will actually go in protecting your medium risk and low risk investment. I mean, people forget that, but a new model or something new that could unlock and completely wipe away all the investments you might have done. So it's very important because this is a very evolving, piece of technology which is going to completely change the way we live, the way we function ourselves. So I think it's very important to make that high risk investments together with medium and low risk. And that's a story or suggestion that I would actually like to leave you with. I don't think we have time for questions. No, we don't have. So if we are going to be around, please feel free to catch us and ask us for our opinions or on questions that you might have. But thank you so much. Thank you, Singularity, for giving us opportunity to have such an exciting panel here. Thank you so much.
Thank you for panelists for sharing your perspectives. Please accept a token of our appreciation from Mr. Suyash Kela. The next session is a fireside chat on MedTech. We request Mr. Sharad Sharma to stay back on stage to moderate this session. The first panelist is Dr. Jitendra Sharma, the MedTech man of India. He is the MD and founder CEO of Andhra Pradesh MedTech Zone AMTZ, one of the world's largest medical device manufacturing clusters. Dr. Sharma is also the founder executive director of the Kalam Institute of Health Technology, member secretary of the National Medical Devices Promotion Council, and chairman of two MedTech incubators, MediValley and BioValley. The second panelist is Mr. Shravan Subramaniam, MD and CEO of BPL Medical Technologies. He also heads the medical technology platform at Clay Pond Capital. Previously, he was the managing director of Wipro GE Healthcare. He has also held leadership positions at Roche and Novartis. He also served as the president of NAT Health, the Healthcare Federation of India, and co-chaired medical technology committees for FICCI and CII.
Started. I know we are running behind time, so we'll jump right in. These are one of the most experienced people that we know. So my job is to speak as little as possible and provoke them a little bit here and there and get them to fight with each other so that we have some excitement and so that's it. And I'm going to request you to give, both of you, what is your prognosis for the medical device industry out of India? Will we be a major player? And if so, why? And, let's start with that.
So thank you
And
for...
give your background introduction so that people know where are you coming from.
Yeah, I'm just a scientist, so he has a background, and that compensates for my lack of it. But I'll start with what you mentioned in your previous session. You mentioned, yes, we have arrived, and let me thank first Madhusudan Kelaji, our host, who has brought all of us together in this lovely family. But your previous session, you mentioned, yes, we have arrived late to the party. Yes, we are underdogs. But a true Marwadi starts with a dessert. So it is good we have arrived late to the party. We can change the sequence of our value proposition, maybe have a full meal at a lesser time than others who arrived early, and at a cheaper cost. So my prognosis of our sector is, we are a small sector. We are a $12 billion sector. Thankfully, all of you will go back and have a great dinner. Please have extra sweets. It helps us, our sugar business, diagnostic business. You name it, and we love it. So we are not going to go down. AI, no AI. Petrol, no petrol. Tariff, no tariff. Employment, no employment. We are a sector who are going to survive and thrive because we thrive on you. That's number one. Number two, in our sector, since it's a small sector of 12 billion, we have to create the creators to create the sector. People will not dawn upon from Amazons, Microsofts to start making pacemakers just because they know it. We have to create enterprises that creates business. Business creates the sector. And third, our entire sector is stringed upon certain very critical components. So cardiac sector is a 6,000 crore sector. Pacemaker would be a 1,000 crore business. But pacemaker leads will decide whether pacemaker business gets disrupted or not. And that's science. Once again, we need practitioners of this science, but backed by business environment to make that happen. Thankfully, at this point in time, we have not only well-meaning investors, but also well-positioned investors to help us do that. So I'll stop with these three comments, short comments, and my lovely friend and colleague, whom we have been fighting for 20 years now, he will support me further on my arguments.
And just to make it clear,
and please,
just to make it clear, we are fighting on the same side.
Yes, always. And don't forget the Marwadi.
Absolutely. So thank you, Jitendra ji, and Sharad, thank you so much for having me here. You know, if you just look at longevity, right, which is one of the markers for health, as a nation, our average life expectancy at birth has more than doubled since independence, right? I think we were at roughly 30s in 1947, and we are in the 70s now, and yeah, in the high 70s. And every 2 years, we are adding 1 year, right? And so at some point, that gap is going to be narrowed, and the healthcare version of singularity is that you add 1 year for every year and live forever. But then, of course, there are various constraints, and it's not just about longevity, it's also about quality of life. And I think that's where medical technology comes into the picture. I've spent half my career in the pharmaceutical world, half my career in medical technology. And I think India has had a terrific run in pharma, and the next gen, we're going to see a lot of lot of progress in medical devices. But it's very difficult to compare the two. India has had a good run in the pharmaceutical sector for various reasons. Actually, if you look at that booklet, which is doing the rounds outside, you'll see that the sectoral reforms in '91 really spurred the generic pharmaceutical segment. And a lot of investors thought the same would follow in medtech. But there are a few differences, fundamental differences. For one thing, the cycle of a pharmaceutical product lasts 10 to 20 years. So if you invest in a plant for a generic product, that is going to be a gift that keeps giving for the next 10 to 20 years. But in medtech, almost every year or every other year, you're seeing some new developments. So it takes a good amount of investment to set up a plant for medtech. And then just by the time you reach scale, you're going to have to invest in more capacity. Another thing is, in India, the domestic demand itself was sufficient to get the pharmaceutical industry to start. And then eventually, exports became a thing, and now export is, of course, much bigger than domestic. In the medical device sector, it is inverted, still very much inverted. I think the last I checked, it was about 70-30 or 75-25 in favor of imports. But we are slowly changing that. In my previous role, heading Wipro GE, which was at the largest medtech company in India, at $1.2 billion in sales, roughly, even so, roughly 60% of the India sales were still through imports. But on the plus side, I could say that of the 1.2 billion, fully 300 million was export, right? Another 300 million was R&D export. So,
and if I can just
please
add, because he has encouraged right in the beginning, we are supposed to fight.
Go for it.
One mistake that we shouldn't do, that we did in pharma, despite we being the generic champion of the world, we got dependent on APIs on China. That killed the industry literally.
And you know, what a tragedy to have seen that happen.
A missed bus.
And
No.
I think it was, you know, it was not only a failure of our market, you know, and entrepreneurs,
over.
but also policy failure, because stupid policies almost encourage
And
that to
that's
happen.
where, as chairman of the drafting committee of the PLI scheme for the medical technology, I can vouch this is a mistake we are not going to repeat in medtech. Because in medtech, the critical component and investments on critical component is going to drive the technology change, which is very fast, as Shravan rightly mentioned. Otherwise, it will be the repeat of API story.
And absolutely right. Yeah, that they're late to the party, right?
Yes.
To take a point from your previous speech. And also, if I can draw an analogy from you know, the three risk opportunities, if you will. I think if the low risk part, which is investing in healthcare infrastructure and services, that's done. That's mostly solved, and now it's just incremental. If you were in the medium risk bucket, you would do what Sir is talking about, investing in components and capabilities. But truly, where we're going to see the differentiation and the impact is if we invest in R&D. And if people haven't done so already, I strongly urge you to take a look at the Andhra MedTech Zone. Terrific work, 150 companies at last count. When I was there last, I think probably more than that by now. But I've also seen the capabilities. Most of the large medtech companies, you name it, you know, Medtronic, Johnson & Johnson, J&J, they have GCCs in India that are producing amazing engineering and R&D capabilities for the rest of the world. So we have the talent in-house, right?
Just yesterday, we had the 7th April, which is World Health Day, a 5-day hackathon at AMTZ, which is our medical technology park in Vizag. You won't believe it. 206 entrepreneurs from all over the country. 68 of them could pull off investment. 680 crores committed in 4 days on 68 companies, just in one event. Now that's the power that they are able to excite even in the investment community. Now, this is not the J&Js and Medtronics of the world. These are people who are coming as disruptors, either carrying a new technology in their pocket or carrying a new business model for the replacement technology which is already there in the market. You are not going to get a heart valve every day. Maybe your girlfriend could give you that, but a factory wouldn't. You're not going to get a good heart valve every day. So you need the same heart valve, but a different business model. Can you integrate the heart valve's cost with the longevity of the patient? Can you look at innovative financing models from the consumer that boosts the investor's confidence and reduces the risk of the enterprise because the technology is changing very fast.
Right. So if I step in here for a minute, I think the case for India being a significant player, creating several companies that would be significant on a global scale is very good, right? First, we have a domestic market. If we can't do early detection, we can't really have low healthcare costs. So we need to solve that problem. Moore's law is working for us. We have the talent, as you pointed out. So and investments are starting to come in, Vijayawada, as you mentioned. Vizag is a good example of that, and much more is happening. We have some startups that are already doing well, as you represent and others. But to me, to really unlock this, we need a business model change on the side of the government. The way government procures, because the fact of the matter is that government is still going to be a very significant buyer.
13%.
Right?
Indian medtech, only 13% is procured by government.
But it ought to be much higher.
No,
right?
It ought to be.
But so is there a business model change? Mobile phones in India would not have taken off if we relied only on postpaid.
Yeah.
We needed a prepaid business model to come in.
But that's
so
where,
is your prepaid business model that you would want the government to adopt?
Yeah, but that's where
and
Mr.
tell us a little
Shravan,
bit about that. Yeah,
that's
I know.
where Mr. Shravan was very right. We are a very complicated sector. A simple mask is a medical technology, an RT-PCR chemical agent is a medical technology, a radiation CT scan is a medical technology. Now you look at orthopedic implants. Now, sorry to say, but accidents are a big market, unfortunately. We save lives. I worked in a trauma center. You save lives, but that's a big market. But what happens in an accident case? Where is the market? You send a tray of screws and implants to the operation theater. You don't know which one will be needed by the patient. It will be measured in the theater. Out of 20 implants, 1 will be put on the patient, 19 will be sent back. That's trapped cash flow. Somebody is paying for it, but not selling it, not using it, it's coming back. In fact, adding logistics cost to it. Have you ever heard of a sector that adds logistics cost to a product without procuring? We are that funny lot. So there is such complexities in our sector.
And just to add to that, very often, your device that you get has electronics in it. It has wetware in it. Very often, some strip has to go, some chemistry is needed. And then it has to, on top of it, look pretty like a consumer device. And so it's a very, I completely agree with you on many dimensions. It's a tough business. So which is why, if we can pull this off, the spin-off benefits of this in many other sectors is quite substantial. But so coming back to my point, what is your wish? What is this? How does government procure not devices perhaps, but services based on devices differently from the way they do today? And what would be your, what is on your wish list? And so that this can really explode the market as we go forward.
I think government has an important role to play, but there are a lot of other people that need to get together. There's academia, there's industry, there's clinicians, there's students, and government has a role to play both in terms of being a large procurer, right? They're still one of the largest buyers, but they should insist on quality and cutting-edge technology, right? So it's not just enough if you're the cheapest provider, but they should insist that you are the best provider so that India develops that competitive edge in medical technology. And to be fair, and probably because the government is so fragmented in terms of, the state government is really the procurer of medical technology. Right?
We are in state list. Health is a state list. So every state procures differently, and a fragment of it is procured centrally differently.
So that is extremely complicated, and you're setting different targets for each, different technology targets for each state depending on what burden they can take in terms of cost. So some level of standardization and standardizing towards something that would be cutting edge and world beating, that is one part. But that is only one portion of it, right? Procurement is one portion of it. You still have the entire private sector, which is giving you 80% plus of procurement. So I wouldn't rely on the government entirely or blame the government entirely for the lack of innovation. I think the private sector has a significant role to play. But where the government can help and is already helping really is in R&D. Encouraging R&D. But again, that gets very fragmented because it's all piecemeal. And we still have not achieved scale, you know, to be able to accommodate, let's say, even if I were to get a 200 crore grant from the government, I don't have enough avenues to deploy it immediately. Right? So we need to scale up a little bit.
If I can just add two small examples to this. One, look at the case of Krishna Diagnostics in Pune. They used to buy MRIs and CT scan for 8 crores. We created, in fact, I designed the National Radiology Program of India. We liberalized radiology. In district hospitals, we said private person will put MRI and CT. The government will pay cost per scan. That company's turnover changed from 60 crore to today 900 crore. They operate in 11 states in India in PPP mode. Investment paid back. Second example, Molbio Diagnostics. Started with RT-PCR for tuberculosis in an 8,000 square feet facility. COVID came. Temasek has valued them over $1 billion. India has 110 unicorns. The only one in medtech is from our campus, Molbio, for RT-PCR because the same technology was used for COVID. Again, reagent-based. And the cost of medical technology is so prohibitive that unless you use a service model and a business model to make it walk, it cannot run.
Exactly. So, and I think, you know, and this is a very good point because we have to innovate in that direction. And to the extent we can take innovation from one state and spread it to all other states, it will work. And Andhra can play a role, Rajasthan can play a role, other states can play a role there. The second point that I want to ask you a little bit, because to get your perspective, you know, we were broken regulatory system.
Yes.
Right? And so what would be your wish list to fix that? Because if we may have an opportunity to fix that. Because in the current system, we are not setting our industry up for success. We don't have a clear regulator. The regulator is not very effective. How do we, and this is a global phenomenon. You know, Matt Ridley, the science editor of Economist, who wrote this book on innovation, said, look, you know, the FDA approvals take 12 to 18 months. The Europeans take 60 months. How can a startup survive in Europe, right? And so we have to make this a competitive advantage and do it in a way that it is good regulation so that it creates trust, but it's also quick in giving, you know, approvals as we go forward. What's on your wish list and how can we make that happen?
I think, so that's a terrific point, right? And this is what frightens a lot of early stage companies or startups that want to get into this space. And this is why you have a handful of large companies that are dominating this space. First of all, I think there has to be a lot of transparency and collaboration between the regulators and the companies. And again, that is improving every year, every month. I'm seeing some improvement in that conversation, in that openness. But they are really strapped for capacity. They despite genuine intent, they are unable to approve a product quicker than 12 months. So I think some level of self-regulation and voluntary disclosure and a monitoring mechanism to ensure that there are no black sheep, I think that will really accelerate things. We have to and we can make use of digital solutions, simulations, to be able to get the regulatory process moving a lot faster. Having said that, when it comes to medical equipment, medical technology, you cannot compromise on safety, and that is the reason why we have regulators in place. You have safety and efficacy, both are being measured. Efficacy, while important, takes a slight second place to safety, and that is probably the reason why this takes so long.
So in the previous panel, the space panel, there was a very good comment that geospatial policy came 2021. December 22. It's already creating a buzz, right? Medical technology regulations came in 2017. It is yet to create the buzz. Why?
You know, because we didn't design them well, honestly.
No, I'll come to the point.
Yeah.
So we have been part of the designing team. He has also been in the consultations in the ministry. It's failing to create the buzz exactly for the reason you mentioned, Delta T. I reach airport late, I will not get the flight. Our regulations, while fairly designed, and in our regulation, unlike geospatial policy, there is a lot of post-market surveillance. Because for us, safety is first, efficacy is important. Safety first. Pehle bach to jao. First we save life and then we see if you make you well. That we do very badly actually in our hospitals, by the way. But our regulations came in 2017. The only thing it is missing, it's a clock. There is no timeline defined to approve a product, and that is failing us. If there is a single nail on the coffin on our regulation, is absence of a clock.
No, this is why I bring it up. You know, before COVID happened, we didn't have clear regulation to how vaccines will happen. And then we put something in place, which Krishna Ella of Bharat Biotech in a public forum describes is really a cut-paste of Korean, Japanese, European and American regulation. They've taken the conservative parts of all four and put them all together and created the most conservative regulation for vaccine. And now our aspiration was to become the vaccine capital of the world. And that's been compromised by stupid, absolutely, regulation. So we must be able to call out stupid regulation and ask for changes.
No, khichdi has been our favorite food for ages.
Agreed.
Yeah.
So is there, now we have a wonderful new secretary, Amit Agarwal, of pharmaceuticals and medical devices. I know he's wonderful because he was our partner in DPDP Act. He's an engineer from IIT Kanpur, generally very progressive in his thinking. You know, we must organize ourselves to make a radical change in
Individuals are good.
Yeah.
But process of evolution of a sector has to be individual independent. It's a process that takes us ahead. My point is, unless you put a clock on the regulation, the investor fails, the startup fails, the trial fails, and the patient fails. If there is one thing we can do to fix regulation, economy, and sector in our sector, is to fix a clock on the regulation.
Yeah.
So Sharad, I'll just add one point. There is an old regulation called PNDT for gender identification. This dates back several decades.
1972.
Right? Yeah, several decades, 1970s. And there was a regulation put in place that, you know, one cannot detect the gender of an unborn child, with good reason. It's a socially sensitive issue. But over time, that has prevented clinicians from making use of the ultrasound technology, which is a very basic, fundamental technology. You walk into any gastroenterologist's clinic in the US or somewhere in Europe, and they have their own ultrasound machine, and they're very quickly detecting a fatty liver. Here, by the time you secure a license for an ultrasound, and first of all, most clinicians are not even allowed to apply for it, and finally, when you do, it takes several months. It's a life-saving technology.
And it's a criminal offense, non-bailable offense, if there is an error.
And also rent-seeking for... Right. So I agree with you. So I think what we are, just to summarize so far, let us look for bold regulatory changes, because I think the time for that has to come. I am very happy that I think ecosystem efforts are taking place, like the one that you mentioned in Andhra, which is bringing people together.
And I'll just tell you, on that bringing people together, I'll just tell you, you mentioned about one Mr. Vaswani coming and setting up an FRO. How did we build AMTZ? Indian scientists working in 26 countries left their job 6 years ago to make AMTZ. Indian scientists, 300 of them from 26 countries. I don't know how many claps they deserve. But today we are able to build India's first MRI, India's first heart valve, India's first CT scan, everything because of them, people.
Yeah. So given that we have just about 3-4 minutes left, and we've been shortchanging our audience by not letting them ask questions in previous sessions, do you think we can take three questions and answer them all in one go? Is that a fair thing to do? Huh?
Absolutely.
All right, so let's see. Are there any questions? Now they're so used to not asking questions, they don't know how to ask questions. Come on. Huh?
So, sir, since this is a evolving industry and maybe at a very early stage, where do you think the opportunity for an investor lies who have a, let's say, 3 to 5 year perspective to make investment, where should he look for and what should he look for in a company in which he is making the investment?
Yeah. Very, very specific question. In my experience, the opportunity lies in two verticals. One are in those growth companies that are creating products which are being imported into India till today. Because these are products on which now we'll be paying 26% customs duty, complications and everything. So growth companies that have brought import substitution, even if their product is not a novelty, because we are a 1 lakh crore market. It doesn't matter if it is not a novelty. We will still use implants and heart valves. The second opportunity lies, in the first vertical, opportunity means IPO in 4 to 5 years. These are growth companies. The second vertical where opportunity lies are truly innovative products with cutting edge technology, which are new ways of treating, using AI, using many other things, tactical imaging, doing same things which till now a 5 lakh rupees machine has been doing. So now Mr. Shravan was mentioning ultrasound. We have butterfly ultrasound for 80,000 rupees, which does the same, which was being done by a 3-probe ultrasound machine of 9 lakh rupees. Cutting edge technology. And this is where we think the investments would pay back heavily.
I think mostly.
If I may ask you one question, what are the 3 regulatory changes which are really needed, absolute, as of yesterday basis, which will take this industry manifold?
I think speed to approval would be number one.
Clock, absolutely.
And secondly, having some framework for industry, academia collaboration and subsidies to take advantage of R&D. I think that would be true. If I had these two, I would be absolutely fine.
And the third is, I think, unlocking the government market by reforming the way the government does procurement in by a new business model. And I think that's within reach.
Absolutely.
And if we can make these 3 things happen, the industry will explode. I think, is there any other question that, yeah, please, that's the last question. I see Arundhati ma'am is here, so we don't want to hold her up. And yeah. There was a question on that side. Yeah, so please, go ahead.
Thanks for taking. So I agree on the part of innovation and, probably you can get to leapfrog and get into the newer side of things, which probably the other peers are not doing. I wanted to understand a bit about, say, the commercial aspects of it. You go to a commercial scale. These GEs, Siemens or Nipros of the world, they have commercial, global scales. How do you ensure that global scale get the right unit economics and the right profit pool to get into? How do you take the next step to make those companies competitive at a global scale?
And you mind if we take one? There was a question on this side, I think, that came up.
Yes.
And we'll take that
So
and then
global and local
that.
scale is one, and the second.
Yeah, I had a question that, see, insurance penetration in India is quite low. And sometimes we have seen that if you have an advanced device being used to treat you, it takes higher cost of healthcare on that front. So if we can somehow increase the penetration of insurance, can actually make the market bigger for advanced machinery. And along that, the government size demand, we can have a private, larger demand for those advanced machinery, and that can.
I think that goes back to what Sharad started with, that insurance and government should pay for outcomes.
Absolutely.
And if you pay for better quality outcomes, then the process that addresses those will automatically come in place.
But I'm glad you asked that question, because his question is the answer to your question. The global scale is competitive. The local scale requires insurance penetration. And there is a huge opportunity in local scale. So you actually, his question is the answer to your question.
All right, so thank you so much.
Thank you.
And,
Have a healthy evening.
Thank you. Thank you so much. Thank you.
Thank you all for being part of this panel and for the insights shared. We request you to accept a token of gratitude from us. May we have Prateek Agarwal to do the honors, please. Ladies and gentlemen, Saving the best for last, we have a fireside now with Miss Arundhati Bhattacharya to talk about her journey at SBI and Salesforce. We invite her to come on stage, please. Miss Arundhati Bhattacharya is a Padma Shri awardee and the first woman to chair the State Bank of India, a pioneering leader. She has played a transformative role in Indian banking and now continues to shape the future as chairperson and CEO of Salesforce India. Joining her in conversation is Mr. Saurabh Tripathi, Senior Partner and Managing Director at BCG and a leading expert in financial services strategy. We request Mr. Saurabh Tripathi to also come to stage and take over the proceedings.
Ms. Bhattacharya, thank you very much. It's always a great pleasure to meet you and always scintillating to spend any time discussing anything. This is the last session of this conference, but as has been rightly said, the best has been kept for the last. I genuinely agree with that. I've had the privilege of serving Mrs. Bhattacharya for many years as a giant leader of State Bank of India who had an ambition to really make the elephant dance, and she did. And if I may just say one thing, my mentors in BCG had told me that whatever you do in public sector bank, never touch HR because you will die. Because HR in public sector bank cannot be changed. And then Mrs. Bhattacharya came and then said, first project, I want to transform the HR of State Bank of India. And are you up for the challenge? And what a journey it was. So thank you very much for always setting an example of what somebody with courage and conviction can do, and set an example for all of us to feel inspired. So there are a lot of questions about banking. There are a lot of questions about technology. But I don't know if many people know that in last 4 years that Mrs. Bhattacharya has been leading Salesforce in India, the revenues have grown 6x. 6x, and in the entire Salesforce spectrum globally, India is a shining star for the achievement. So Mrs. Bhattacharya obviously gets a lot of the credit, and one of these outcomes of doing such a stellar job is that she has been given more work. So now not only she leads India, but she leads all of Southeast Asia as well. So that's what good work does to you. You get more work. So thank you very much, ma'am. So maybe we get started with, we start with your latest in Salesforce. So you have been at it for some time. So firstly, let's start with your, maybe you'll give quick answers so that we can ask you a lot of questions, right? Everybody wants to ask you a lot of questions too. So what has been the secret of success? How did you achieve 6x in 4 years?
First of all, good evening, and thank you, Solidarity, for having me here. I was just looking at the list of speakers, and you had a stellar range of speakers. So being part of it is definitely a great honor. Thank you very much. I know that the two of us, we stand between you and dinner, so I'll try and make it quick. If you are talking to me as to what is it that leads to success, I think there are 2 or 3 things. Again, I'll make it very fast. One, of course, is customer centricity. Luckily, you know, whether it's been in the financial services or it's now in the IT services, we are still in the services sector. And whether you're in the services sector or whether you are in manufacturing, at the end of the day, it's the customer pain points and your ability to address the customer pain points that brings you success. So whatever you're doing, believe me, it's the customer who continues to remain at the center of everything. If you are innovating and then going and selling without understanding what is it that the customer wants, your likelihood of success is so much lesser than if you innovate from the point of view of the customer's pain point and how you're going to address them. So I think that's been one of the things that I have always tried to do, keep the customer at the center and then, you know, try and build around that. And the second thing I think I have been very lucky, I would say, is the ability to get the right team to whom I could sell a vision and then delegate to them, give them the space to innovate on their own. And if you have got the right team members, if you have the right people, believe me, they bring so much brain power into the whole exercise that you achieve far more than you had imagined you could achieve. So I think these two things, the ability, one is to understand what should be done, and the second, to be able to sell the vision to others and then leave them to actually execute it. I think these are the two basic things.
So what would be one example of how Salesforce has actually innovated, keeping Indian customers in mind, and you created a proposition that was truly customer-centric for Indian?
So if you look at Salesforce, one of the things that Salesforce used to do, like any other OEM operator, they would sell their software and then walk away. Okay, the sales cycle ended as soon as the deal was signed by cutting of cakes and clapping, and that was the end of it. However, they did not complete the cycle. Today, there is no cutting of cakes when a deal is signed. The cutting of cakes only happens post-implementation and post-80% adoption. That's when we do the cake cutting, that's when we do the clapping. Because that's when the sales cycle ends. The sales cycle does not end with just selling whatever it is that you are actually trying to sell. It ends only when you have successfully implemented as per the customer's requirements and as per whatever you have promised them, and then got them to adopt it. Because believe me, adoption is a big challenge as well. People don't want to change. They would rather just stay with the older system, even if the newer one is far better. So it takes time and it takes effort to make them adapt. And I think that's the change that we brought about in Salesforce, where selling was the first step, implementation was the second, adoption was the third, and completing that cycle is what gave us this, the actual perception in the market that we meant business and we were not here just to sell and walk away.
Okay, a difficult question. Which stint have you enjoyed more, SBI, CEO, or CEO of Salesforce in India?
That's unfair, actually. You shouldn't be asking me to choose.
Okay, you can give a diplomatic answer.
Yeah, so the diplomatic answer is there are different kinds of challenges, but I have enjoyed both.
I can understand. So, which part of Indian industry has embraced technology better? You've been trying to sell technology, and Salesforce is not a low-end, cheap technology. It's a high-end, some will say, costly technology.
So don't perpetuate the perception. I'm trying very, very hard to, fight that perception that it's a costly technology. It isn't. It delivers value for money. I would say that. You should look at it that way. Look at the cost of ownership. Look at the returns that you get from the technology. Don't just look at the price in isolation. And I would say some of the areas where we have seen very good adoption, other than BFSI. BFSI traditionally has been a digitally more mature sector across the world. That's across the world. But the other sectors where we have had enormous success are auto, airlines, healthcare, edtech, both physical and virtual education. So there are several other areas, retail. So there are several other areas where we have actually seen very good success.
Is there any part of the Salesforce product suite which finds more traction in India compared to the rest of the world?
Compared to the rest of the world, I wouldn't be able to say. But in India, I think, as I told you, there are these areas that have done very, very well. Our dealer management system, the field service, all of these are doing pretty good, pretty well. And basically, of course, we are a CRM company, so the CRM piece always does well.
Always.
But more than that, I think now the entire excitement is on the autonomous agent bit. As you know, we are in the agentic era. So we had the predictive AI era, which was followed by the generative AI era, and now the generative AI era has gone into the autonomous agentic era. And in the autonomous agentic era, if you look at any of the magic quadrants, whether they be Gartner, Forrester, IDC, any of them, Salesforce with its data cloud, that is its data solution, and the agentic, for both of these, we are at #1 in both of these areas. I think one of the biggest selling products that we right now have is called the data cloud. So the data cloud, you are aware of this, that in this age of AI, everything at the end of the day is dependent on how good your data strategy is. It is at the end of the day garbage in, garbage out, so you have to be careful about how you set up the strategy. And the data cloud solution that we have, you should think of it like a mesh that sits on top of all of your islands of data and creates a metadata layer in a very organized way so that your agents can become that much more capable or that much more intelligent. Now, if you want to think of it, think of the company like a flowing river. And there are trapped islands of data in that company, okay? Whether it be your data warehouse or your data lake, or it be your grievance management system, or it be your origination system, or it be your dealer management system, there are trapped bits of data, structured and unstructured, in the entire system. And what our data cloud solution does is, with the help of a middleware, it connects all of this into a metadata. Now, again, if you want to understand in layman's language what is metadata, say you are building a building, okay? And you have cement, and you have steel, and you have sand, and you have all the building materials. Metadata is basically the architectural framework which tells you which goes where. So that gives you the exact understanding of what is to be used for what purpose. So basically this layer, it draws the intelligence in a zero-copy manner, so there is no ingress-egress of data from various places. It draws a zero-copy intelligence from all these islands of data, and then it automates it, it harmonizes it, and makes it available to the agents so that the agents can become really, really more capable. The responses that come from it are far more intelligent, they are far more empathetic also. So to that extent, this works very well for us. And we have found that going forward, this is one area where we are having a lot of success, because a lot of major companies feel the lack of this data strategy or this data layer, and we are seeing very good adoption there.
So we have seen, fabulous presentations from demonstrations from Salesforce on agentic AI, and when Agentforce is truly implemented at scale, it can be completely wow customer experience. When do we see at-scale deployment of agents in Indian context?
So in the Indian context, this is something I think that is still a little way off. But to tell you the truth, we have always been customer zero on our own software. So if you look at help.salesforce.com, that is currently on the agentic layer. We have completed more than 500,000, 500,000 conversations on that. When we started on that on the agentic layer about 4 months back, the first call resolution was only 44%. Today we are at 84% plus. Okay, so actually speaking, if you look at it, this is first call resolution, okay? So only 2% of the calls currently are getting passed on to human agents. So we are proving the case by doing it ourselves in order to show customers that this is something that can be done. In the Indian context, there are a lot of POCs running in various places. We have 2 companies that already have agents in production, but there will be many, many more.
So, sometimes we find in the work we do and interactions with the Indian industry that there's a lot of focus on sales in India. And so people rush to embrace new technologies that can improve sales. But there's not the same level of energy sometimes on customer-centric technologies, CRM and other things to just fundamentally, do you also find that it is easier to?
Yeah, I would say that, and I think we were discussing this outside. In many of the service industries, I think people have become a little complacent. Complacent about the fact that, they are really not providing the kind of service that the customers are looking for. And that is what is providing opportunities for many of these startups to come in and help solve those problems. Because the customers' real pain points are not getting addressed. If you look at the banks, like you were talking, if you look at the banks themselves, they are really not concentrating on ensuring that they are bringing the right kind of service to the customer. Even today, if you have to get get anything done, it's still a little bit of a painful experience. It shouldn't be. Banking should become extremely pleasurable now. In fact, people should be actually coming and talking to you rather than otherwise. And in fact, we have experienced this ourselves. Like I told you, this help.salesforce.com, when we initially started it, we had thought that with the quick resolution of calls, the number of calls will come down. Actually, it has gone up because people are enjoying the kind of interactions and the swiftness with which we are able to, actually address those issues, so that they're not only coming with issues. This, by the way, is a post-implementation helpline. They are now coming with not only post-implementation problems, they are coming with problems which are, or rather inquiries, which are rather sales inquiries. So basically, the idea is if you are able to really engage with your customers in the right way, it is bound to increase your sales, it is bound to increase their connectedness with you, which I think is a missed opportunity, which a lot of our people, they believe they should do it, but the kind of work that is required to be done in order to reach that level, I still don't think that has happened, to a very great extent.
So let's talk about the banking industry, which you have been intimately involved in, and it is a big customer for you as well. My research shows that over last 10 years, maybe definitely last 5 years, Indian banking industry is the only in the world where productivity has gone down continuously. Despite the fact that we in India are so proud of digital and everything else, only Indian banking industry's productivity has gone down. How do you read that? And this is defined as asset per employee. That means Indian banking industry is just hiring large number of low-end staff, like in large numbers. And we don't see the same translation into productivity, deployment of technology. We also found that Indian banking industry is the lowest in terms of actual technology deployment.
So that's really such a missed opportunity, I would say, because there is really no reason, given the toolbox available today, in order to improve productivity, in order to ensure that people are more efficient, there is really no reason why they cannot, do much, much better. And India, in fact, is probably the only country today where the banking pie is still growing. It's not reached saturation. There is so much more that we can do, especially given the fact that financial inclusion has just about started a few years back. Okay, there is a huge distance for us still to traverse. There are a lot of unmet demands. Today, for instance, if you look at the youngsters that are getting into the new jobs, the first time they get their salary, the very first expense is buying the top-end mobile, and the next is the very top-end motorcycle. And after that, they don't know what to do with the money. So, basically there is so much of opportunity over there, but we haven't empowered our people enough in order to really capture those opportunities. Like you very well say, that it's all low-end jobs that people are getting into, and they are not scaling. They need help scaling. In fact, I think one of the biggest use cases that can be there for all of these companies is the internal agent. So that when a new person comes in, and attrition, by the way, in the front offices is very big. It's very large. The turnover is very large. Now, as a result, what is happening is people without the right kind of training, without the right kind of knowledge, without the right kind of experience, are trying to address customer requirements, and they can't because they just don't know how to do it. And internal agents would be one way of really empowering them to have conversations that are meaningful, have conversations that can actually resolve people's problems. And that is why I think, for the BFSI sector, they really need to understand that if they continue to do this, there will be other kinds of organizations that will come up that will disintermediate them. When there is a demand and there is nobody to meet that demand, nature abhors a vacuum. So that vacuum is going to be filled up by somebody or the other. And I think the sooner our BFSI sector understand that and take that up as a great opportunity, the better it is going to be for them.
This is an investor conference, so I think now you're hitting a very raw nerve. Indian BFSI sector is ripe for disruption, right? What type of players will you bet on for the future, which could be formed today, which in 10 years' time will disrupt this industry, given that existing players may not be moving fast enough?
So, there could be many types. At this point of time, it remains a heavily regulated space. Okay. So we also have to see what the regulators will allow and what they will not allow. The regulators themselves need to think in a very disruptive kind of way in order to get ahead. You were just suggesting outside that it could be something in the form of an NBFC and an investment banking and a fintech coming together. And that's actually a great way of imagining the future. Because if you have the investment banking side, you address a very felt need in Indian industry. You have the fintech side that provides you with that customer centricity and that ability to innovate, to be agile, to be nimble, to address the customer needs. And then you have the NBFC that really, has the capability of going out and giving those products, delivering those products. You bring together the essential elements that are required in order to be a bank. The one thing that we are probably still missing over here is the liability taking.
Yeah.
But that is something I think that can always evolve. That will evolve in many ways. But the fact remains that this is an area that is ripe for a big evolution. Whether it comes from existing players or it comes from new entities is to be seen. But I do believe, like you say, that you cannot have an industry where productivity is constantly going down. You cannot have that kind of an industry. As I said, there is a sense of complacency. And maybe the complacency has come because when I was leading the banking sector, at that point of time, there were a lot of huge challenges in front of the banking sector in the form of NPAs. Now, having overcome or surmounted those challenges, there is a feeling that, yeah, if we could do that, we can do everything else, and we are good and great at this point of time. You are making good margins, you are making good profits, why break something that ain't broken? But what is happening is, it may not be broken in itself, but the evolution that is happening around, if you are not aware of that, then, obviously you're laying yourself open to risk.
So we used to always find that the non-bank finance sector used to be always a little bit bolder in terms of trying to do creative stuff. Do you continue to see in your interactions that there is a part of the finance sector which is more energized, or like everybody is the same?
NBFCs are far more agile. There is no doubt about that.
Mm-hmm.
Some of the largest NBFCs are wall-to-wall with us, and I know their NPA numbers as well as the time it takes for them to give the loans. And it is way, way better than the regular banking sector. And frankly speaking, there is no reason why the regular banking sector cannot replicate that. Absolutely no reason, because their standards of underwriting are no less. They are equally good in the underwriting piece. Otherwise, their NPAs would not be so low. Okay, they are very good at collections, extremely agile about bringing in new products. They can scale up and scale down very, very quickly because they're all on the cloud. Now, these are the agility and its nimbleness, these are the hallmarks of how you get ahead. And both of these today in the banking sector, I don't think is
I'm sure
still
the
there.
bankers will say, look, this is all because of the regulator. So now that you're not a regulated entity...
something, I have spoken to the regulators as well.
Yeah.
And the Indian regulators are very clear about one thing. We have never stopped anybody from doing anything. We tell them what not to do, but we don't tell them what to do. Okay, so people are open to doing things as long as you are open to, you should not, if you are told to sit down, you should not lie down. That's what happens over here almost. The regulators say something, it is interpreted as something else altogether. Like, nobody is telling you to do that. As long as you are sure that you are, you are listening to the letter and spirit of the regulations, you should be fine.
So do you have any advice for regulations in India in the financial sector, how they should be changed now that you look at it from a distance?
So, I think I already spoke about that. They need more awareness about what is going on around them. They need to evolve faster. See, what happens is there is always a fear that, how can I change the innards of the banking? Now that I'm also, looking at the ASEAN sector, I'm seeing, for instance, over there are banks that are undertaking the dismantling and entire changing of their core banking system.
Yeah.
Something which our banks over here cannot even think of.
Yeah.
And they are trying to do it in a very, very distributed manner. So that, if one piece goes down, they can not only find another piece where it can be immediately transferred, it will ensure that your banking is always available. It is never down. It is very steady, stable. The availability is, 99.99% is the availability. They'll aim at 100% availability almost. So they are thinking about things in a very different way, and they are going about it in a very methodical way as yet also. Plus, they don't lack the courage to try out these things. That is something I think, people not only need the vision, but they also need the courage to go ahead and try it out.
And I think they also need to have a level of competition that forces people to do things.
True.
I think
True.
for some reason, finance sector has less competition than we need for a country of our size and challenges. Excellent. I'm sure many people have a lot of questions for you, so I would just request people who have questions for Mr. Bhattacharya to please, yes.
Hi, ma'am. Thank you so much. Ma'am, one question. So you spent your entire career in SBI, which is a financial services powerhouse. And then after that, you moved into Salesforce, which is entirely into a different category. So how was this transition at the receiving end for people who were there in Salesforce? How did they perceive you? Was there any resistance? So if you can be more candid, if you can share us with some examples, I think that would be great. Thank you.
So, I joke with my colleagues that their average age was below 30 till I joined, and it's become 31 after I've joined. So that's the generation I deal with. I think there were two types of reaction. One reaction was, what on earth will she do over here? That reaction was there. And the other one, said that our parents were very happy. They said, okay, then you are in a good company if she's coming in. So that was also the other reaction. But having said that, right in the beginning, I told my team very, very clearly that what I will bring to the table is the customer's point of view. You've always dealt with yourselves from your side of the table. I have been on the other side of the table for 40 long years. I know what are their pain points. I know what they expect. I know what y'all deliver and where y'all fall short. And what I will try to give to you is their point of view so that I can play the devil's advocate whenever you're trying to do something to make you see how they are going to see you. And I think when they got that piece, they felt that this had value. Okay. And nobody was expecting me to do coding and stuff like that, right? I was there in order to build an institution, and I have built institutions earlier. So to that extent, they were not, wondering whether there's any contribution or not. But yes, bringing the customer's point of view to the table, I think, proved important for them because they also started to think differently. Their thinking also became more 360 degrees rather than 180 degrees, right? So I think it was a good kind of an interaction. And frankly, I have always been very interested in digital. Saurav will tell you digital was something that means that's the hook that they used to use in order to get us to employ them. Show me something really fancy and I'd get hooked to it. So I've always been interested in it. And obviously when you're interested in something and you get a ringside seat into one such company, it can be very interesting. So I think it's been mutually productive.
Yeah, I'd just like to tell one anecdote on this. So how many people would imagine that HR in State Bank of India can be done digitally? Mrs. Bhattacharya implemented a digital platform for performance management system of all the people. Well, many companies might have that. Then she told me, every employee should be able to see their performance every week compared to all other employees of the same type and see how they're doing. That was one of the first of its kind digital system for HR in a public sector setting for 300,000 employees. So that was the power of the business. So there was a question. There was a question there. Okay.
Ma'am, we've heard a lot about AI, especially in the context of services industry from the Indian IT services firms. We don't have really a lot of data points, authentic views from product companies, especially MNC product companies. As to the Indian context, how really AI will disrupt the industry, both from a service provider or a product company, as well as from a client implementation and how the end businesses are run. Especially one large area where this will disrupt is BFSI, most probably. So maybe if you can give a 360-degree view, how really AI is going to disrupt both sides of the game.
So, whether it be manufacturing or whether it be services, today, AI basically is capable of bringing to you insights on a very proactive basis, which earlier could only be reactive. If you understand what actually happened is from 2014, when we went into the AI ML area, we were working with structured data. And also we were creating pools where only people who had the ability to write computer queries could query those databases and get you the insights, okay? Now come the era of generative AI, AI started understanding natural language. So it started doing natural language processing. The moment it started doing that, the number of data points that it could then start working on absolutely exploded, because unstructured data then became readable by the AI engine, right? Now, with that, what happened, AI was then empowered to then generate things which earlier may not have been seen at all or been there at all, right? And from there, what happened is it is now come to a stage where it can not only generate responses, it can also trigger actions. As long as your workflows are automated, it can actually trigger actions. So we have the LLM, we also have what we call the LAM, which is the large action model. So agents now can be autonomous in doing many things which we were doing. Now, if you look at any services company, our surveys indicate that 41% of the time of what we do is actually repetitive jobs. Now, this is something an autonomous agent can easily do. Services is the easiest use case, but it is not only services. It is even the case, for instance, with developers. So AI can actually generate the codes for you, which then you go over just in order to see how you can make it even more better, or whether it is actually doing what you have asked it to do. Okay? So there are various areas where AI can be used. Similarly, in the area of manufacturing, it is basically IoT. For instance, I just bought a Mahindra EV, okay? And I'm simply tired of the number of messages it's sending me, because my daughter is refusing to wear the seat belt at the back. She's sitting as a passenger, and it keeps telling me passenger is riding without a seat belt. So I keep sending her the message and telling her put on the seat belt, and she says, what? It's going at 10 kilometers per hour. Why should I need a seat belt? So, the problem is that, yes, now we'll have to see whether, how do you moderate this? But if you're looking at manufacturing also is definitely something where AI can give you the right kind of input so that you can do proactive. Say whether it be proactive maintenance of your manufacturing line, whether it be proactive inputs as to what you should manufacture more and what you should manufacture less. So the kind of inputs that can come in, depending upon the intelligence that you manage to give it, if you have the knowledge of what your distributors are actually selling, what is piling up, what is having more traction, it can enable you to change your production lines and the back end accordingly. So whether it be services, whether it be manufacturing, either way, AI is something that can give you a lot of proactive inputs to enable you to tweak your business so as to make it more efficient, more productive, and thereby, your margins can actually go up. And I don't think any of us are going to escape this. Whether it is in the social sector, whether it is in the industrial sector, everywhere it is going to have an impact. Whether it be in your healthcare areas, whether it be in your areas of education, whether it be in the areas of citizens' services that the government gives, AI actually can give us the promise of delivering much more than we have been able to deliver till now. Because just as, when we were trying to do financial inclusion, we tried for 14 long years before PMJDY happened. Now, why did PMJDY happen the way it happened? Of course, there was a government push, it was run like a project, leave that aside. But the two major things was technology. It was basically the ubiquitous use of mobile and the Aadhaar. Those were the two things that enabled us to do complete financial inclusion, something we never could have done in the brick and mortar way. So also in this case, both your manufacturing and your services, they will get impacted. This is something that's on the cards. The quicker we understand and lean into it, the better it is for us.
There was another question.
Yeah, please.
Good evening, ma'am. I've used both SFDC and an Indian CRM solution. I just had one question, that what would it take for an Indian company or Indian CRM company to build a product like SFDC?
Well, I don't think it's something that is, impossible at all, excepting that there are two areas where SFDC spends most of its money. And one is the area of security and the other is the area of innovation. These are the areas that really take up our money. And today, the pace of innovation is maddening. It is maddening because we have to keep learning and relearning and understanding all the new terms that are coming up. Terms that I had never even heard a year back, I'm beginning to start getting familiar with it. So to that extent, you have to understand if it's an Indian company or any other company of any other origin, the main thing is innovation. And I think, over here, there was some talk about R&D. And Sharad was talking about how you should allocate to the high-risk capital to the R&D. R&D is something that's really basic to ensuring that you build really solid, sustainable companies. If you're not innovating, if you're not changing, he's talking about the financial sector and why they are appearing to be less productive. It's because they're not innovating enough. Innovation is basically the thing that, breathes life into any company. So whether it is Indian or whether it is foreign, it doesn't matter. As long as you're spending enough and really ensuring that you're innovating on a daily basis, you should be a top-notch company.
Thank you.
Yeah, ma'am has a hard stop after this, so we will stop after this, but the last question.
Thank you, ma'am, for being here. I'll ask you a question in your capacity as in your role as a Salesforce leader as opposed to your distinguished career in banking. Our GCCs today, the global capability centers that the world is coming and setting up in India, have been a huge success. I think $65 billion by last count, expected to grow to $100 billion by the end of this decade. Are there any pain points that GCCs are facing that might even inhibit this growth to be even faster, wherein we can aspire for GCCs to be a $200 or $250 billion industry in the near future? And because I just think the opportunity is unbelievable, right? Not only in the low end of services, but moving towards the middle office and even the front office.
So basically, let me tell you this. The GCCs need to upskill as of day before yesterday, okay? The low-end piece, believe me, will get disrupted with AI. It will just get disrupted with AI. You should not be relying on the low-end piece. Good thing in India is that we have gone towards the higher end. For instance, when I had come into Salesforce here, most of the teams over here were small teams of junior developers. Today, many of the global leaders sit out of India. Okay, so we have managed to push it up. So even in support, for instance, I don't have a single support guy who's not an engineer. So only the toughest of the problems get passed on to us. Okay, so every GCC, if they are to remain relevant, they will have to upskill up to the architect level. They need to really and truly understand that the best and the topmost skills are the most in demand. And if we are able to skill our people accordingly, then the future of our GCCs are assured. But if you continue to remain at the lower level, then I'm sorry to say, that's a very, iffy kind of a future that I see.
Well, thank you very much, ma'am. It was, we can go on for an hour more, given the wealth of knowledge that you have, but even the half an hour that we spent has been extremely useful to me, and I'm sure to the audience. So thank you very much again, and thank you for the audience.
Thank you.
Thank you, ma'am, for being a part of this panel and sharing your journey with us. There is a lot for us to learn. Please accept a token of our appreciation. May we have Mr. Madhu Kela to do the honors, please. Thank you, ladies and gentlemen. This was the Singularity Summit 2025, and we thank you for being a part of this event. We hope you are inspired and fired up with all the amazing insights, and we thank you deeply once again. Do join us for cocktails. Good night. May we request Team Singularity to please stay back in this hall for some photographs.
I want to take 1 minute. First of all, thank all of you all to be here and support us in this. So much effort put in by the team to bring about relevant discussions throughout these 2 days. I know these were 2 long days, but thank you all for all your patience and support. But above all, I would like to thank Madhu sir, Yash, I don't know where is Yash, and Suyash for the amount of time and effort put in this. It's a 6-month exercise that we've done just to make these discussions very relevant for you. Especially thanks to Madhu sir, because a lot of effort and time, despite his busy schedule, he's put in to get these discussions and these conversations out of the eminent people that we had on stage. And above all, I want to thank the ladies behind them. So Madhuri ma'am, Niharika, I don't know where are they, but have helped us a lot. Sanjay Kothari ji, the pillar behind all of us, and the whole Singularity team and MK Ventures team. Thank you all for all your support. Thank you.
I would just like to add for the whole audience which really participated, all our friends, investors, companies who came all the way and participated. Without them, obviously the event would not have been what it is. So really thank a lot from bottom of our heart. It really meant a lot. You guys spent 2 days of your valuable time. It means a lot, and I hope we get better at this every year. Thank you so much. Yeah.
Team, please come on the stage for a group photograph. Hi. Team Singularity, can I request you all to please come back on stage for one more photograph? Singularity team, please come on stage. We're all waiting for you. Mithun is on stage and he doesn't want to wait for you all.